Opportunities. Convenience, security, and empowerment. A higher efficiency for business. For Hong Kongers like Ying, this is what the hypothetical digital Hong Kong dollar, or EHKD, may represent. A central bank digital currency, leading to accelerated and simplified traditional financial processes to speed up money flows with less resistance and cost, benefiting buyers, sellers, and the economy at large. Processes that take weeks of paperwork between third parties will be completed almost instantly in a few clicks. As part of the EHKD pilot program, Fubon Bank, Ripple, and partners have spent months developing a faster way to unlock home equity and turn it into credit through a home equity line of credit loan, or HELOC loan, dramatically shortening the application process. It starts in the Fubon Bank online portal. Ying sees his currently mortgaged properties, picks the one he wants additional credit on. Fubon Bank already pre-qualified the amount of equity Ying can realize based off the property value and criteria such as income, credit history, prepayment history, and other information. Ying reviews the offer and terms, then confirms. The bank's interest in the mortgaged property, the lien, is tokenized safely and transparently on the blockchain ledger. This token, once deposited in the lending protocol vault, activates Ying's ability to borrow. He just decides how much credit he wants, and in his vault dashboard, details around asset and liability update in real time, from LTV, interest, repayment terms, asset liability, total loan amount. It's all there. Quick transparency into personal finances, making it easy to budget costs if a bigger loan is needed. The credit instantly appears as hypothetical EHKD minted securely by Fubon Bank using the Ripple CBDC platform, each being worth 1 Hong Kong dollar and can be used immediately. A part of the money is used as a deposit for Ying's son's down payment on a new home. The rest of the loan can be used to finance his daughter's last year of university. Ying turned his home equity into credit to be used however he needs, with a few clicks from the comfort of his own home, without hoops to jump through, without annoying paperwork, without needing to travel, visit, and consult multiple third parties. And as the hypothetical EHKD ecosystem grows, so will benefits from the trend, from increased productivity to time saved and lower cost per transaction, to eventually seamless exchange of hypothetical EHKD as a CBDC all over the world. That's the exciting potential of hypothetical EHKD. Unlocking your home equity is only the beginning. Being able to send and spend money how you want, where you want, without burden. That's the real power. And that's the vision of the future Fubon Bank, Ripple, and partners are exploring under the HKMA's EHKD pilot program.
Everyone has their own way to innovate and make breakthroughs. Taking a break doesn't mean slacking off. Work smart, and it's amazing how much you can easily get done. Finding overseas markets difficult to grasp? With the right partner, anything is possible. Technology changes fast. We make sure the latest information is always at your fingertips. At BOCHK, we understand that innovation comes from expanding what's possible. Through agile use of technology, we connect you closer to your ambitions. Understanding brings us closer. Bank of China, Hong Kong.
I can fix this. Let's start with this pencil. I'm gonna get his help with this chocolate.
Little Glenn always saw past problems, uncovering hidden value to see if they'd become better things altogether. At Standard Chartered, we're the same. When it comes to wealth, we see beyond the obvious. Benefit from our global research capability, unparalleled wealth analysis, and expertise by INSEAD-trained relationship managers. Come talk to us today. Standard Chartered Priority Banking.
Connections. For over 200 years, they've been Citi's business. From connecting oceans and continents by helping finance the Panama Canal, to today, where we're still making our most important connections, people. We connect security and innovation, all to help drive growth. Our global scale connects businesses to over 160 markets, and today's ideas with tomorrow's opportunities. For the love of moving businesses forward, for the love of progress. Citi.
Often asked how DBS became the world's best bank. It's simple. We believe banking has a higher purpose, so we set out to innovate and serve you better by being a different kind of bank. Learning to think and act more like a startup, more like a friend, more like a business partner, and less like a bank.
opportunities, convenience, security and empowerment, a higher efficiency for business. For Hong Kongers like Ying, this is what the hypothetical digital Hong Kong dollar, or EHKD, may represent. A central bank digital currency, leading to accelerated and simplified traditional financial processes to speed up money flows with less resistance and cost, benefiting buyers, sellers, and the economy at large. Processes that take weeks of paperwork between third parties will be completed almost instantly in a few clicks. As part of the EHKD pilot program, Fubon Bank, Ripple, and partners have spent months developing a faster way to unlock home equity and turn it into credit through a home equity line of credit loan, or HELOC loan, dramatically shortening the application process. It starts in the Fubon Bank online portal. Ying sees his currently mortgaged properties, picks the one he wants additional credit on. Fubon Bank already pre-qualified the amount of equity Ying can realize based off the property value and criteria such as income, credit history, prepayment history, and other information. Ying reviews the offer and terms, then confirms. The bank's interest in the mortgaged property, the lien, is tokenized safely and transparently on the blockchain ledger. This token, once deposited in the lending protocol vault, activates Ying's ability to borrow. He just decides how much credit he wants, and in his vault dashboard, details around asset and liability update in real time, from LTV, interest, repayment terms, asset liability, total loan amount. It's all there. Quick transparency into personal finances, making it easy to budget costs if a bigger loan is needed. The credit instantly appears as hypothetical EHKD, minted securely by Fubon Bank using the Ripple CBDC platform, each being worth $1 Hong Kong dollar and can be used immediately. A part of the money is used as a deposit for Ying's son's down payment on a new home. The rest of the loan can be used to finance his daughter's last year of university. Ying turned his home equity into credit to be used however he needs, with a few clicks from the comfort of his own home, without hoops to jump through, without annoying paperwork, without needing to travel, visit, and consult multiple third parties. And as the hypothetical EHKD ecosystem grows, so will benefits from the trend, from increased productivity to time saved and lower cost per transaction, to eventually seamless exchange of hypothetical EHKD as a CBDC all over the world. That's the exciting potential of hypothetical EHKD. Unlocking your home equity is only the beginning. Being able to send and spend money how you want, where you want, without burden. That's the real power. And that's the vision of the future Fubon Bank, Ripple, and partners are exploring under the HKMA's EHKD pilot program.
Everyone has their own way to innovate and make breakthroughs. Taking a break doesn't mean slacking off. Work smart, and it's amazing how much you can easily get done. Finding overseas markets difficult to grasp? With the right partner, anything is possible. Technology changes fast. We make sure the latest information is always at your fingertips. At BOCHK, we understand that innovation comes from expanding what's possible. Through agile use of technology, we connect you closer to your ambitions. Understanding brings us closer. Bank of China, Hong Kong.
I can fix this. Let's start with this pencil. I'm gonna get his help with this chocolate.
Little Glenn always saw past problems, uncovering hidden value to see if they'd become better things altogether. At Standard Chartered, we're the same. When it comes to wealth, we see beyond the obvious. Benefit from our global research capability, unparalleled wealth analysis, and expertise by INSEAD-trained relationship managers. Come talk to us today. Standard Chartered Priority Banking.
We're not writers, but we help you shape your financial story.
We're not an airline, but our network connects global businesses across nearly 160 markets.
We're not a startup, but our innovation labs use new technologies to help keep your information secure. We're not architects, but we help build stronger communities.
We're not just any bank. We are Citi.
Why should we trust these guys? Why do we continue to pay them to use what's ours? Why should we stick to the broken ways when we now control how to buy, sell, and trade what's ours? Even that. Why do we just accept that companies will do whatever they want with our data? Why don't we change everything? The system doesn't need an update. It needs a rewrite.
We're often asked how DBS became the world's best bank. It's simple. We believe banking has a higher purpose, so we set out to innovate and serve you better by being a different kind of bank. Learning to think and act more like a startup, more like a friend, more like a business partner, and less like a bank.
opportunities, convenience, security and empowerment, a higher efficiency for business.
Good morning, ladies and gentlemen. How's everyone doing today? See that you got coffee in hand? That's a smart choice. How's everyone else doing? I know. It's so early. It's so early. That's what makes it super cool that everyone is with us. So big round of applause to everybody who made it in this morning. Let's put our hands together, everyone. Thank you for coming in so early. Love it. Everyone, welcome to Hong Kong FinTech Week 2023, which is Asia's leading financial and technology conference where we will learn from iconic leaders and like-minded people who are shaping the rules for new opportunities. Just to introduce myself, my name is MC Melody Kwan, and I will be with you pretty much for most of today here at the GBA stage. So welcome everybody to day 2 of the conference. And I know some of you are probably watching at home, so hi to you all. Everyone in the audience, feel free to wave to everybody at home as well. I know you're watching. Now, Hong Kong is at the forefront of redefining the fintech landscape that is propelled by a paradigm shift that is influenced by the transition into Web3. Now, that is the separation of financial and technological systems and the rise of Web3 native users. Not only that, the city's dedication to stable growth, to progressive regulation in the virtual asset space and strategic location is a gateway to what you can say the high growth markets, I guess, such as the Middle East, and that makes it an essential center for fintech innovation. Not only that, now Hong Kong's thriving innovation and technology sector, particularly in the AI and in the R&D field, ensures that it will continue to play an extremely critical role in shaping the future of fintech, and we're all here for that. Now, today, make sure that you do push the boundaries and gain the benefits of the wonderful content as well as the speakers that we have in store for you. And just a little bit about what's in the whole conference. Now, we have over 30,000 attendees, and we have 700 exhibitors, over 500 speakers, and more than 250 media and many more with us today. So before I start, let's take a look at the visual that is right behind me. Just want to say a quick thank you to all of our organizers or sponsors. So first, event organizer, Financial Services and the Treasury Bureau, Invest Hong Kong, FinTech Hong Kong, thank you so much. Co-organizers, Hong Kong Monetary Authority, Securities and Futures Commission, and Insurance Authority. Also, very important, our title sponsor, HSBC, and our official appointed event organizer, W Hub. Thank you so much. And some housekeeping before we get started for today. For those of you who's probably have more than one phone, and make sure that on at least one of them have an app called the Hong Kong FinTech Week 23. So make sure you download that, very important, because there's a networking function that is on that app, and that is for the audience here as well as the ones that's watching at home or in the office. So make sure you join that. And we'll be using Swap Card for question taking. So you can find the link to Slido on our event app, which is on the program page. So do check that out. And also do tag us with the event hashtag HKFTW23. That's for all of your photos. All right, so now let's get started. Looks like everyone's ready. They're like, I need to get on stage, get off. All right, so for this segment, it's called Business Opportunities in GBA. Everyone that's outside, just feel free, join us, and yeah, get seated as we're gonna get started. So, what's in business opportunities in GBA? So we're going to explore the immense potential within the Greater Bay Area, where innovation and economic growth will converge. And we have a panel of experts that will shed light on the diverse opportunities for businesses in this dynamic region, spanning technology, finance, and beyond. Now discover how GBA's strategic location, the market size, and regulatory developments are shaping a whole new era in cross-border collaboration. So therefore, for startups to establishing firms, this session will offer pretty much a roadmap to leverage GBA's unique advantages for success. So everyone get ready to uncover the possibilities, to forge partnerships, and to also position your business for growth in the heart of Asia's economic powerhouse. All right, without further ado, looks like everyone's ready. So everyone, let's put our hands together and welcome with me our moderator, Mahi Suidi, Head of Transformation of DBS Bank. Welcome. Thank you so much for being with us.
Good morning.
Ms. Joyce Lang, Assistant General Manager, Personal Digital Banking Product Department, Bank of China, Hong Kong. Thank you. Vincent Ho, Managing Director, Hong Kong and Macau, Greater China Region, China Mobile International Limited. Last but not least, we have Mr. Daniel Chen, EVP, Head of GBA HSBC. Thank you so much, and I'll hand the stage over to you all. Thank you.
Thank you, Melody. You are a great MC. I love the energy here. Thank you, everyone, for coming this morning. It's a pleasure to be the first panel discussion here focusing on GBA. But I'm not the main attraction today. We have 3 experts here speaking about the opportunities in GBA. But first things first, could you please, the 3 of you, introduce each other for everyone to know you a bit more before we start this discussion?
Okay, sure. Hello, everybody. My name is Joyce, and I come from the Bank of China, Hong Kong Limited. And I oversee the retail funds business and also the structured products business in the Bank of China, Hong Kong for our retail clients. Thank you.
Thank you.
Okay. Hello, everybody. I'm Vincent Ho. Is a Managing Director of Hong Kong and Macau, China Greater Regions. I oversee all the business in Hong Kong and Macau for the international business.
Hi, good morning, everyone. My name is Daniel. I work in HSBC, is being the head of GBA. I'm based in Guangzhou, but basically GBA is Hong Kong, all the other 9 cities as well. So my role is actually to help HSBC Group to define and pursue strategy that would unleash the potential of GBA for our clients and for ourselves. I think we do have a very high hope of the development and commit ourselves to realize this dream.
Thank you very much. Before we start this discussion, maybe a quick game where we can ask a kind of warm up, you know. I would like to ask each of you, and we can start with you, Joyce, one word or one phrase about how we can describe Greater Bay Area and what it evokes for you.
If I'm to use one word to describe the GBA, I would use the word dynamic. Because as everyone may know, the GBA actually is a very vibrant economic region with significant growth potentials, driven by its technological innovation and also its special strategic positioning.
Thank you. For you, Vincent?
For me, GBA to me is like for first phrase is 10 times. What that means? Because the 10 times of our populations. Because just in Hong Kong and Macau around 10,000, but right now it's around 80,000 people over there. I mean 80 million people. So I would say that there's a tremendous growth for the GBA compared with other Bay Area. I mean in the population or also the land size.
I would use the word innovation and breakthrough to describe GBA because we have I think the best of all the great components in all the other Bay Area. We have digital innovation, we have financial innovation, and there's a lot of policy innovation because that's thanks to the one country, 2 system, which enable us to do things very differently. So with all these breakthrough, we would unleash that growth opportunity.
Thank you very much. I have a second question for this warm-up. Maybe we can start with you, Daniel.
Yeah.
If you consider GBA has a wall together and not separate locations, what do you think is the most significant synergies between Hong Kong with cash rich compared to, and still rated on cash every day, if you take the taxi, for example, against the, China with a digital wallet and the people use it every day?
Well, looking back a bit of a history, actually Hong Kong started quite a bit of innovation. Now, at the time when we have Octopus, China is still very much cash-based. So I think like many other society, a lot of this development is not linear. Yeah, it's multiple times, 10 times it's leapfrog. So now China is pretty much a cashless society. So I think if you see these could be challenges, this could be friction between the two, especially when we see this as more than a corridor, but more an integrated region. But I can also see on the flip, the other side is the opportunity for us to bring the best of both worlds, because you have the digitization in China, but also in the international world. We need that. So I think we will see a lot more of these kind of integration, and in terms of like cross-border payments, removing some of the friction. I think that's required both the technology as well as the policy enabling, which I described earlier.
Thank you. Vincent?
Yeah, for me, because China Mobile is the biggest mobile operator in mainland China, also in the world. For my experience, that in mainland China, you don't need to bring any wallets or any paper cash, because the digitalization is very great in mainland China. But right now, I would say that GBA is one of the testing platforms for us to integrate the Western countries and also the mainland China technology together. And also Hong Kong in GBA is one of the most important platform that we can, like Daniel said, that we have a very comprehensive policy to govern all the cross-border transaction. And also we can export our digital wallet from mainland China experience outside to the world. That means can benefit over the world.
Thank you very much. And for you, Joyce?
I guess to add on, because I guess digital wallets it's really bring a lot of numerous benefits to us, which is convenience in terms of security, and also it can serve 7 times 24 hours, which is very convenient. And mainland China in that part is really having a very successful model of it. And I guess to mirror the success in mainland China's digital wallets policy, we can enhance, I guess, 2 major areas can put more address on. First is the customer education, and the other is the merchant support. For customer education, I think here in Hong Kong, although Octopus or the FPS is already quite popular, but I think we can still enhance our education, yes, on using the digital wallets. And on the other hand, we need to give support to the SMEs here in Hong Kong, yes, be it subsidies to them or some technical assistance for them, so that one side that is the customers and the other side is the merchant, so that to improve the usage of the digital wallets here in Hong Kong.
Oh, this opened the question for you after this, Joyce. You mentioned about the e-wallet right now, but can you pinpoint another game changer digital banking trend that we have here in GBA?
Yes, of course. I guess the rapid adoption of digital banking now, or the FinTech, is not new to every one of us now. But if we look back, say 5 years ago, before the pandemic, I think we cannot imagine the pace can be so fast now in using the digital banking. So I guess the pandemic actually is acting as a catalyst, especially for us as banks, to promptly and consistently to provide the remote services to our customers, no matter it's about to serve our Hong Kong customers or even though the cross-boundary customers. So the remote services in banks, it's very important. And also we observe the trend that actually the customers are also changing their behavior. They use more financial platforms that is on the online, internet, mobile apps, and there has increasing transactions over the online transactional platform. And also in terms of the technology, I guess, from artificial intelligence to machine learning and even to blockchains, actually banks and also the GBA is adopting very quickly on this kind of new technologies. And for us in banks, digitalization is really an essential tool for us to serve our customers. Especially because the close connection between Hong Kong and the GBA. So we are putting more effort and more services on providing the digital services, especially the online platform and also the account opening services to them. One last point is that the wealth management scheme, Connect scheme, which was introduced 2 years ago, is really a very good demonstration of what we are providing as digital services. Okay, before the WMC scheme, maybe it's not so easy to provide the investment services to our clients under the GBA region, but now under the scheme, so the customers in the GBA region can easily use such as mobile apps or the internet banking, so they can within the WMC scheme, they can invest in the eligible investment products there. So I guess that's what the change, especially in the past 5 years.
Thank you very much. This is very clear. I can see the different funds here and understand everything. Vincent, you are not a banker. We are all bankers except you here. So I would like to ask you a question about China Mobile International. How are you pioneering the technology solution unique to GBA?
Because China Mobile has a great tech 5G networks, and I would say that we are developing the 6G in the lab already, and already have some success. In the maybe 5 years, we will deploy the 6G topology. I would say that China Mobile has already built a new cloud service. Because why? Because in mainland China or in Hong Kong, we have used a lot of OTT applications like Tencent and Ali. But there's a discrete obstacle between these 3 layers for banking, OTT application, and also the networks. So China Mobile has established a China Mobile Cloud to integrate the layer between the banking and also the OTT apps together with the connectivity to the cloud. So that this will smooth the connectivity over the different layers to speed up all the application and all the transaction. I would say that this is good for us to develop more on the application with the cloud service. And also, China Mobile International and China Mobile Hong Kong, in Hong Kong, just form a Web3 association. That means we have to develop the Web3 together with the mobile networks in the GBA to smooth all the Web3 technologies deployment.
I'm looking forward to play on my phone on any metaverse because right now it's not yet ready, but with all what you're doing, we can do it later, right?
Yeah, sure.
Perfect. Daniel, I have a kind of a double question for you. First one would be, what are the key business opportunity you can see in GBA for the enterprise? And the second one is like, how do you, with HSBC, leverage on this unique position to support your customer and capturing such of opportunities?
Yeah. Thanks for the question. When we say GBA enterprises, it comprises of enterprises in mainland looking to compete in the international market, as well as I think many years ago, a lot of Hong Kong enterprises also were already in China, building the manufacturing and then trading. I think the key of GBA is the dynamic and also the different positioning of different cities in the city cluster. So definitely we have very strong technology in Shenzhen. We have very strong advanced manufacturing in like some of the GBA cities, like Dongguan. And also we have the International Financial Center in Hong Kong. So I think blending the 3 together actually will help these clients get the financing onshore and offshore to reach out to markets internationally. And that's also the strength of HSBC because we are present in 62 countries, 90% of the trade corridor. And also I think we have a strong franchise in Hong Kong to be able to support them. I think in particular, in terms of like financing, being able to help them finance onshore and offshore will be important. On top of a seamless customer journey, like opening account simultaneously on both sides, be able to swap between your credit line between onshore and offshore to capture the relevant opportunities. And since we're in FinTech Week, I will also want to share with you that how we actually are working with some of the FinTech partners using platform data to support the e-commerce client. Just that you know that actually just Guangdong's, the volume of e-commerce transactions is more than $2 trillion last year. And there's more than 100,000 SME operating in this environment. So by working with the FinTech, working with the ecosystem, which is a unique thing in GBA, we're able to bring about those changes. Obviously, the other thing is we always talk about a lot of the very exciting startup. How do they get financing? Now, in the past, they get it mainly from a lot of the venture capital, from the funds. But now I think there is a lot more of the opportunities that we can do. We launched GBA Tech and Healthcare Fund in the past, now become a new economy fund for all the new economies companies. And we also have a venture debt option from Hong Kong to support them. And I think last evening, actually, we also, publicly announced that our innovation banking, which enable us to work closely with the ecosystem from the funds to these companies that are fast growing. So I think we are working together with the entire ecosystem to enable them to compete not only in domestic front, but actually in the international world. I think this is quite unique, and I think this will be important for the entire GBA to flourish.
So you mentioned about data, you mentioned about innovation, you mentioned about startups, and you touched on some pain points here. But how do you see we can, leveraging on technology and innovations, unleash the potential of GBA here?
Yeah, I think we've been innovating and also digitizing a lot of customer journey, both in mainland China and in Hong Kong. I think for what we've done in Hong Kong, please go to HSBC booth, you would have a lot of those showcases. But I think what is quite unique is the cross-border solution that require a lot of innovation, which require both tech and policy. I think I just take data, for example, because of the national security consideration, the data law, it's not easy to just move data from one to the other, despite we're in one country. So we're very pleased that we actually have the government signing the MOU and now working through some of the rules to enable a safe passage of certain data, such that we can have an even smoother customer experience for all the industry and not just banking. So we also play our part because we are the first international bank participating in a sandbox sponsored by HMA and also PBOC. And this is about a technology that would do some data masking through a skill called MPC, allowing data to be passed through. So this will be some of the pioneer and innovation that we need to participate together with the support of the governments and the regulators.
Thank you very much. I will go back to you, Vincent. You mentioned about the technologies that you are implementing right now in GBA. If I asked you to paint us, a picture, what will be because 5G is around the corner right now. What will look the life of someone in 5 years' time now?
I will say that based on the 5G technologies, I would say that in 5 years, the 6G will be coming soon, and all the living or work will be integrated into the one mobile handset or mobile device. Because right now, a lot of people still using the laptop or PC, something like that. But I would say that 5 years, all guys will just let a mobile device to do everything, no matter working or living. And also, in mainland China's experience, I would say that living, even the buying of food, order the car, and also rental the flat is using the mobile applications. So I would say that in the 5 years in GBA, I would imagine all is borderless, all is coming over the sky. You don't have any connection. You can see from the bottom.
Thank you. Joyce, when we prepare this meeting with this panel discussion, we discussed about how feedbacks can spark innovation, especially in BOC. Do you have any memorable instance of when the feedback sparks that innovation in your team and your company?
Yes, I would like to share that although we are all talking about digitalization and innovation and in this time, we find it quite interesting is that some customers still crave for some personal touch. Say an example as the wealth management scheme that I've just mentioned. Although the customers may be keen on using the apps, but sometimes they may not be very familiar in the investment products that is under the scheme, or sometimes they don't know how to operate the trading platform. So in the sense, they may want some personal touch or personal assistance for them. So as banks, what we are now looking at is, although we on one hand we are pushing the digitalizations, but on the other hand we also want to adopt a hybrid approach, where is that when the customers need some personal assistance, we are there to help. So in the Bank of China, I'm quoting back the WMC examples, we set up teams of virtual managers, to support the customers in the GBA region. Of course, they can use their mobile apps or mobile apps to do the banking services that they need. Whenever they need personal assistance, they want to have some human touch, we are there to assist and help. So I guess the hybrid approach may be for us banks a future development or the focus that we're putting on.
Thank you very much. We're almost at the end of this panel discussion. We have just a few minutes left, so I would like to ask you, the three of you, last questions. If you have to do a bold forecast, what will be the evolution over the next decade in GBA?
For me, maybe I can mention that the policy address actually is just published a week ago. And the chief executive has mentioned the importance of IT, the innovation and technology, and also the close relationship between GBA and Hong Kong. So with these two major elements, I would make a bold forecast that the GBA region could be an innovation and technology hub for the future. Yes, just like maybe compared to Silicon Valley, we hope that can be. But I guess the innovation and also the technological hub may be a bold forecast for the GBA region. And also with the immigration, with the merge of some giants in the GBA region, then there may be a hub for the future.
Thank you very much. Vincent?
Yeah, I would say compared with other Bay Area over the world, our GBA is one of specific because in Shenzhen that we have a large OTT headquarters there like Tencent and Huawei, and also in Hong Kong we have a great banking system and banking industry. So I would say compared to other Bay Area, they just have maybe banking in New York Bay or technology in San Francisco Bay, or also in Tokyo Bay. So in GBA is one of the integrated, innovative, and I would say that there's a future technology that can be born in GBA rather than other Bay Area.
Very good. Thank you very much. And you, Daniel?
Yeah, as I said, I think the strength of GBA is the diversity of all the cities' individual strength, which would enable us, I'm sure that in a couple of years we will surpass all the other Bay Area. And I think most importantly that my bold prediction or wish would be for individuals, we actually can move around GBA seamlessly. With a lot of digital enablement. We don't have right now the problem, some of the hassle of a two system, as we can pass through data and also share a lot of these product and services quite easily. And also, because of the liberation of that, will enable some of our business to thrive, especially all these very exciting startups, innovation, to become at the world stage that will bring up the entire GDP well above all the other Bay Area.
Perfect. Thank you very much for the three of you. Daniel, Vincent, and Joyce, I really appreciate their sharings. If anyone here would like to ask a question to the speakers, I encourage you to just wait for them after this panel discussion to come and ask your questions. Thank you for coming this morning. It was a great pleasure to be here, and please give them a round of applause.
Thank you, Mehdi, for being our moderator. Could everyone please stand and take one step forward so everyone can take a beautiful picture for you? Thank you. And everyone that's just joining right now, please feel free to take a seat as we will begin the second segment shortly. Wow, a lot of fans. Wow, look at all that. Thank you so much once again. Insightful sharing, and I'm sure we've learned a lot in this process. Thank you once again, everyone. Please be seated. Thank you. Thank you very much. Thank you. All right, ladies and gentlemen, everyone, for everyone that's just coming in, got plenty of seats, so everyone please do get comfortable as we will begin just shortly. Now, let me just introduce a little bit about our next segment that is coming up. It is about the cross-border fintechs, funding and investments. This is our segment that's going to be for 25 minutes. Now, in this interconnected world of fintech, well, there's cross-border collaboration, and that is really the key to global success. So everyone, please do join our panel to explore how fintech ventures are navigating international waters, and therefore we will learn about the funding opportunities. We will learn about the investment strategies and regulatory considerations that drive growth and innovation in this dynamic sector. Discover how global financial centers and including Hong Kong, will facilitate cross-border partnerships to accelerate the growth of innovative fintech companies. Now, don't miss on the discussion if you're passionate about the future of international fintech collaboration and investment opportunities. Now, for everyone that's coming in, as I mentioned earlier, if you have yet to download the app, it is the Hong Kong FinTech Week 2-3. So remember to download that on your phone. The reason being is because there's a few functions that we need to make use of while we're at it. So one is the networking function. It is for the audience that's here with us and also all the audiences that's watching at home, that's also watching in the comfort of your office. So do use that for some networking and to make new connections as well. And not only that, I do understand that during the conferences today, we have some questions. And for the questions that you have, we will be using Slido. So therefore, it's swap card for question taking, and you can find the link on Slido from the event app program page. And don't forget, for those of you who's into taking pictures, the event hashtag is HKFTW23. So that's very important. With that out of the way, everyone, as I said, this segment's name is Cross-Border FinTech's Funding and Investment. And it looks like we have everybody that's ready. So everyone, let's put our hands together and welcome our moderator, Ms. Rebecca Fennon, founder of Silicon Dragon Ventures. Thank you so much for being with us today. Let's put our hands together. Mr. Jack Lee, Country Head of Credit Risk Ebury, please join us. Mr. Daniel So, Senior Business Development Manager, WorldPay from FIS. Last but not least, we have James Chu, CTO of Platon. Thank you so much for being with us. All right, and over to you, Rebecca. Thank you.
Okay. Hello, everyone. How are you?
Hello.
So I'm here from New York and San Francisco. My first time back to Hong Kong since COVID, although I used to come here maybe 4 times a year. So this is like a homecoming for me. And today we're going to be talking about fintech innovations and what's happening in Asia and around the world with cross-border payments. So I went to the cocktail hour last night, and so I did some homework last night. I asked them, what are the big issues? And they said, well, privacy is one of the big issues. Cybersecurity is another one of the big issues. Fraud, new technologies like blockchain and AI and machine learning. So we have a lot to delve into today. And because our panel is cross-border, we're not going to just be talking about Hong Kong. We'll be talking about country risk as well, other countries and regulations, changing regulations. So, all right. Well, let me start with Jack here, who's going to tell us about some of the new research that they found about young people and how they're adapting to, things like the digital wallet. They really, they really are ahead of the curve.
Yeah. So thank you, Rebecca.
Yes, Daniel.
Recently we have conducted about the research among the 10,000 investors. And from the research, you will find out that...
Can everybody hear him okay?
Is okay? Yeah.
Yeah, all right.
Yeah. So we find out that among that, the investor, the research showed about 49% of them would prefer to invest through the stock purchase platform to do the investment. And this is something, top 3 attribute that we find out is, number 1 is about the security that they are using and the trust and reputation of the platform. Secondly is about the pricing, of course, that how does the platform charging them and the service fee. And lastly is about the whole simplicity of using the platform. So these are the 3 main areas that we find out from the research. Yeah.
So you said that basically the younger generation, they went directly to digital.
In terms of the payment part, I can divide it into 3 areas. The first one is the funding source. for the funding part, that bank transfer will be the main mainstream that they are using. However, we found out that card payment and also digital wallet are the growing popular, especially on the younger generation.
Right. So the younger generation is setting all the new trends in how we
Yes,
go about,
yes,
right?
yeah, correct.
And anyone who's older than the age of what, 40? They're out of it?
40 below.
If you're 40 or below, you already grew up in the digital era of FinTech.
Yeah, because for the cross-border investment, making the bank transfer a little bit hassle. So using a card payment and digital wallet will be resolving this hassle.
Right, okay. Right, and so do you think that Asia is more advanced in the use of digital wallet, for instance?
Yeah, correct. Because I think maybe in APAC region, Apple Pay, Google Pay, or Alipay, WeChat Pay, this is a very common one, especially like in Hong Kong.
Right.
The government also encouraging the citizen to use the WeChat Pay, Alipay on this.
And the U.S. market is probably the most behind. So I'm really curious from U.S. perspective, we are really behind on a lot of this digital currency and digital acceptance. And so why do you think that is? Why are we so behind? Why is the U.S. so behind Asia? Anyone on the panel?
Yeah, well, so from my personal point of view, U.S. is a dominant economy globally. Yeah. So they already has a lot of like a system running fine. Contribute to the economy, contribute to everything. But the new innovation on the crypto, it brings some new style of connecting with each other, the new evolution model, that will bring some regulation risk. And those traditional banking system or insurance system, they are very sensitive on the regulation risk, which will crush their existing model.
Right.
I think that's an interesting conflict.
Yeah, so it's all about who has the legacy ownership. If they were number one to begin with, then they have a lot to lose.
Yeah, it's a conservative, right? Conservative is fine. They try to keep the existing economy running as it is. It's providing value as euro, so our daily life need to run as euro. So that's kind of reasonable. But for challenging is, as we said, the new generation, starting with the digital, and the digital give them more freedom, and people can focus on different things. They can collaborate each other. So with freedom, with collaboration, higher level of collaboration, the innovation will be more powerful. That's why blockchain and the privacy and all these things come out, and even AI, right? So we need to move on this train. And Asia is quite aggressive, I think, on this.
Right. So yeah, AI and machine learning are big topics, and they're making their way into financial services and also credit risk.
Yes.
Which is what you're involved with. And can you talk a little bit about what are the challenges for digitizing country risk, what you're involved with? Can you talk about the challenges that you're facing?
Yeah, because my company is mainly engaged in foreign exchange and trade finance solution for those SME customers. So actually, it's quite common that for this type of services, we need to gather the information on our SME customer. And this actually is quite difficult to gather those updated, reliable information from them. So it's a trend that we can gather those alternative data from them. For example, their point of sales revenue model, or even their electricity bills, so that we can understand more about their actual and also in operation and the revenue, or even for their relationship with their supplier and buyers. Once we gather this information, we also need to apply, for example, the machine learning and also this type of analysis on this information for us to make the credit scoring. Yeah.
To evaluate the risk.
Yes. So that's challenging. So you can see that there's a lot of information we need to collect in a lot of information, we need to make the analysis. So it's challenging, but there's also the opportunity for investor and also other startup.
Is it hard for your firm to keep up with all the new technologies that
No, because we are a
emerging?
FinTech company, so we are flexible and ready to accept this type of movement in the
Okay.
market.
So you're ahead of the curve then?
Yes, yes.
Okay.
But there's
Not-
also the difference between the FinTech and the banks.
Oh yeah, so the banks are probably behind, right?
Yes, I can say
Very
that because they're too big to move ahead, yes. And then there are much more consideration in the regulation, and because for the bank, they need to fulfill many regulator requirements.
Okay. So are you using AI and machine learning in your own firm?
We start to use it,
Started using it.
yes.
Okay. How's the experience been so far?
It's quite interesting, yeah. And
Yeah?
you can see the power of it in making for us to assess the risk.
Sure. So you think it's better that way than before?
I can say this helped a lot.
Okay. So let's talk about some of the big picture issues on privacy, data privacy, big picture issue. And of course, with technology and blockchain and AI and ML, there's a lot of data sloshing around, right? We're all submerged in data. And so on the privacy issue, can technology help
I can
to
share some of the
yeah.
use case example because I do have some money servicing merchant. They are also an online one. So what they are doing is when they're onboarding a new customer, that the new customer have to, uploading their personal documents such as the passport copy and also the very confidential information. So what I heard from them would be confidentiality will be one of the main concern from the customer. So I think, James, maybe you can share more about how you can add value on this part.
Yeah, I'm very happy here to hear the real user, what you are facing, the challenges. And as an IT solution provider, we try to help the business to do it easier with a lower cost. And also, for whatever business, the transaction happens, how to make it risk lower and how to get the finality. I got a service and you got the money. So get this finally done is the key. And how to manage the risk is always the most critical part. So what IT can provide is, one, how to get the real-time, real data, right? And there is a lot of like a regulation framework providing like a GDBC, whatever, provide the data, individual data privacy laws, etc. Then what we need is how to get the real sensitive data in a privacy preserved way, real time, and then feed it into an AI, also privacy preserved AI model. So you have a great AI model, but it's not everyone can see it, everyone can copy it, right? So feed into that model and generate a real-time, good valued result. Then people will willing to pay it. So by pay for this result, any business can lower their risk, can get their business done fast, and get the money moving more smoothly. We call it high-powered money economically, which means even you don't need to allocate a big bunch of money, you can still generate a great revenue, can get more benefits. So that's why we are focusing on blockchain for smart contract automatically settlement and clearing. With a few seconds, you got your money, finalize it, you can reuse it, right? And with the privacy preserving, you got all the preserved data shared in a secured way, like a secure multi-computation, etc., and feed into the model you provided. You are already used it for long and it generates a good value. I think that's a real contribution from the IT provider point of view for the business, and we're very happy to hear the feedback.
Yeah, so why isn't everyone using blockchain then? If you're a financial provider, why isn't everyone not using it?
Not using it is kind of, from my personal point of view, there is a headwind from the regulator. So regulator they are not quite familiar with what blockchain is doing. And the existing framework was done on the traditional system. So when you do it in a traditional way, we made up this kind of regulation framework, law like this and that. If we put blockchain there, it doesn't fit. So how to apply it is a really challenge. So what I would suggest is one is to get we user and IT provider working together, get some POC solution in a sandbox and demo it to regulators. So we educate each other, what regulator wants and what we can provide, and what the real benefit from user, from IT, from regulator, even from the real government. They could collect the tax real time, right? You don't need to wait until the year end, you claim the tax and get the money to the government account. So a lot of the benefit could generate, but we need to share more. We need to openly discuss.
So James and also Jack, are you using blockchain at all in your own firm?
Oh, not yet.
Not yet.
Daniel?
You think you will?
Maybe in the future, because from our research finding, especially for the withdrawal part, we find out not only on bank transfer, but the customer may prefer to use crypto payment as a withdrawal. The percentage is about 6.7%. So this is something we can see there's a potential to growth.
Yeah, actually for the blockchain, it's not just for the transactions, but also for the monitoring of the transaction. Yeah, so this also may be also good in the future for us to, let's say, to monitor the supply chain of the goods, the flows of the goods or the services.
Okay. So from the U.S., every day in the news, it's about FTX, right? You all know about FTX, right? You're probably tired of hearing about it. So I'm just curious, will new technology help to prevent these kind of issues, fraud from happening, or new technology has nothing to do with it? James?
I think technology will definitely help on this, because one is we call it IoT, whatever, right? When there is a transaction happen on the account movement, we could ask the server, the machine, to generate a ID stamped or the cipher message on that transaction, which cannot be tampered, right? It's a real-time privacy data which can be verified. And then we put into this AI model with using the, for example, blockchain DID or whatever. A lot of this kind of technology, like smart contract, is the coding by logic. It's a contract, but in code. Nobody can change it. It could real-time monitoring what is happening and calculate the risk real-time, which is not happening right now. For example, I heard when Daniel onboarding a customer, it costs 3 months to 1 year. So how to make it faster using real data on real time. The same thing happened on FTX. If we can access the risk and get the exposure calculated real time without the tampered message, real message, and privacy protected in the existing regulation framework, then we can actually prevent it.
Yeah, so James, you said that in Japan, FTX was not an issue there.
Yeah, I was using FTX in Japan. I was super lucky because Japan regulation put a rule policy there. If you have a client asset like 100 BTC, you have to custodian and 100% equivalent another 100 BTC on a cold wallet, which means if this one got stolen or whatever, right, it's gone, they can still have the 100% backup from their cold wallet to compensate you. The legal procedure cost like 3 months. So I got everything back, so I feel super lucky by that time. So that's why I really thankful the Japan regulators. They put a real good one there after the GMO, whatever incident in the past. So that's a good one.
Definitely. So let's just talk about some of the challenges that you face within your own companies of the use of these new technologies. Does your CEO get it? Does your CEO is kind of the visionary who pushing the company into new technologies, or the opposite?
I think for our senior management that they did see it, but I think we need time and also most importantly the investment to invest it. And secondly, since our company is also a licensed company, we have to follow the regulation. So with that new technology, I think we do need to comply with the law and regulation per jurisdiction. So this is a huge project, I would say.
Yes, the same as our company, yes, because actually our co-founder is the engineering background. So we also see the opportunity and the trends in the future for this type of development. But as James mentioned, Daniel mentioned that we need to be understand the regulator, what they are doing, so what their requirements. So we need to be careful in this.
So the area that you're in is one of the most regulated industries there is.
Yeah, it's a money move, right? So it's the most regulated. And we are trying to work with the regulated license holder player in the region. And then we provide a solution to them. And we work together, get the real use case and get the real feedback. Right. And then we can get this blockchain, privacy preserving, privacy AI, all this technology be proved working, and regulators also agree, okay, it's working. Then we can all kind of contribute to the digital whatever future we will live in. So.
Well, let's talk a little bit about the new innovations that you're seeing in this field. You already mentioned privacy and AI. Privacy AI. Okay, tell us, what is privacy AI?
Okay, so that's quite straightforward. So we are living, or we are embracing a digital life from now on. More and more, all of your activities with your mobile, with what's transaction, all on net, all be digitalized. Then you have a digital life existing there. And now it's got leveraged by the big players, using your digital life and do CM to you, whatever, right? But you get anything, nothing. And we need to live in the digital world in a very, a good way. Then means we need to control our privacy. I want to control my digital life, what to disclose and what to not to disclose. And also when I really want to contribute to a certain community, I really contribute data voluntarily. But in return, for example, if I want to contribute my bio data, my daily life data, and then that will link to a new medicine be generated in the future, I want to get the credit. So I contribute the data. How about I have an NFT and have a 50% down? I can buy this medicine and cure my disease. So I think
it's
that,
like individualized AI.
Yeah. So it's
personalized to the individual.
Yeah, it's
what you're saying.
Yes. So the data is easily to be copied. So if I just voluntarily contribute data and it got public, and it copied 1 million times, then it's worth nothing. Okay. I couldn't get my NFT. I couldn't get the option to enjoy the new medicine, whatever. So that has to be privacy protected. And then in the AI model, it needs to be protect every data provider and distribute the benefit according to your contribution.
Right.
So that's the privacy AI should be.
Right. So Web3 impacted financial area very much.
Yeah.
So what's on the horizon? What's next? What's the next new big innovation? Web 4 something? Is Web 4 on its way? I mean, what's happening? In your what are you reading about? What kind of new innovations do you think would actually help the financial world?
I think maybe I can share more about, because we did conduct a research, and from that we can see simplicity that the customer is looking for.
Okay.
The user journey, is it a very complicated one, or is it easy to use? This is something that the customer is looking for. Second is about the security, something that they're really looking for. Is it secure enough? Because this is something we are submitting the confidential information, and also we are depositing the fund. So this is something that's quite important. Yeah.
So you take these survey results then, and does your company act on them?
Yes, this is something that we would, I would say when we are onboarding a customer, that this is something that we would share with the merchant, that this is something that you have to be, make it important. Yeah.
Okay. So, all right. So, what is the next new innovation in the fintech area? What's the we talked about crypto, digital wallet. What's the next new innovation?
So, in my opinion, for financial industry, it will be the consensus between different parties on the blockchain or AI, whatever. Right? It's a fast consensus between counterparty on settlement, at risk evaluation or whatever. So, after consensus done, then payment transaction finalized.
Yeah,
so make it business easier
among different stakeholders. So even with bank and fintech, they're not competitors. They can cooperate together.
I see. So the speed and the collaboration, it makes it all easier or simpler.
Yeah, simpler.
Yes.
No.
Yes. Okay. Well, thank you very much for listening to us, and I hope that you have some takeaways from our discussion. Take care.
Yeah,
thank you very much. And thank you, Rebecca, for being our moderator as well. Thank you very much, everyone. Thank you. Thank you. Wonderful. Now, moving on to our next segment, it is about exploring the future of digital payments, connecting Web 2 to Web 3 for global business. Now, it looks like our speakers are ready, so everyone, let's put our hands together and welcome with me our moderator, Mr. Sean Lee, Senior Advisor from Crypto Council for Innovation. Thank you. Welcome. Sophie Zong, the Chief Strategy Officer from Virtue. Thank you. Sir Louis Liu, Co-founder and CEO of FOMOPay. Last but not least, with Jialiang Liu, Founder and CEO of Kun International. Thank you so much for being with us. Everyone, please get comfortable. All right, and over to you, Sean.
Thank you very much. Is the mic on? Mic's on, yeah?
Hello.
Okay, excellent. So really glad to see everyone here today. We're going to talk about payments and the interaction between hardware wallets in regards to facilitating a lot of the Web3 transactions that we're all hearing a lot about at Hong Kong FinTech Week. I am very fortunate to have many distinguished panelists with me today. And I'm going to ask each one of them to do a quick intro about themselves and the company that they represent, and then we're going to dive right into the questions that we have prepared. Sophie, maybe we'll start with you.
Thank you, Sean. So my name is Sophie Zhong. I'm the Chief Strategy Officer of Virtue. So Virtue is a luxurious phone brand with 25-year history. And recently, just on November the 1st, we just released our most recent and groundbreaking product, Meta Virtue 2nd. It's an AI Web3 phone. So for the AI part, we actually embedded a local language model that can work with the large language model to provide our users with the personal AI agent. So with that agent, you can interact with the system without giving individual instruction to apps. And on the Web3 side, we emphasize on privacy. And for that part, we actually have our own unique access using our hardware-enhanced wallet, which probably we'll go over later. And so we'd like to really help to push the industry by developing decentralized physical infrastructure. And as a hardware producer, we're trying to really chip in and contribute in this field. Thank you.
Great, excellent. Louis?
A very good morning, everyone. My name is Louis, founder and CEO of FOMOPay. FOMO is from Singapore. We have been operating for 9 years as a fully licensed financial institution in Singapore. We provide one-stop digital payment and digital banking solution to both Web2 and Web3 companies. And we are also the first digital payment token license, which they also call it crypto license in Singapore history, which was granted on the 1st September 2021. Now we have 7 licenses in Singapore. And just yesterday, FOMO, we announced at the event, we just got the MSO license in Hong Kong. And moving forward, we are very happy to come and set up our new business presence in Hong Kong market. So we are providing the payment and banking solution for the corporate, merchant, and financial institutions. So happy to be here and to exchange ideas to how to bridge between the Web 2 and Web 3. Thanks.
早上好，我叫刘家良，我是坤国际的创始人跟 CEO。坤国际呢是一个新成立的专注企业级用户的这个 Web 3的支付公司。昨天我们刚跟HashKey 呢签署了战略合作协议，然后呢我们做了全球首发的我们的产品的介绍。谢谢。
Great, thank you very much. And just a quick intro about myself. My name is Sean Lee. I'm a senior advisor at the Crypto Council for Innovation, which is a crypto regulatory policy group. And we work with global regulators around the world on conversations around DeFi, around CeFi, around stablecoins, and various different aspects about it. So we will have some policy discussions later on with my panelists. So the very first questions that I have with my panelists is, payments has been talked about for a long time in the crypto world, right? But in reality, we really haven't seen the uptake and the mass adoption in terms of using crypto as a form of payment. Maybe I'll start with Louis from FOMOPay. Why do you think that is the case? And do you see any restrictions, current restrictions, and do you see some potential futures that will push it in the right direction?
Right. Actually, I would say payment is one of the first use case that you would find how the crypto come into the real use case. That's why in Singapore, we define the cryptocurrencies as a digital payment token, DPT license, instead of security token. So when Singapore government introduced the DPT license back in September 2021, so we start from the payment use case. So now we are able to provide the crypto as payment solutions by helping the merchant and corporate to accept the cryptocurrencies, including Bitcoin, Ethereum, USDC, USDT, etc. Why is happening? Because now for there are Singapore, Hong Kong, it's all international place. There are people from all over the world who will come here. They will come to the merchant and say, hey, I don't want to use credit card to make payment. I want to use cryptocurrency to buy these items, to pay for the hotel, to pay for the restaurant, or for the B2B cross-border payment. They say, hey, for this shipment, I want to use the cryptocurrency to make the payment, because some countries, they are currency restricted countries like South Africa, right? Like Latin America. So for such kind of use case, we do see the crypto as a payment is growing in terms of the percentage and the market share. But then when the merchant, they are probably from Web 2, right? They are from traditional industry. They don't know how to deal with cryptocurrency. They don't want to be exposed to the fluctuation of the cryptocurrency price. Today it's $10,000, tomorrow $20,000. They don't want to deal with the price fluctuation. Number 2, they don't know how to deal with the custodian, right? They don't know how to do the access control, how to do the audit for the accountants to deal with the cryptocurrency. That's the reason why the adoption of the crypto as payment has been delayed. But now with the licensed player coming into the market to provide the crypto as payment solution, like what FOMO is doing, like Kun is doing. So the merchant, they just need to turn to the licensed payment solution provider for this kind of crypto as payment solution. So if you are selling this, let's say, shipment of the one container, $1 million, the merchant, they don't care what does the beneficiary pay. They just want to receive $1 million at the end of the day. They don't care what you use Bitcoin, that you use the other cryptocurrency to make the payment. They just want to work with the licensed player to help you to provide the FX solution, to help you to do the conversion, custody, and then by end of the day, your bank account are able to receive how much you're supposed to do for this invoice. So that's how the payment company can come into place to solve this solution. Now we do see both Singapore, Hong Kong, there are more and more licensed players, which is very important, licensed players to process this. Because the challenge will not be only coming from the technology side, but also the compliance, regulation, and the bank. Right? How do you prove that this money you are able to legally and compliantly to receive, and then when the bank come and check, hey, is this $1 million? Is this legitimate? Is this legal? How are you able to justify? So that's why now we do see the regulators is paying more attention on this area, giving the license, make sure the transaction monitoring, fraud management, and also the screening on KYT, all this in place. Then we are able to justify. The money is clean, it's for this payment, it's for this B2B cross-border payment, it's for the trade, and it can run 7/24, the cost is lower than the traditional SWIFT. That's the reason why the merchant, when their customers say, I want to pay you in an alternative payment, they're able to accept. No difference from accepting the credit card payment, no difference from accepting the e-wallet payment. So that's what we see the trend is growing.
Great, thank you. Liu Zhong, anything to add on your side?
OK，我来自这个支付行业哈，在我们把这个 Web 2的支付叫做移动支付 ，Web 3的支付呢，我们称为这个数字支付。在 Web 2的世界里，这个支付已经是非常成熟了，已经是一个 mass adoption 啊，在 Web 2的世界里，在 Web 3或者是我们在这个 crypto 的这个世界里呢，现在主要的用户呢，它是 C 端用户，然后呢，它绝大部分的用户呢是这个crypto 的 natives， 它是这个我们叫做他们呢在使用这个 payment 的时候呢，它更多的是关注这个所谓的这个加密货币的每天的涨跌，它真正用于支付呢，其实的这个机会呢，不是特别多。然后呢，企业在使用 Web 3的 payment 的时候，第一，这个 Web 2的企业现在采用 Web 3的 payment 的企业特别少。第二呢，在整个 Web 3的世界里面，无论从开户还是到监管，现在都遇到了很大的一些挑战。但是呢，我们认为在 Web 3的世界，这个支付它是一个巨大的一个机会点，这也是这个我们公司坤专注在 Web 3的 payment， 而且是专注在企业级的 Web 3的这个 payment 上面。我们认为呢，在未来在企业级的这个支付上面呢，会有很大的机会。
So yeah, I guess in summary, so I think from both of you, the potential for using crypto for payment is growing, but it's obviously contingent on regulatory development, but then also very specific use cases, whether they're relating to retail, e-commerce use cases, or potentially enterprise, intercompany exchange as well. So thank you very much for that. Maybe we switch gear a little bit. So we talk about payments, right? Obviously, if you're paying, person A to person B, both sides need to have a wallet, right? Yeah, whether it's in the real world or especially in the crypto world. So Sophie, maybe I'll pass it to you. Virtu has traditionally been a mobile phone manufacturer and service provider, and you're now adding significant amount of Web3 capabilities into your phone. So you're essentially a phone and a wallet built in. Maybe you can share a little bit about the direction in terms of where you're going. That's very strange. And at the same time, how do you see the two coming together?
Sure. So as Louis and Jialiang has mentioned, I think one of the key problems, actually two of the key problems that the payment of the Crypto 3 is not massively adopted is first on the user side and secondly on the commercial side. So they have covered a lot on the commercial side and the user scenarios and where the commercials could adopt and accept the cryptos. But on our side, we focus on how to resolve the problem on the user experiences and how to enhance the security without sacrificing the user experiences. So that's why we actually have a built-in chip in our phone that is located on a separate space, separate hardware space that is called the SE chip, that all of your sensitive data like private key, passwords, and even the transaction algorithm is actually located inside that chip. And that chip is managed by a key box that is used offline without any allows for screenshot. And it's the management that allow very, very limited verification to make sure the highest and utmost security for the user. So in that way, basically, when we are trying to move from the mobile payment to the Web3 payment, the wallet security is at the highest consideration. But we know how many cases has happened on the hot wallet that's been stolen, that's been fraud. And so our hardware security is the one that provides you the cold wallet security, but hot wallet convenience. So that's why we believe that we are really here to push the mass adoption to provide the highest security for our users.
So not only are you providing the highest quality and most luxurious phone, as you guys are known for, you're also adding a lot of capability to enhance that user experience as it relates to digital asset ownership and security. So that's very, very good to know. So combining the two, right? And obviously we're here in Hong Kong, there were a number of announcements that were made yesterday around tokenization of real world assets. And I think in that sense, the assets that has been most talked about from a tokenization perspective is a currency token, right? So in the sense of Hong Kong, I actually had a chance to meet with the Hong Kong Monetary Authority yesterday in regards to the upcoming stablecoin regulation. So I wanted to kind of take it back a little bit to the payment side, and what are your view about the potential for Hong Kong to have a stablecoin as a vehicle for payments? And then also from a user perspective, how would that be tied together? Where do you see the potential in that? Maybe I'll start with you, Louis.
Sure. So for FOMO, we have been doing the payment and banking solution for 9 years. One of the challenges we face is, let's say my merchant, I'm supposed to settle to the merchant on T+1, T+2 working days. No matter how hardworking we are as a financial institution, one, after the working hours, I cannot send the money to them. Number two, over the weekend or public holidays, or even public holidays or US, you cannot send the money for settlement, right? So that's the challenge. So during the public holiday, it can go up to 1 week. The merchant are not able to receive the money, but I already collected on behalf of them. Why? Because the traditional SWIFT has been, running on this for many, many years. So now the beauty of the stablecoin, especially now there are more than 70 central banks are doing the experiment, including Hong Kong, including Singapore, right? Because with the stablecoins, you are able to run 7/24 for this kind of settlement. FOMO, we are the official partners for Circle when they came to Southeast Asia, right? But Circle, what they do is between mainly, they have the USD current, to USDC, which is a USD stablecoin. So when they come to this region, they realize there are so many non-USD currencies. So they need to work with the license player, right? So like FOMO, so we are able to provide non-USD conversion to USDC, this kind of stablecoin. So that's the rules the players like FOMO, like the Kun, this kind of payment company can help, right? Number one, faster settlement. We are able to do the settlement with no need to care about the weekend, no need to care about the public holidays. So the merchant and our corporate client can receive the money promptly and timely. Number two, the cost is much lower. Number three is this region, there are so many different kind of currency, how you are able to do the different kind of currency pair in terms of fiat to the stable coins. So that is, the great potential for the payment companies to get into, but must be licensed and must be compliant. So the fund, everything will be secure. So that's what my view on this topic.
Excellent. I think the licensing part is very, very important, but also the connectivity part is important as well. Maybe very quickly, just in the interest of time, Liu Zhong, maybe you can fill in a little bit, because you facilitate a lot of cross-border transactions between China and a lot of the Belt and Road countries. Maybe you can share a little bit about whether you can see stablecoin playing in that role.
Okay, first, 我同意路易斯说的观点哈，就是因为我们的客户呢都是跨境电商和跨境的游戏，所以说呢，他在这个资金的流动过程中呢，他考虑的是资金的安全和资金的这个汇率的一个稳定，所以说呢， 他们用的绝大部分的这个 crypto 呢都是 stable coin。如果香港能够发行香港的 stable coin， 在今天的这个地缘政治下面，尤其我们的客户呢，很多是来自于中国大陆，他们在香港、在海外呢已经有这个 operation。如果能够使用这个香港发行的 stable coin 的时候呢，它的这个 cross border 的这个交易呢会变得更加的稳定。所以呢，在这个 perspective 这个下面呢，坤呢现在在积极参与了这个香港的 stable coin 的一些沙箱的一个活动。因为呢 ，stable coin 呢，它的使用呢，更多的是需要很多的场景。这个场景下面呢，其中企业的应用场景是 stable coin 的一个最重要的一个应用场景。所以说呢，我们相信呢，如果香港能够发行 stable coin 的话呢，我们的这个企业级的用户呢，会受益良多。
Excellent, thank you. So we have 1 minute left, so maybe I'll ask Sophie. So Virtue has been a brand that's well known for quite some time. Are you looking to potentially explore more markets beyond where you've been, especially in places like Hong Kong and elsewhere?
We have been in Hong Kong all the time, actually. We actually have a store in the Harbour City. So we have been sold globally. But most importantly, as the connection with the payment, we believe that mobile phone will be the user end for the payment. And without any enhancement on the user end, actually the payment cannot really come into mass adoption. So that's why we work on the hardware side. And most importantly, the convenience. And together with the security is something that can push it forward. So that's definitely something we are pushing forward.
Excellent, thank you so much. With that, I'd like to thank all of my panelists and all of you for listening today. All three of them came actually from abroad into Hong Kong. So thank you for and welcome you to Hong Kong, and thank you for bringing your technologies here.
And thank you, Sean, for being our moderator. Thank you very much. Everyone, please be seated. Thank you so much. Okay. Thank you for the wonderful sharing. Thanks. Thank you, thank you. Oh, be careful. Right, and thank you very much, everyone, for attending. For everyone that's just joining us right now, feel free to take a seat. Now, next up, this segment is about global fintech and RegTech convergence, trends, challenges, and opportunities arising from GBA's innovation. Now, the Greater Bay Area holds immense potential, but navigating its diverse markets and regulatory landscapes can be rather complex. And our expert panel will dive into unique challenges that's faced by fintech firms operating in this dynamic region, from compliance hurdles to market fragmentation. Discover practical strategies to overcome these obstacles and to unlock the vast opportunity that GBA has to offer. If you're looking to expand your fintech presence that is in this strategic economic hub, so everyone, make sure you do keep your eyes open, keep your ears peeled for this session. All right, so it looks like everyone is ready. So everyone, please put your hands together and welcome with me first on stage our moderator, Ms. Shirley Liang, Head of Strategic Planning and Digital Transformation, LCS DBS HK Limited. Thank you so much for being with us. Next, Elvin Kwok, co-founder and group CEO of One Degree. Please join us. Edmund Leung, founder of FinoGeeks. Please join us. And Ryan Liu, head of strategic partnership, Dow Short. Thank you. Last but not least, we have Irene Lee, head of FinTech Retail Private Health Management Compliance, Huatai Financial Holdings, Hong Kong. Wonderful. Thank you so much, everyone. I'll hand the stage over.
Thank you. I assume everybody been able to hear me clearly, because obviously I'm the only one who is doing with the handheld mic, because I was being told my outfit is not good for the wireless mic. But thank you for coming, and very glad to see all of you as well as our guests. So today our topic is gonna be FinTech and RegTech in GBA. And obviously we have a very diverse and talent and professional group of panelists here with us today that we're going to have them to discuss with us like how is the FinTech and RegTech adoption that is happening in GBA, how is that going to make an impact to global, and how does that different actually with what we've seen in the other places of the world, and what could be the advices that they will potentially be able to give to all the people who are interested in developing their company in the GBA area. Then maybe I'll start off with the first question, which is about having our guests here to share some specific example of the innovative FinTech and RegTech solutions that has been emerged from GBA and also have been able to see that there is a global impact. And maybe I can start off with Irene, which is the foremost, who is a broad member of our FinTech Association, but at the same time is the head of the wealth management compliance in Huatai. Then maybe she can share with us with her industry, with her financial industry background. And also we can probably have Ryan, which is the youngest gentleman that is sitting next to him, that to talk to us about his experience in terms of the questions that I have. Maybe over to you, Irene, first.
Can you hear me clearly? Is it better? Yeah, I think when talking about successful stories, particular for this topic, because when we design the topic, we talk about how GBA innovation can uplift or rise to a global level. So we have a lot of successful stories shared by the government and also the stakeholders yesterday and today that happens within the GBA, within Hong Kong, within the other 10 cities of the GBA. And in terms of the global brands and also the global adoptions, it seems a little bit of a lack of noises that people are sharing successful stories. But here, I think I can share a little bit of what I have heard, I have seen within our association and also within the industry without quoting names, because I have a lot of names, but I was like cautiously being reminded that I shouldn't be like promoting some of the names. But anyway, if I quote of the examples that you have heard, then probably you will be a very smart person to guess about. So maybe I believe I begin with one poem from Zhongzi, which is 摘的无数引凤凰，就是筑巢引凤的那个 story, which is we are planting a phoenix trees which attract a phoenix. So basically within the GBA, we have a very great soil of policy support and accommodative kind of resources between government officials and also the stakeholders. So we have a lot of different pilots, examples in terms of the solutions. So the hottest one I can see would be the robo-advisory ones, the open banking ones. And in terms of that FinTech and RegTech adoptions, we have a lot of providers and solutions as well. And then when a lot of the different foreign banks, they are tapping into the domestic market, they found there are a lot of choices for them to tap into their third-party adoptions. So then this is about the phoenix trees that planted everywhere. And then the phoenix that flying within the GBA would have a lot of different solutions for them to adopt for their B2B solutions. So this is something that I can see a very successful stories where we have a very good combination of different clusters within the GBA, where we have 80 million population there. We have a lot of talents, we have accommodative regulations, and we have a lot of FinTech startups and also the resources there. So, and they are very well equipped to prepare, like what I mentioned with admin. So they have a lot of resources that they can plug into the global firms and financial institutions to provide a lot of B2B services. So maybe I will just pause here to set up the scene, what the phoenix trees that we have and where the phoenix are, and then I will probably let Ryan to mention about his successful stories within the GBA and how he sees the global brand when they start to explore it.
Sure, thanks Irene for the introduction. I'm very happy to be here to share this panel today and my limited experiences. Speaking of innovative FinTech and TechTech solutions, I gotta say our company Doshare must be one of them. We are the digital financing enabler for banks to have financial services to cross-border e-commerce sellers. Now we have partnered with Amazon, Shopee, eBay officially for sellers financing. Actually, before those existed in Greater Bay Area, especially for Chinese cross-border sellers, it's really hard for them to get any loans or financial resources in mainland China. Because their assets are mostly digital assets, cannot be collateralized for that reason. However, they will find looking for a personal loan, personal guarantee to raise personal funds on their daily working capital use. That's very risky exposure to those sellers to be managed themselves because they are not very specialized in this area. So our solution really help those sellers and banks to fulfill the gap between the fund supply side and fund demand side. By gathering the data from the lending the platform's API, we're customized for the lending services, and we will help them to build a risk control model we call dual account logging to mitigate the dilution risks and to secure the willingness of repay of the sellers. And simultaneously, we will provide a real-time loan monitoring system for the banks to have the post-management purpose of the loans. Based on those technology, we enabled more than 10 financial institutions, including HSBC, China Construction Bank, already lended more than 4 billion Chinese yuan loan to those sellers. And now we're exploring this model in Singapore and Vietnam as well on Amazon's behalf of demand. So we want to replicate our model to the globe and help the sellers to get any financial services wherever, whenever they need working capital. Yeah, that's my sharing over here. Thank you.
Thank you very much, Ryan. I think I echo a lot on the example that you have just mentioned because I also came from bank. So when you mentioned about like post-transaction monitoring, I was like, dang, okay, that's what we've been doing as well.
Definitely.
So maybe we can, we shared a little bit of the very great examples that is happening for FinTech and RegTech in the Greater Bay Area. But when we have examples, it also comes with challenges and opportunities. Then maybe we can have Alvin and Edmund to share in terms of what they have experienced when they try to develop their business in the Greater Bay Area. Maybe Alvin, you first?
Yeah. Thank you, Shirley. Thank you, Irene and FinTech Association of Hong Kong for having 1 degree here. So maybe let me share 2 examples. Okay, one example is on FinTech from Hong Kong to GBA, and another example that is from Hong Kong to global on the RegTech front. Now, on the Hong Kong to GBA front, we have got pet insurance in Hong Kong to become a lot more popular. I think there's some third-party data that showed that we have 88% market share in the market today, but it is really due to, over the years, we have found different ways to get to the product market fit, the pet identification, addressing the fraud issue and different things. Now, GBA is the next really interesting opportunity because it is a very similar mass affluent segment, like Guangzhou, Shenzhen, and different places are very affluent, number one. Number two, the animal protection also becomes something really become a theme when it comes to when people got the standard going up, right? So I think this is something obviously going to be a massive opportunity starting from GBA, and then China got 100 million population in dogs and cats. Okay, and well, we haven't even talked about birds, tortoise that we also doing insurance for. I think that's one part on Hong Kong to GBA in FinTech. Second part, Hong Kong to global. Okay, so I think this year in the Hong Kong FinTech, one of the key topic is about Web3. Okay, now since mid of last year, all the different regulators in the world have been focusing on the protection of the user funds. Okay, after FTS, so how are you going to ensure that the users are going to be protected on that basis? It's kind of like a deposit protection scheme back in the banking days, and this is what it takes to make this proliferate. Now, super interesting for Hong Kong. Hong Kong actually started to think about this since 2019, when it came up with the first position paper on virtual asset service providers that it mandate that you must have cold and hot wallet insurance. That was back in since 2019. And we followed that and we start to do R&D and we launched in 2021. Mid of this year, Hong Kong come up with the second version of this. And then what we see is that globally different regulators have all fallen suit. Okay, in fact, I mean, this week, I think Hong Kong government is doing a great job in bringing a lot of regulators coming, FCA, Financial Conduct Authority of UK, Saudi Central Bank, FARA from Dubai and different places. And this is something that I think, right now we are the first and the only insurer in Asia who is able to protect digital assets. And I think this is definitely a massive global opportunity.
How about you, Edmund? You have any?
Yeah, sure. My company, we've been working closely with banks and regulators. And personally, I feel like in Hong Kong, the regulation could be more experimental and more pioneering, more flexible. But in mainland, it's more like concern on stability and a little bit more conservative and play safe. But on the other hand, I feel like financial institutions in mainland are more, better digitally transformed, if I can say that. And traditional financial institutions in Hong Kong might be just more conservative. And in terms of commanding the technologies and putting more IT budgets into a business, I think the mainland investment banks or commercial banks are more aggressive. So I guess like the two sides can really, learn from each other. And lastly, I think in mainland there is a lot of engineering resources and talent pools. But still in Hong Kong, I think engineering resources are kind of limited and expensive. But on the other hand, like the neighboring Shenzhen, there is lots of engineers. So I suppose they can supply these engineering forces to support Hong Kong, and to do more enabling technologies. And that's the next step is to see how these two sides can really collaborate with each other.
Yes, very true. I guess when it comes to like fintech and regtech development, we always need to strike the balance between the regulatory expectations and talent pool and talent resources is always pose a challenge to particularly, well, not only even to startup, but it's also important to banks as well.
Right.
So I think we've talked about a lot of like examples, opportunities, and challenges that we are facing. But I think the audience would be interested to know if we continue to evolve, then what do you think is going to be the emerging trend and also the technology that our audience here will need to keep an eye on? Maybe I'll flow the question back to Irene and maybe Alvin can add on a little bit on that as well.
Yeah, maybe speaking from an association point of view, and I see that Shenzhen FinTech Association representative is done at the stage. And so we have a lot of collaboration between like Hong Kong FinTech community and also with the GBA community. And we always speak about the trends and the evolving topics that we should proceed with the regulator and the stakeholders. So we embrace a lot of private public partnership programs that you can see in the different clusters cooperation projects in Hengqin, in the Qianhai, and in the Hetao cooperation regime as well. So we always have a lot of close dialogues with the stakeholder there. Oh, what happened in that regime? What is the focus in that technology zone, where the fintech and regtech could situate it, and what are the collaborative projects that Hong Kong and the foreign representative can actually join. And the tips that I heard from them is that there are a lot of big players in there. So when we join a lot of different round tables, all the big names, representative, big firms are all there. But sometimes we doesn't have to be boil the whole ocean, boil the whole big blue oceans. And sometimes the tips that we got is we can try something more bite-sized, smaller pilots, and then become a role model. And then we can actually recycle it within the GBA cities. For example, if we got good projects with Futian, and then we line up with a few resources, financial institutions and the tech firms, and then we make a small pilot. And then we put it into the market. It is called 市场化 and then become a really sound business model, and then we can promote to the other cities, say for example in Zhongshan, in Shaoxing, in Guangzhou, then this will become a very big project that we can roll out to the globally for those financial firms that have global presence and a GBA presence. And we found that this kind of new PPP model works better than those maybe bigger organization, because as DBS or Shelley mentioned, sometimes big, they are looking at a more a prudent or more stringent perspective, so they are more cautious in trying new things, and probably they will more focus on resilience. But sometimes for those small stakeholders, we are more agile, trying to be more aggressive, even failed, even the project is not successful in a short period of time, we can still reopen it or activate it in another later right timing. And we always keep track of all these smaller projects and discussion and reactivate when we think the soil is still healthy again. So that's the meaning of 栽的梧桐引凤来. Like planting a phoenix trees and a phoenix forest that will attract phoenix to come and invest. So I think that would be quite a new, inspireful thought process that we can try on, and we are still trying on, and to continue the discussion. And I see Samsung FinTech Association representative are there, so I will bring all these agendas to them, and then we can link up more discussion within the community. So for all the audience, perhaps if you are interested in joining these different little agile projects, then come to us, come to the association with Shelley as a co-chair of the RegTech committee and ourselves as a board sponsor and a board member. Then we can actually kickstart all this discussion. And very meaningful, maybe I just add on one or two points, that when we invite the speakers today, we have representatives from GBA and also from Hong Kong. And Edmund is actually from Hong Kong, but actually have their own business in GBA. So he is a really real case and successful story to adopting it and on the ground. Yeah.
Thank you, Ari. Well, you're actually very spot on, because be experimental and small to big is also something that DBS very emphasize on. And how about you, Alvin? What do you think is going to be the emerging trends for FinTech and RegTech in GBA area?
I think, well, Ari covered a lot on the market side. Maybe let me talk about on the technology side of things. I think it is very, very clear to me that AI and Web3 are the way to go. I talked about Web3 already. On AI, now at 1 degree, we have at least 4 projects going on that we are having a strategic collaboration together with Microsoft and OpenAI. And that is really throughout the entire journey, starting from the recommendation engine, going to the coding, the customer acquisition, the surfacing, pretty much every single part of the chain. And I think this in the next, in fact, I think the first time we start to develop on the AI stuff was back in 3 years ago. At the time, it was not ready, to be very frank. The quality on the recognition and stuff like this hasn't been up there. But at this point of time, I think the quality, the big data, is clearly getting it to become a massive phenomenon coming up.
That's also very true. So I think we are a little bit overrun, but I think the time is too short, but I hate to summarize. But however, I would still like to ask my final question to Edmund and also Ryan, that would there be any recommendation that you would give to our audience here, given all the ups and downs, or maybe the challenges or the opportunities that you have went through in terms of like establishing your own business model in the GBA area? Or maybe how do you look into the future of the development of the FinTech and RegTech in particularly in GBA versus the global model? What do you think, Edmund?
Well, I wouldn't bother talking about ABC, that's AI, blockchain, or crypto. I would rather like more focus on how traditional financial institutions are going to reinvent themselves by going through digital transformation. And I would be keen on 2 things. The first thing is like any technology that can enable openness. And the second thing is what would be the result as a product of being open. And by this, I would say like I would focus on 2 layers. The first one is open banking and cybersecurity and digital ID with KYC. I would consider this as open infrastructure. Even open banking is infrastructure because the next generation of internet is basically an integrated value network with information network, right? On top of this would be embedded finance. And according to some sources, the current market size of embedded finance is like $50 to $60 billion, but it would enjoy a compound annual growth rate of about 25 to 50%. And by 10 years, by 2032, it would be like $700 billion. So this would be like open infrastructure and with security, and then on top of it, embedded finance would be a key product of the so-called digital financial world.
Thank you, Edmund. How about you, Ryan?
Yeah, I think we run out of time, so I gotta keep it short. I think embedded financing definitely is a good point, and digital onboarding will be another future trend for the banks and financial services to take, especially for the SMEs. Like for SMEs, there are many obstacles they're facing right now: lack of data, high risk, high price interest rate for those SME sellers to get any loans from institutions. However, like we think as the government very supportive to the SME lending, so there are the opportunities for those FinTech and RegTech to get the data from all the platforms, all the resources to input to those financial institutions, help them to do the data underwriting and build up the whole underwriting model. And secondly, for the digital onboarding perspective, like banks like HSBC, etc., they really Asian companies, so they're gonna involve updating their internal technology and system for digitalize the whole customer onboarding process. So that's another point I wanna throw up today. Thanks.
Yes, very true. I think eventually there are always like common themes that we need to look out to, no matter it is like the global model that we are talking about, or it is the GBA model that we are talking about. We look for open API, we look for data security, we look for cyber securities and all this stuff. I think today is a very insightful panel that we're having in terms of the discussions on the FinTech and RegTech development in GBA. We have 1 more minute left, and maybe I would like to steal a little bit of airtime from our discussions today. As Irene has mentioned that we are the RegTech committee of the FinTech Association, and if in case anybody who's interested on knowing more or collaborate more, then you're more than welcome to come to visit our booth, or if you would like to speak to our great guests here and also come to the speaker stage, and then we can share a little bit more about what we have discussed today. All right, thank you very much.
Thank you very much, Shirley, for being our moderator as well. Everyone, I believe someone has a camera up, so if you could just take a step forward, and then we have a photo together before I have everyone return to their seats. Thank you. Thank you very much for the sharing. Wonderful. Thank you so much once again. Everyone, let's put our hands together one more time. Thank you. Okay, moving on to our next segment for today is about the latest developments that is in Asia's B2C insurance market. Now, everyone, while we're getting ready to absorb more knowledge and information from our next segment here, we're just going to rearrange the stage a little bit, and everyone that's coming in, please feel free, take a seat, get comfortable, as we are going to get started right away. Oh, and it looks like our moderator and all of our panelists are ready. Now, everyone, with our warm welcome, let's give a big round of applause to our moderator, Rebecca Lim, founding partner of Auto ML Capital. Please join us. Next up, for our panelists, Daniel Lee, Assistant General Manager, Personal Digital Banking Product, Bank of China, Hong Kong. Thank you. Also, we have Mr. William Lee, co-founder, Yes Digital Limited. Please join us. All right, and Rebecca, it's yours.
Hello, testing. Thank you very much, everyone, for being here. So we're now on the GBA stage. Let's introduce our distinguished speakers today. William Lee, co-founder of Yes, and Daniel Lee, head of insurance, VOC HK. So let's set the scene. Considering the latest development in Asia's B2C insurance market, how does the Greater Bay Area's unique position in the global financial landscape influence these trends? And what are the most significant changes you've observed in the recent years?
Yes. Hello. Okay, I would like to give some overview of the insurance market in the GBA area. First of all, the penetration of the insurance penetration in China is still very low, especially for the GBA area. The penetration is only 5%. When we talk about the insurance penetration in Hong Kong, is about 20%. As the living standard of the GBA people getting higher and higher, I believe that some of the GBA citizens is underinsured. So we have a lot of market potential in this area. And also, according to the industry statistics from Hong Kong Insurance Authority, in the first half of this year, around 31 billion new business premium is coming from the mainland Chinese visitor. When comparing to 2019, the number is only 26 billion, which contribute around 26% of the new business premium. So when you compare the figure, you can see the Hong Kong insurance market is fully recovered after the COVID. And you can see there is a very strong demand from the GBA segment. Yeah.
Thanks, Daniel. I think it's a lot about the GBA term has been quite a puzzle for myself, to be honest. It's been often used as a three-letter word, and it's about 7 cities, 2 zones. That's about it. And I think most people resonate GBA as a sales target. I don't know if any of you only see that, right? But more so, if we look at the trend, there's a lot to look about. These 17 million plus people. What are their lifestyles, right? Insurance is about risk, and it's really much about perceived value. So if we don't really know about what these very diverse, dynamic range of people there, these 70 million people there, what are the range of ages, what are the demographics, what are the habits, we can hardly talk about selling insurance into them. Do we know what their risks are? A lot of people are putting just whatever off shelf and kind of throw it over the fence and say, let's see if it sticks. I think that's more the meaning of GBA, is we really need to recalibrate and reposition what really are the behaviors, who are these 70 million people, and what products and what ways should we serve them. I think this is more the question, and it's in a very early stage. I know we've been talking about GBA for many, many years, and it's time to move on from a policy and an agenda to really serving values and products. I think that's where we are today. Yeah.
Right, thank you very much, William. This is a really, really good point that GBA, these 3 letters are almost abused, and we actually are still navigating into this field of what actually GBA means, what are the differences. So from your perspective in the B2C insurance market, how do you navigate these differences, and what are some of the innovation, technology that could bring these 11 cities together and a lot of different regulatory framework together?
Maybe I'll start first. Yeah. If I may, maybe just get the audience to help out. Can I get a show of hands for those who have smart watches on them? Okay, quite a few. How about those with a mobile smartphone with them? Can I get a show of hands? For those who haven't put up their hand, it's probably playing with their phone, so I presume everyone, right? So when we talk about the B2C, I mean, needless to say, basically, smart devices is more and more around us, right? Aside from phones or watches, modems, screens, your car. So basically, there will be, what we believe is there will be more abundance of data connecting all these devices and connecting to the people, right? So for a very, very generic term, the strategy should be understanding what these data are and how are they actually meaning to us when we talk about insurance and risk. I think that's the first step. I won't say this is a strategy, but a step to look at this in a new way, instead of looking at it purely as a sales forecast, a sales target, and a sales channel. Yeah.
Do you have anything to add, Daniel?
Yes. Yes, I agree that the view from William. I mean, for GBA, first of all, it's a unique area, equal to the previous panel from my colleague Joyce. The area is dynamic, lots of opportunity, because in this area we have a lot of connectivity policy, just like Stock Connect, Bond Connect, Wealth Management Connect. With this connectivity policy, we can have a lot of transaction from our customer. This transaction data can give more insight to us in order to use our data analytics to further understand the customer needs of this customer. So that as a bank or financial institution, we can develop more new and innovative product to serve our customer.
All right, thank you, Daniel and William. So you mentioned a lot of about the impact and the digitalization within the B2C insurance market. So these are the innovations that we see. How are they going to revolutionize the underwriting and customer engagement? And for example, the younger generation probably have a different spending behavior. How does that affect how you penetrate the market and you launch your products?
Very interesting question. You said, if I repeat what you said there's a new generation, and then there is new type of people, and how we're going to address those people. Okay. I think if we ask our next generation, or our employees, our staff, our partners, our kids, how do they spend their time versus how we spend our time and how our previous generations spend our time, it's vastly different. I think we generalize human being quite too much, even in the terms of GBA. I mean, there's a lot of diversified people, as I mentioned earlier, right? So when we look at some of the statistics, over 90% of people, generally speaking, in these area, they spend basically 50 plus amount of time online. No surprise, but a much higher number than I expected. And then the rest is sleeping. So kind of similar to pandas, yeah. But so if you look at that alone, right, I think, again, I think we should step away just from a distribution standpoint and really think about the risk standpoint. This topic is about insurance, right? So we really need to think about how are the value system different. What we value for a luxury car, an apartment, could be important to some of us. The health and wealth, the definition of health and wealth could very much be very different to the emerging generation. And I speak in emerging generation from two standpoints. If you look at the distribution of age, right, it's moving to the right, meaning there is a big group of people that is our current consumer, but 5 years later will become an aging population. And then there will be a bunch of people who aren't our current customers. That's going to be our primary kind of median consumer base. This is something that we have never served, right? Anyone. And so what I know is not the way to do it is to try to use the current products, current risk, and current structure of distribution and serving and underwriting and go about trying to tackle this market, this new demographic. We got to make sure that it's different. So I think that is more a question, but a very meaningful one that I hope the industry can help solve. Yeah.
Yeah, thank you, William. I have 2 points to share for this point because for the young segment, right? Totally agree with William that their behavior, customer behavior, is quite different from us. Yeah. So I won't say that they spend 90% of time just in social media, and 10% time for sleeping. I think that especially for the Hong Kong young people, okay, nowadays they like to go to Shenzhen to enjoy life, to spend their money because the cost is cheaper. So apart from the connectivity policy, I would like to mention that the infrastructure of Hong Kong and also other GBA cities is also well established. So you right now you can only spend 20 minutes. You can going from Hong Kong Yuen Long and back to Shenzhen. So lots of people is going to Shenzhen to have their own life. And then in the last long weekend, we have a record high travel from Hong Kong to Shenzhen. And last week I saw a news that there is an accident in the amusement park in Shenzhen. So can you link this together? That means we need a simple travel insurance, even it's a short trip to the Greater Bay Area. Yes. So this product is quite popular in our mobile banking app. So if you are interested, you can go to our app to see whether it is suitable for your or not. And then the next opportunity I would like to talk about is that because of this young generation, many of them after the COVID become the freelancer or micro-influencer in the social media. They start their own business or promoting other products for other industry. So their income is not stable as us, right? So it gives challenge to the traditional financial institution and banks and insurance company. For example, to the bank, without a regular income, it is quite difficult to approve the loan for this customer. For insurance, when they actually price the product, seems like the surrender risk of this kind of customer is quite high, and the pricing may need to be impact for this customer. So it creates challenges to the traditional financial institution when we serve this customer.
Yeah, so the industry is changing quite a lot with different behaviors, and we're always talking about one common theme, the data. So regardless you're getting from your mobile, from your watches, we're all gathering data as a commodities. So let's move on to talk about data privacy. Is there anything that you can do to help facilitate the usage of these commodity of data, as well as protect the data privacies?
Yes. So I think I would like to share some leading advantage of the bank by using the data to conduct the digital business. When we compare the insurance company and the bank, insurance company get the data from the sales, right? Because for the traditional insurance company, the business mainly coming from the agency and broker channel. And they get the data from the form. So the data is static and only verified by the sales. Okay, so but in the bank, actually for the mobile banking app is a very big ecosystem. So in the mobile banking app, we have stock account, banking account, credit card. So all these transaction data can be used to analyze for the customer behavior, and based on this analysis, we can easily categorize different kind of customers. And we can, as a bank, we can use this data to do more cross-sell, upselling, and find the right product to our right customer.
Wow. I want to make sure I check my data privacy with apps. But speaking of that, to resonate, right? I think it's, maybe I'll separate it in 3 dimensions. Well, the first one would probably be the regulation. I think if we really go through about putting the term GBA into practice, what does it mean, right? Because right now it's just a term of a geographic region. So I think one step would be, how do we help the regulations, all these consortium of regulations across all these jurisdictions, and talk about kind of data flowing. Because when we talk about data, I don't think we can transfer back and forth right now amongst. And what does GBA mean to the rest of the world perspective? Let's not, limit to just Hong Kong and GBA, but a holistic macro view. So I think we need to start understanding what the global data standards and privacy standards are by transferring. And there's a lot of best practice already. I think we can leverage on that. The regulators can leverage on that if they start talking. So I think that's number one, the first dimension. The second dimension is probably on what data do we really need. I don't think anyone knows that. I think I mentioned earlier, right? Data is becoming more and more abundant, but it's noise. So how do we really know how to use the data? I've spoken with dozens of underwriters. Most of them are still using underwriting model from 20 years ago and using the same variables for the same products. So regardless of all the data we have just in this room, How are we using it for risk? How are we using it for pricing? I have questions myself, and we are pursuing that and trying to solve that. So I think that's number two, how to use the data. And then lastly, it's probably then only FinTech, the tech goes after, is then what kind of technology maybe could help. You know, things like blockchain and things like homographic encryptions, those are new type of technology and cryptology that could help by building mutual trust and without exposing too much transparency on privacy data. So I think let's start with probably the top framework and work our way down would be what we are trying to do. Yeah.
Right, thank you very much. So let's wrap this up with one question, zooming back into Hong Kong. So this is Hong Kong FinTech Week. Hong Kong is often seen as a strategic hub within the GBA for wealth management and insurance services. How do you think this is going to help us to grow into GBA, and how is GBA going to benefit from Hong Kong?
Wow, that's a very dangerous question. Well, Hong Kong is very unique. I'm from Hong Kong, and we're building this company from Hong Kong, so we're rooting from Hong Kong, that's for sure. But we got to rethink what our position is. So maybe I'll use an analogy. I think Hong Kong used to be performing, let's say, a sports ourselves, and we perform very well, and we're performing as a performer. But if we put in a context of the world stage and the whole GBA stage, we're now part of a team. So we got to understand we're not performing for the team or in front of the team. We're going to have to figure out how we're going to play as a team, to win matches around, right, and across. And I don't think that has been the major discussion point about what role do we want to play and how do we want to play. But just looking at tech, look at today, I mean, we have one of the most international connected, diversified suite of customer experience that we're offering from Hong Kong. I think that is very unique. We also have a lot of difference in terms of diversity and culture, right? I think how do we leverage that into a relatively less mature kind of exposure from our peers' neighbors? How do we adopt that and converge that into kind of a new strategy for tackling new problems? I think that would be what I think about. There's a very little context of what those could be today. Yeah. Regulations is definitely one thing we're strong at. But how can we leverage that can we be a European Union alike and form such consortium? I think that will be interesting to figure out. Yeah.
Right, that's a very good point. Just wrap it up. Daniel, do you have anything to add?
Yes, when we talk about connectivity, and William say is about the team, right? So I would say GBA is a teamwork. Yes, I would like to quote example. Not only the infrastructure, not only the financial policy connectivity, but also we have some kind of connectivity policy, just like the northbound travel for the private car. Then, we just launched in July. In that policy, the Hong Kong private car can travel to GBA area by using the Hong Kong and GI bridge. So based on this policy, the Hong Kong insurance company need to partner with the mainland China insurer to develop a motor insurance product to cover the travel accident. So this product is unique, innovative, and for example, William can use his open API structure to market this kind of policy.
Right.
So for the opportunity in the GBA area, I think Hong Kong need to teamwork with other GBA cities in order to capture it.
Great.
Thank
so
you.
we are in a very good position, and I've learned a lot from both of you. Thank you very much.
Thank you very much. And thank you, Rebecca, for being our moderator. Everyone, thank you very much once again. Thank you for the sharing. Thank you. All right, ladies and gentlemen, moving on to our next segment is cross-border investment under the new normal. In this session, we'll navigate the evolving landscape of cross-border investments in a post-pandemic world, exploring the strategies, the opportunities, and the challenges that come with the new normal in global investing. And today, our expert panelists will provide insights in terms of how geopolitical shifts, the regulatory changes, and technological innovations are shaping cross-border investment strategies. So therefore, if you are keen to understand the intricacies of international investment, that is, in today's dynamic environment, well, we will have an essential guide for staying ahead in this evolving world of cross-border finance. So everyone, please welcome, by putting your hands together, our moderator, Ms. Zhenzhen Wu, Senior Financial Journalist, Deputy Director, Cross-Border Reporting Center from China Fin News. Thank you so much for being with us today. We have Catherine Young, Investment Director, Fidelity International. Thank you so much. Next is Zhuwei Zhang, President and Chief Economist, Pinpoint Asset Management Limited. Thank you. Over to you all.
Okay. Thank you for being here, and we are going to switch gear a bit. We are going to talk about investment. And first, please allow me to introduce my two wonderful panelists. I have Catherine Yang, who is the Investment Director of Fidelity International. And for those who are not fully into the global asset management world, Fidelity International handles Fidelity's non-US business. And Fidelity is one of the big names in the global asset management world. And Catherine has been with Fidelity for 17 years, and she's rocking it in Fidelity. So we have Zhiwei Zhang from Pinpoint Asset Management. And Pinpoint is the Pan-Asia hedge fund with its root in Shanghai. And it is notably one of the pioneers among Chinese asset managers who expanded its business to outside of China in India, Singapore, in Japan. So I know we are between you and your lunch, so we'll keep it short. Catherine, let me start with you. So the title of this segment is Cross-Border Investment Under the New Normal. With investor sentiment over Chinese market being so low, do you think this is a new normal we need to adapt ourselves to?
Well, I hope not. The new normal, I think it's about resetting expectations. So even when you look at policy response from China, it's very different to what we're used to, let's say, in 2008. So it's very incremental and very targeted, which in fact is quite meaningful when you look at it all up. But we're just used to V-shaped recoveries and lots of policy stimulus. So I think that bit's very important because China doesn't need to grow at 9-10% anymore. Maybe India will, but China doesn't need to given where it is in the cycle. So I think we should just be expecting a different type of growth coming from China, whether it's economic growth or indeed market returns. But you're absolutely right. Investor sentiment has been very, very weak. It remains weak, especially with foreign investors. But I think that so much negative news has been priced into the market now, and that if we've seen a trough in the data in the third quarter, then incrementally you're going to see more and more flows coming back into the market.
Okay, resetting expectations. I guess my parents were very good at that when I was a kid, resetting expectation on me on a daily basis. Okay, so Zhiwei, you are the economist, and we already have the Q3 economic data of China. And do you think we have seen the light at the end of the tunnel?
Yeah, I think so. So just from a macro perspective, right? So I think Catherine is right. So if you compare China with the rest of the world, there's a very big difference is the fiscal policy, right? So in the rest of the world, take U.S. as one example, right? So every U.S. citizen got a pretty big, check directly from the U.S. government, and then you get the spending go up very strongly, huge excessive saving, and the inflation went up. China is the opposite, right? China in the past couple of years, if you look at the fiscal number, actually very weak. I mean, this year so far, the government fiscal spending, the way I look at it, year on year is actually negative. So fiscal policy is actually contractionary. It's very puzzling and counterintuitive, right? So I think the reason being, in the beginning of the year, the government probably expected that the economy would recover just by itself without much of help from the fiscal side, because you just remove COVID zero and then people, mobility will recover very quickly. Mobility did recover very quickly, right? So, but I think investors' sort of organic demand recovery is very, I wouldn't say it's very strong, right? So if you look at the travel data is very strong, but spending data is rather weak. So, investors were disappointed. But what I want to highlight is at this moment, we just passed a sort of a turning point, right? So just recently, the government revised their budget and issued this 1 trillion renminbi bond. I think that's huge. So as an economist, I was very shocked to see that happen. Actually, the day they announced it, I called all the quite a lot of economists in Hong Kong, the sell-side economists. I asked them, do you think this is real? And then none of them, nobody told me this. Everybody was surprised. Everybody thought this was kind of a fake news. And then it got confirmed a few days later, right? So the point I want to make is, I think we just passed a very important policy turning point when the government kind of rethinking about their strategy and changed the strategy. And this never happened in the past, I would say 20 plus years. Last time it happened, I think, was in 1997. When Zhu Rongji was premier and China went through this, was during the Asia financial crisis. And we are this late, right? We're already October, they made the change to the budget. This is very unconventional. So I think that really help investor sentiment. And when I talk to our investors globally and also domestically, I think that's a game changer. That's the event that really made people rethink about not just this year, also growth outlook for next year. So in that sense, I'm turning more positive on China micro outlook.
So, Catherine, what do you think about the sovereign debt issuance? Do you think this is a big deal? Then how do global investors react to it?
Well, there wasn't a massive market rally on the back of it. But again, as I mentioned earlier, it's all these incremental targeted policies which in aggregate are quite meaningful. And so the government is looking for growth, and all parts of the government, and I'm sure you probably agree, that they're focusing on growth and trying to underpin growth. And where growth is perhaps weak, they're putting in measures to sort of stabilize it. So whether it's fiscally or monetary, I think also very importantly, China has the balance sheet tools to implement policy. And so technically what they're doing in terms of economic theories is pretty much spot on. And I guess property is a big area we do need to focus on. But again, even that, policy is about ensuring we weren't going to continue this bubble.
Okay. So Catherine, you bring up property, and that is the elephant in the room we have to address, right? So do you think we have seen signs of stabilization in the property sector?
I think from an investment perspective, you're going to see further consolidation. So the private developers will potentially further default, and the state-owned enterprise developers, they're taking up the project. So as long as citizens get the apartments that they've paid for, it's not a case of lower interest rates, because Chinese households aren't indebted, and they're quite wealthy in terms of 35% savings rate. So you're going to see consolidation in the sector. The state-owned enterprises pay very attractive dividend yields, by the way. They've got a well-balanced land book. So I think that's important from an investment perspective. From an on-the-ground point of view, I think we'll see further measures to restore confidence, especially in the top-tier cities, because property is sort of the main part of wealth of a family balance sheet. And I think really importantly as well, we're seeing the evolution of the secondary property market, which has a knock-on effect in terms of companies involved in, let's say, paint companies or industrial companies or consumer-related companies. So I think we've probably seen the worst in terms of the property situation, but again, we still have an abundance of oversupply that we need to get through for years and years.
Okay, Zhiwei, what do you think about the real estate sector? Do you think we have passed the worst?
Well, I think we have passed the worst. The problem is, look at in the next couple of years, the path of the recovery and the policy in that sector. Actually, as an investor, from my perspective, the two most important questions on the macro front, one is fiscal, the other is property. So fiscal side, we got the answer. I think the government now going in the right direction. I think they will issue a lot more bonds, not just 1 trillion. Down the road, there will be trillions of more bonds to be issued in the coming years. So I think that they got it right. Property side, I think they're very mixed messages, right? So you have the central government. I think if you listen to what they say, I think it's very sensible that they, the policy guidelines are very sensible. But when a lot of our colleagues go on sort of on the ground, go to tier 3, tier 4 cities, talk to property developers or banks. A lot of these policies that Beijing announced couldn't get implemented on the ground. I think that's the problem. So, the developers they pre-sell their apartment, but they couldn't get the money. The home buyers they pay the money, but the money get frozen in the banks. It couldn't get utilized. Then you get a cash flow problem. So these kind of things make the recovery very slow. And also, to Catherine's point, I think the home buyers vary, right? So you look at one property developer get into trouble, and then another, and then another. I mean, where's the end? Even very well-established developers, home buyers kind of hesitate because if I prepay 2 years down the road, can I get an apartment back? So that's kind of a concern, make people stay on the sideline. I do think there's overshooting. So in terms of a new floor, new apartment constructed, if you look at the annual number, it's very low. So I think it is lower than sort of the equilibrium level that's supposed to be delivered. So there should be some recovery. But whether that recovery will happen next year or the year later, I think that's probably the big question on investors' mind. Yeah.
It's a mixed picture, but let me put it this way. Would you advise investors to do some value hunting at this point in terms of real estate investment?
In terms of the stocks, you mean equity stocks? Well, there's still policy uncertainty, and there are so many other choices. Actually, for me, I mean, I'm looking from a macro perspective. I think the index is undervalued. That's probably higher conviction than on specific sector. And there are other sectors like consumption, for instance. I think that's probably will do better when the confidence is back as well. Property, I do think there will be a rebound. Again, this is a timing issue. It's a timing issue because the policy. I don't know whether there will be another big news about one particular developer getting into trouble and sentiment get worse again. That's a risk we have to deal with, unfortunately.
So, Catherine, there has been lots of narratives around China, around China's economy, the market, and probably it will remain to be the case for many years to come. Narratives are important, but beyond narratives, what hard facts do you think global investors should pay more attention to regarding of China's economy or market?
So macro aside, there are some very interesting fundamentals across a number of companies and across a number of sectors. So even in the property market, as I alluded to, the state-owned enterprises, they do offer a good total return opportunity. But whether it's oil service companies, healthcare companies, consumer companies, other industrial companies, there is a lot of choice. And I think because sentiment has been so negative, I'd call it extreme bearishness, that people are forgetting about the companies themselves. Because if you own, let's say, a basket of companies which are well run and well financed, even if China goes into another downturn, they'll still be around when the cycle recovers. And in fact, if they're well financed, they're probably going to become more valuable. So it's pretty simple to say this, but I think it makes a lot of sense in terms of if you own a good business, so what product and service does that business have? And you own a good management team, so you trust them, they reward minority shareholders through yield as well as total appreciation in terms of how they look after their staff, and then basically at a good price, so your margin of safety. So good business, good management, good price. And I think probably going ahead about the new normal, making money in China like we used to by owning, let's say, 5 tech names is not going to be how you make your returns in China going forward. I think you have to be non-consensus driven, and I think you have to really understand the fundamentals as well as to take into consideration policy direction.
Okay, so now Catherine, you are coming from a global asset manager and Zhiwei from like more like a domestic asset manager. So Catherine, China has launched multiple connect schemes in the past few years and allow global investors to access the onshore market. And how do you think, so what kind of role do global investors play in China's Asia market actually?
It's key, and in fact, when you look at a lot of the sovereign wealth companies around the world or players, they're diversifying away from US assets. Maybe they have too much, but Asia or emerging markets really stands to benefit, and China in particular stands to benefit, whether it's equities or whether it's indeed Chinese government bonds. The CGBs are the best performing bond market over the past 2 years. But again, I think the domestic investor is really, really critical, because when you look at what's happened with property, when you look at household savings, higher incomes, that wealth in the household needs to find a home. And so having an asset allocation choice in terms of capital markets will become more and more apparent. And this is why everyone loves Japan this year, because we're seeing an improvement in corporate governance. But in fact, many state-owned enterprises in China have been doing the same thing in terms of their balance sheet, their free cash flow, delivering high dividends. And so I think for the household, they'll look at equities from a long-term perspective in terms of where to put their money. It will result in more research coming out of the market in terms of better companies that you can invest in. And ultimately, this will attract foreigners.
Okay. So, Zhiwei, what do you think? Because news media tend to label global investors as smart investors. So, do you think domestic investors kind of overestimating the role global investors play in China?
Well, I think, well, it's funny, right? Let me tell you a story. I mean, so far this year, and because we have business onshore and offshore, so I talk to investors on both sides. So the number one question that domestic investors ask me is when the foreign investors will come back. And the number one question foreign investors ask me is, when will the domestic investors become more bullish? So they are watching each other. I think there's smart money on both sides, but you do see that foreign investors follow more a sort of value investment approach. So a lot of these, fundamental analysis really work for them. And there is also this very high frequency data point that people watch every day, this northbound, southbound data that recently, if you look at the intraday kind of movement, they do have a pretty big impact on the market sentiment, particularly when the market sentiment is weak, right? So you have a very strong outflow. It does amplify the shock. Now, I think at this stage, looking at both sides of the investors, I think the recovery or the improvement probably should come from the domestic side, because we are here on the ground. I mean, if people on the ground are super bearish, why do you expect foreigners to come to rescue us, right? So you have to have the domestic confidence recovery to happen first, which I think is happening on the margin, very slowly. But I think in the past, maybe particularly after this fiscal policy announcement came out, there is this expectation for China running a more expansionary fiscal policy for the next couple of years, not just a few months. So that narrative, I think, is playing out a bit more. So more people kind of buying into it onshore. But I think people need to see data, right? So we need to see, bonds issued and then translate into domestic demand, and then some of these high frequency we monitor started to improve. Then it probably started to sort of snowball. We're still at a very early stage yet. Yeah.
Okay. So the last question I want to dedicate to tech, not only because it is the thing in the FinTech Week, but also because it's like the beacon of hope amid all these challenges. So Catherine, do you think we are kind of overpaying for the hypes of AI?
I think so, but I think what's more important is that these Chinese companies, and we see them all the time and meet them, I mean, they're doing amazing things. In terms of innovation and the pace of innovation, I mean, it's rapid. And the government is very supportive because China wants to have high-end manufacturing companies. So I wouldn't rule out tech or AI or anything that's associated with it. In fact, a big trend this year is a lot of Chinese companies are gathering customers offshore. So they have their domestic business and their offshore business. So, you know, a result of this is perhaps heightened competition between the US and China. But I think this has been going on for years, and it's just something in terms of the competition that will continue.
Shirley, probably 10 seconds.
Yeah, in the long term, I'm very bullish about AI, but I think it will take a long time to play out. And in Asia market in particular, there are a lot of noises. So maybe some companies they just change their name somehow related to AI, but we have to look at their fundamentals, how they generate revenue, and that's still quite a long way to go for some of them.
Okay, so that brings us to the end of this session, and I want to thank our two wonderful panelists and thank you for being here.
Thank you.
And thank you, Junjun, for being our moderator. Thank you so much. Everyone, please be seated. And moving on for this next segment, it is about global perspectives on digital asset licensing regimes. That is to explore a world of insight in our panel discussion on global perspectives on digital asset licensing regimes, as mentioned. And we will provide a comprehensive view of various licensing frameworks governing digital assets that is around the world. Experts from different jurisdictions will share their perspectives, their experiences, and also the impact of regulatory approaches that are used on the digital asset landscape. So whether or not you're a digital asset enthusiast or investor or just a regulatory authority, this session offers a unique opportunity to gain a deeper understanding of how some of these different regions are shaping the future of digital asset licensing. So everyone, please do join us to navigate this global regulatory landscape and to uncover the opportunities as well as the challenges in the rapidly evolving digital asset market. All right, so it looks like everyone's ready to go. Everyone, let's put our hands together for our moderator, Bjorn Wallstrom. He's the partner and CEO of Current Consulting Group. Thank you so much for being with us. Please make yourself comfortable. Mr. Feng Zhao, co-founder and CEO of Ivy.one. Louis Lee, co-founder, managing director of ProSynergy Consulting Limited. Last but not least, we have Mr. Henry Zhang, co-founder and CEO of IFT. Thank you so much, everyone. Please do make yourself comfortable, and I will hand the stage over to you all.
Thank you so much. First of all, I want to thank the audience on my own behalf and on behalf of the panel for sacrificing your lunch to join us here for this conversation. It's obviously the right decision, and we'll try and prove that to you. I'm Bjorn, CEO of Current Consulting Group. In my day-to-day, I manage risk and hunt down stolen assets in the crypto world. Today, I have the honor of leading a panel discussing global trends and regulation and licensing regimes. I'm going to start by asking you guys to introduce yourselves briefly. Please go ahead.
Okay, so I'm Fong. I'm a co-founder and CEO of Ivy.one. So we're building a digital asset infrastructure for financial institutions, so mostly banks and asset managers. I'm in the digital asset space since 2017, and we launched our first security token offering for retail in 2019 out of Germany. And I'm also a member of the digital finance committee of the German Banking Association, where we talk about like different kind of topics from open banking to CBDC to DeFi, tokenization, and much more.
Hi, I'm Louis. I'm from Hong Kong, ProSynergy, co-founder and managing director. We are the guys who are responsible or being part of the journey on the virtual asset trading platforms in Hong Kong, the two approved ones. And we're also involved in other virtual asset licensing applications in Hong Kong. And of course, we are now pushing the boundaries with other types of virtual asset related products, getting the license through with the Hong Kong SFC. Maybe pass to you, Henry, to talk a bit more.
Yeah. Good afternoon. This is Henry. I'm the founder and the CEO of DGFT. DGFT is a Singapore company. we are an exchange. We are an exchange for security tokens. Also, in terms of technology, we are sort of the DEX, decentralized exchange. And we are licensed in Singapore. We have in sort of like Singapore, like Hong Kong, we have a primary market and a secondary market licenses. This is DGFT.
Now, before we deep dive into the topic of the day, big news in the crypto sphere this morning is obviously Sam Bankman-Fried meeting his fate at the hands of a New York jury. Any hot takes there from the panel before we get into the subject?
Oh, I think that's interesting. Great news, I think. We all know about Sam. Of course, this is, I think it does go to show having probably a solid regulatory regime is very good, because Sam, well, FTX before has been looking for licensing throughout the world. I think before, throughout the world, I mean, in terms of regulation itself, it's all mostly about registration and AML. Now, in Hong Kong, we take a more staunch approach. We look at investor protection. So I think we stand in a better ground in terms of protecting investors, like not only now but going forward as well. But we can go into a bit more once when we start the conversation. But Sam's news is definitely apt at this time when we talk about licensing regimes, throughout the world.
Yeah, probably if I can shortly jump in. So overall, just because you're like a big company or a big FTX, Binance or something like this, it doesn't exactly mean like that you get licensed everywhere around the world. Yeah, I think we also had like the use case where, for example, Binance tried to get like a crypto custody license in Germany, and the regulator over there said like, no, you're not getting it. Yeah, and what they did, of course, like they moved out.
Let's start with Hong Kong. And Louis, I know you've been deeply involved in the scene here.
Yes.
You've helped several of the companies apply for and successfully obtain the license. You want to tell us a little bit about the state of play in Hong Kong and your work in that area?
Sure. I think this is a very boring, very dry and boring topic. I'm trying to make it more interesting. So let's get the elephant out of the room first. Now, there's a lot of people saying that all virtual asset service providers need to get a license. Let's stop it there. No is the answer. If you look at the regulation itself, it's all about trading platforms, in particular, centralized matching engine trading platforms. So that's a VATP under AMLO. They also reckon that because you run a trading platform, there's a chance that you're going to do securities as well. So you need to get a Type 17 as well. So these two licenses are for trading platforms. We've got centrally engine in it, matching engine in it. So besides these two licenses, we can also look at what else can we do. Now, of course, there's the virtual asset portfolio manager, which is the Type 9. So you can have a fund which invests more than 10% of your assets into virtual assets, i.e. BTC, ETH. You need to get a license uplift for that. You can also have a platform under Type 1, which you distribute virtual asset related products or do VA dealing, whereby you connect with the hash keys and OSL of this world, the two approved licenses in Hong Kong. And of course, you can distribute virtual asset related products, which has been a very apt topic because SFC just released 2 circulars last night. Not sure everyone have read it. I have. But it's exciting news that SFC is looking into it and allowing players, traditional players, and also crypto players to come in a bit more to our market to play with. But that is all about the SFC. But there are other licenses you can think of whereby people will make use to do virtual asset related products. You talk about the MSOs of this world, so the money service operators license, that's possible. Trustee as well, that's also some other crypto players will look into. But generally, that's the platform in Hong Kong. But as in all sort of common law jurisdiction throughout the world, licensing is one thing. But if the rules say one thing, but there's not literally reckoned in the case law, and there's no principle against it, you can actually have that business in Hong Kong. You can actually run it.
Would you say that the way the SFC designed the licensing regime has been successful?
It depends which style of coin you're in. Maybe we can chime in, Henry, later to discuss the Singaporean side as well. But from my point of view, of course, I support Hong Kong. I think it works. But of course, if you're playing in a stakeholder world, in the virtual asset stakeholder world, they'll say, oh, it's so slow in getting approval and all that. But look, SFC has been very prudent in their approach. They want to know whoever comes in is a good player. Because Hong Kong is an international financial center. We have a reputation to keep. So I'd rather have good players coming to Hong Kong in this playground to play, rather than getting all the cowboys and what have you in this world to come to our jurisdiction to mess up what we built on, so many years in terms of financial center. But perhaps Henry can share more about your Singapore side, if I'm not bugging in.
Please, excellent.
Yeah.
Thank you for your help. Yeah, please.
Talk about Singapore a little bit. Similar, but the approach is also a little bit different. Singapore very typical is to categorize so-called the digital assets into 3 categories. There is a security token, there is a payment token, and so-called the utility tokens. Utility tokens basically is like nothing to do with any financial things, like a game token, for example. Then basically you can do it without any license. Then go to the payment token, they call the digital payment token, DPT. The typical digital payment in the Singapore regulatory regime is like a BTC, like a stable coins. These are the typical DPTs in Singapore. So this, as long as a DPT, digital payment token, it is regulated under Payment Service Act, PSA. So got all the licenses under PSA. Then another one is called the security tokens. For example, tokenized US Treasuries. That's a very typical security instrument. That's security tokens called. So if anyone doing anything related to security tokens, it is regulated under so-called Securities and Futures Act, SFA. So basically, it's security token, payment token, and a utility token. So subject to security law, payment token law, payment law, and no regulation at all. There's 3 types. Yeah.
Some have said that Singapore's progress on regulating and creating a landscape for crypto has slowed down, while Hong Kong is trying to speed up. Would you share that view?
Yeah, talking about the facts, Singapore, there's 3 types, right? Then you look at the license issued under Payment Service Act, PSA, and under the SFA. Singapore itself does start early than Hong Kong. So the first license, and in terms of when they issued the first license and how many licenses has been issued, for the Payment Service Act, Singapore has about 12 licenses issued. For the security tokens, there's about single-digit license issued already. And talking about names like DGFT, we are not a centralized platform. All the licenses before, they are all centralized platforms, like in Hong Kong. But the names like a company like DGFT, we are more like a Uniswap type. We're using smart contract, public chain. As a secondary market, we have AMM, automatic market making. This is all very typical so-called DeFi solutions. So Singapore also looking at the DeFi solutions. And we are very proud is we are the first and so far the only DeFi platform being rolled into the Singapore regulatory sandbox, which we started June of last year. And by end of September, we received in principle approval for our license, which means we are graduating from the sandbox. So in this regard, we can claim ourselves probably the first regulated DeFi solutions, or DEX in short, in the market, not only in Singapore, not only in Asia, probably only in the world, accepted by a tier 1 jurisdiction like Singapore, Hong Kong, right? It's a tier 1 jurisdiction. So in this regard, I would say, if not say Singapore is better, but at least can say Singapore has more kind of pilots or practices so far. Yeah.
Thank you. Fong, you've been very patient with us. You've also flown in from far from Germany just to join this panel. Is that right?
Yeah, of course, just for this panel here. And I think, first of all, thanks for your input. And what currently no one mentioned here right now is the regulator in general has one task. And its task is like to protect retail investors. Yeah. And from overall, what Germany is a little bit different from Singapore and Hong Kong is that they came up like with a complete new regulatory framework, which is called like the Electronic Securities Act. And in this case, what we did is differently from Hong Kong, for example, is that we started with an independent custodian license. Why? Because if you think about like who is currently like holding your money, it's like mostly like the big banks, right? If you're sitting here, for example, in Hong Kong, it's like a Citibank or HSBC or something like this. Yeah, and the question you always have to ask yourself is, who do you trust more? You know, do you trust like a startup, yeah, that just was founded, for example, yeah, and holds like billion of money, or do you trust like a big bank who holds your money? Yeah, and with these kind of two things, you have to really think about like where you put like your stuff, and that's why in Germany it was clear that the crypto custody license should be like independent, so it can be like a bank, a startup, but there's always like one responsible entity with that. The second thing what happens was like that Germany was more like moving to the direction of like one piece of register, for example. Yeah, so what is it? It's more like a piece that, for example, holds like all the transactions, so that you know like this is the sender, this is the receiver, and stuff like this. And this also needs to be licensed. Yeah, so it means like there's a clear flow between like the issuance company, then you need to have like a licensed register, and you need to have like a licensed custody player. Yeah, so this is like how you build up this whole framework in Germany to protect like not only institutions but also like retail investors. Yeah, and this is like a clear differentiation between like what's happening here in Hong Kong and Singapore. Yeah.
Now for this next question, I want to ask you to try and be honest but polite. Flying in from Europe, what is the discussion here between Hong Kong and Singapore, and are comparing the two cities' approaches to cryptocurrencies and regulation? What does it look like to you flying in from what is arguably a more mature jurisdiction?
Yeah. So honest opinion, I think that Hong Kong is currently like 1.5, 2 years behind us from regulatory perspective. Yeah, I think you're moving quite fast. Yeah, it's like really moving. But if you think about the framework, and I was sitting together yesterday with the SFC, you clearly see that they're building up the framework right now and looking like, okay, how do they measure themselves against, like, for example, Europe? And it's definitely going to the right direction. Yeah, probably it will be even better. Yeah, because you know right now like what's happening in Europe, what's happening in other jurisdictions, and you can learn from that. Yeah, and maybe have like a different kind of act coming out, like to provide really protection for retail. Yeah, and definitely think like it's going to the right direction. Yeah, and let's see like what will happen in 2024.
Yeah, I think you're right. I mean, generally, I think like crypto adoption in Hong Kong generally is behind like Europe or the States. So I mean, for the regulation to be behind, I think it's normal. But I think going forward, I mean, we can learn from what happened in Europe, mistake or not, and sort of improve on it. I think more, I won't say a gripe, but more of how to move forward is to have to strike a right balance between technological innovation and also protecting the investing public. Because sometimes it's very hard. FYI, I did work in a regulator before. So I mean, if you go ahead and implement something without actual like on the ground knowledge, it's actually very difficult. I think that's what Hong Kong is experiencing right now. We need a bit more crypto adoption and see where everything is, and then we will know how to regulate it. But definitely we have to protect the investor public for sure. But it is a journey that we need to build towards that, I would think. But I think probably similar in Singapore as well. You need to move towards that goal.
Yeah. I would say you look at where does these regulators coming from, right? No matter what type of specific regulations they implement, I would say the logic behind are pretty consistent. This is good. This is also I observe. Like in Singapore, it says like we love Web3, we love blockchain. Hong Kong same, Europe same, even US, right, same. Then Singapore says we encourage innovations, we discourage speculations. We encourage institutional adoption, we discourage kind of consumers, unnecessary or too much consumer engagement in terms of gambling. So this is investor protection, blah, blah, right? Hong Kong talk about the same thing. And also Europe that do the same thing, like licensed custody, which means protect underlying assets, right? So this is one thing. Another thing I do observe is I do see regulators that are talking to each other. It's not really so much public, that no need to be so public, but they do talk to each other. Many regulators, they have some departments, they call different names, but the function is like called the policy balancing or policy coordination. That's one, they do talk. So that's very good. And also there are certain so-called the cross jurisdiction organizations. They're coming up just like a Basel, right, in the banking industry. They come up a lot of framework. It's not really regulation. It's not compulsory, but it's in a framework. Then the regulators in different jurisdictions, they can apply these principles into the market. There is good practice like Basel before in the banking industry. I do see the similar thing happen in the so-called crypto thing as well, including there's some consultation paper come out just two months ago across the like SFC, Hong Kong MA, even PBOC, China CSRC, and the US SEC. They're all there. They come up with some framework for the DeFi already. That's very encouraging.
Yeah, I mean that was in IOSCO actually, the paper. But I think I want to round this point. Let's see what the Europe sort of experience is actually on this, because to me, when I sort of say crypto adoption, I think a lot of things are missing in Hong Kong is the education part. I mean, you have all the nice, beautiful framework in terms of regulation, but if the investing public to know what crypto is, as you're alluding earlier, Henry, about, you're doing investment and it's gambling. I mean, that is not a nice idea. Investment is investment, gambling is a different thing. But in terms of education about educating the investing public, what we are doing, be it Web3 or BTC, ETH and all that, I think this part, in Hong Kong at least, I can feel we still got somewhere to go. I'm not sure about the experiences in Europe.
So in Europe, it's also the same topic. Education is still there, right? So you still need to educate all the people. And what I think is also really important and people to understand is, for example, if you build like a regulatory framework for a country for digital assets, the technology is also evolving with it. Yeah, for example, 2-3 years ago, it was like, the technology is not mature enough. The technology is not mature enough. Like this is what like all the regulator and financial institutions were saying. Yeah, and after like, I don't know, now 2023, they say, okay, the technology is mature enough. So what are we doing right now? And it will be the same with Hong Kong. So you started right now. And the question will be, okay, how will be technology enhanced, mature in the next couple of months, so that everyone can build like this kind of ecosystem within like their own systems?
Agreed. I mean, education, I think, is important here.
Now, the two of the largest countries in the world have increasingly taken a negative approach to cryptocurrencies and proactively prohibitive regulatory measures. I wish we had another full panel just to get into this subject, but a lightning round from all of you. Is the negative approach from the US towards crypto and FinTech gonna last, or will it potentially change in the next few years?
For me, it's clear. So US market will change. Everywhere in the world we see like that regulatory frameworks are coming up, and the US cannot say like, no, we're not doing it anymore. So that's like my take.
My take is, I think US is over litigated. I mean, they're stifling what they have built as well locally, and I think it gives opportunity for others like Asia, Europe to build on it, and I actually welcome it. I mean, they can continue with what they're doing. I mean, if we can build a nice framework for regulation and we can ride on it, that's great.
Yeah, probably I contribute just 2 points. One is regarding what is crypto, right? There's the people have a definition is very different. So some people when talking about blockchain, crypto is cryptocurrency. Some people think it's a stable coin. Some is like a real world asset, security tokens. So it's different. Personal view is I think blockchain as a technology is great. Then the blockchain applied to the assets should go beyond cryptocurrencies. Cryptocurrency definitely has value, but should go beyond. So that's why the so-called digital assets, stable coin is sort of the real world assets, 2.5. Another point quickly is from the regulator perspective, if our wish or expectation on the regulators is not only give out a negative list, telling the market you cannot do this, you cannot do that. We also want the so-called white list. What can be done? So that would be great.
I want to thank all of you, and we should let these guys go to lunch, right?
Yeah,
definitely.
Yeah.
Thanks, everyone.
Thank you.
Thank you very much.
And thank you very much, Bjorn, for being our moderator. Everyone, please be seated. Thank you so much. Oh, and actually, let's take a photo. I see that someone have the cameras up, so let's take a photo before alighting the stage. Wonderful. Thank you once again, gentlemen, for the insightful sharing. Thank you. Gentlemen, please. Thank you. Next, this is the last segment that we have before the break, and it is on the impact of generative AI on serving retail financial customers. Therefore, everyone, please do join us for an intriguing panel discussion on the future of China's tech fins and also what is on the horizon. Now, in this session, we'll dive into the ever-evolving landscape of technology-driven financial firms and their impact on the financial industry. Now, expert panelists will provide us with lots of insights that we have that is for the latest trends, the innovations, and the regulatory developments that are reshaping the future of tech fins in China and beyond. So whether you're a FinTech enthusiast, did I say tech fin? FinTech. Now, enthusiast, investor, and industry leader, this session will offer a unique opportunity to stay ahead of the curve and gain valuable insights to the exciting developments in this rapidly changing sector. So everyone, looks like we're all ready. So let's put our hands together and welcome our moderator, Mr. Neil Tan, Chairman of FinTech Association of Hong Kong. Please do join us on stage. And we have Jennifer Tunney, VP Strategy Development and Government Affairs of GBA Ant Group. Thank you so much. Sally Wan, CEO AXA Greater China. And Jerome Huet, co-chair AI and Big Data FinTech Association of Hong Kong, to join us on stage. Everybody, please be seated, make yourself comfortable, and the stage is all yours.
All right. Thanks everybody for coming over. I know it's middle of lunchtime, but really appreciate you guys spending some time with us tonight. So we have a fantastic lineup in terms of the speakers here today. The content is about impact of generative AI on serving retail financial customers. Obviously, Gen AI is top of mind in the current market situation. And as far as the growth is concerned, it's in the trillions if you talk about the next 5 years. So today we're going to be talking a little bit about how the financial services are adopting this type of technology. And kicking it off, let's ask Sally, how is Gen AI actually impacting the customer journey? How is it improving it at AXA?
So we have done quite a lot of different use cases. I think the moment that is the most effective, coming from a legacy insurers, we used to have many different types of legacy systems sitting in different formats. So on the customer service side, the customer service team member has to go through different legacy systems to find one information. So generative AI, the capability of combining text reading, document readings, conversation from the call center tapes, and other things that they can put all the information in one place in 30 seconds. So it's actually improved quite a fair bit of the efficiency, the time of a human being who needs to go through different complex process to serve one customer. So this is one case. There are other cases as well. So the other one is because of the capability of detecting trend. So it is very important for us to use it for fraud, waste, and abuse cases. So there are claims, analytic, there's a lot of data about repeated claims, any suspicious cases. I think these are the things that we can do a lot to improve the fraud data. And also, we are also trying on document kind of generation. Example would be like, trying to do an personalized email reply, a personalized letters, a personalized something like a recommendations, so that we can have a human being to help checking. So can you imagine if in the past the staff needs maybe 30 minutes, an hour to draft a letter, now they probably need 1 minute. And then we just need to check it's accurate, we check the data. I think this is how we use it now.
Right, that's great. How's Anne doing that, Jennifer? I mean, what sort of use cases do you see, or what sort of advances have you guys made?
Relatively speaking, N is a much younger company, so we don't have.
No offense to staff.
I say relatively speaking. Okay, so we may not have so much legacy, but as I say, actually AI is not new. We have applied AI technology in order to improve the customer experience. Say even for each wallet, actually, if you compare your wallet with your friend, your front page is different because that is based on your personal behavior, your spending behavior, your preference. So we actually adjust that by using, of course, the data we gather. But now, because with this robust computing power, so we have this, this AI GC, which can help us do a lot of things, as Sandy mentioned about, they have this, they can analyze a lot of information. Actually, not only just data, it can be pattern, it can be a table, it can be image, and they also have the capability to predict. So as a financial service company, we provide a lot of this. Other than payment, we also have this investment or treasury functions. So we have recently announced that we have upgraded our one of our product called 知晓宝. Okay, 知晓宝. Now it's a 2.0. What's the 知晓宝? It is actually can help our user to provide them some market analysis. They can diagnose their portfolio. And also can make some customer education, and on average it's about like 95% accuracy in terms of talking about the data analysis and the reasoning, those kind of things. And we are already in a closed test for over 6 months, and it's already ready to launch, and now it's subject to regulators' approval. And other than it is targeted for the end user, the consumer, general consumers. On the other hand, we also have a product which is called 知晓助. This is a product which target for those financial professionals. So probably in the day-to-day work, we can help them to extract a lot of information, do a lot of analysis. They can also use it to create certain content or provide some market insight for their customers. And for this one, it is still under a closed test because we need to have a lot of this industry expert to help us to make sure the performance is up and ready for the professional use. So this is what I would like, the two panels I would like to share today.
That's great. Guillaume, you're coming from the consulting side, Accenture. So that's your key focus is AI and how to push it inside a financial sector. So what do you see are the key challenges inside of it, and also the opportunities?
Thank you. Just stepping back a bit, when you look at AI in banking, a few years ago, a few decades ago, checks were processed by human, and then it became processed by robots and machines, but that use AI. But we don't call it AI anymore. So this is like a moving spectrum. There's been regulation, and things are more stable, and we are more confident in this technology. Generative AI is brand new. So, brand new for the public, because it's been around for a few years already in the industry. So, indeed, there are some implementation challenges, but it depends on where you're going to do it. Just like what Sally and Jennifer alluded to, you're not probably going to start first by putting a generative AI bot in front of your customer, because it's still in flux, we're still exploring this technology. But the potential for augmenting, and I like this expression, augmented intelligence, augmenting your staff to be more efficient, more productive, is wonderful. So coming back to your question, what are the challenges in implementing it? I would say the first challenge is to get well educated on what can AI do. And if you don't know what it can do, and if you're not on top of where is the technology, it's difficult to see where it can be useful. Second point is where understanding the shortcomings and the hallucination that we've all heard about, what are the challenges in implementing it at scale, and it comes afterwards to the use case, because it has to serve a purpose, it has to serve a use case. Once again, AI is just a tool. It's fancy, it's very nice, but it's a tool, and it needs to serve an end. And just a last point, it's also regulatory-wise a topic that is in movement. I mean, we've heard about the EU AI Act. There's been some initiatives by Singapore, China, Hong Kong, releasing guidelines on these topics. So there is a lot of observation that needs to be put by the different players in the industry before using it, in order not to deploy it in an environment that could be challenging or damaging the relationship with the client or even with their staff. So this is let's go step by step. Yeah.
Right.
Can I?
Yeah,
can
go
I
ahead.
also,
Absolutely.
respond to that on the challenger side. I just want to add, when we do our use cases, one of the key challenge is the data quality. Because we are looking at imaging, we are looking at the vast bases of data from different legacy systems. The data quality is important to make sure that it's cleansed and make sure that it is good, so that we have to repeatedly check. Otherwise, the quality of the results is not as good, because as Guillaume mentioned, we are a regulated industry. We cannot put out an inaccurate advice in front of our customers. It is a regulation is also something that is quite challenging. We have licensed advisors. So the moment generative AI putting some advices outside and we use it, how does it land in the gray area? Is it the robot, or is it the AI, or is it the human being? So we have to be very careful of handling this. Privacy, data privacy is another one, because we are putting a lot of customer data into AI to generate all these things. So, and advice and data analysis. It is also one of the reasons why we actually invested into a secure GPT, so that it is internal, which is not so much like clouding with different data. So this is also one of the things that we have to pay attention to.
Can I add one point?
Sure, absolutely.
Yeah, I think we have a lot of risk. I think, because the AI actually is very powerful. And so it is not, now they also have this synthetic data, okay, with AI. So as, Sally rightly point out, when we have facing such a, tons of information, how can we make sure this information, they are true and correct, okay? And whether there's an unbiased. And also, need to remember, it is still the human being who designed this model. A lot of models still have the rules and those things. So is there any bias? So this is very important, and that's why, internally for M, we are talking about, we call this technology ethics, okay? So we need to make sure whether there's any very strong compliance within a company when you set up this kind of services, how you gather, when you gather the data, how you store that, and also how you use those data.
Yeah, I mean, I think that brings up a really good point. I mean, Jennifer, when you take a look at what Ant Group is doing as far as predicting risk, assessing risk, looking at market trends, what are the investment strategies? How do you improve strategies? How is Ant actually implementing this inside internally?
Yeah, as I say, it is not easy. At the first level is that actually, at our board level, we actually have a committee called Risk Management and Technology Ethics, okay? So you can see, from the governance point of view, top down, we are very cautious on this. We have a committee, they oversee, they set up all those strategies, set up the rules, the regulation, and make sure there is a strong compliance within the organization. And the second thing is that we also understand, to do this is not only just rely on one company. Okay, even say a lot of our program, a lot of our technology self-developed. We also rely a lot of this collaboration with industry, with academia. So recently, I'm not sure you are aware that we have a collaboration with Tsinghua University, and we recently announced that we have this what we call the 意见. 意见 actually we call 意见 Actually, it is a product. we actually rely on this AI's capability to detect the AI's issues. Okay, it sounds very very
Using
complicated.
AI to detect AI problems.
Yes,
Okay. Interesting.
because you have such a very strong and powerful AI, so you need to have something to detect it, to make sure that we talk about we very focused on the risk, the transaction risk, the security risk, and also the technology risk. So it's a very good I would say start beginning with collaboration with some academia to work on that. And I understand, although it's only the first phase, but you can actually analyze lots of this, information within very short period of time. And so I think that will be the trend. Right. We will not only just work ourselves, we will collaborate probably with industry and also with academia to see how can we deal with this.
Right. Yeah. Great. Sally, how about AXA? I mean, how do you guys institutionalize this type of new technology? I mean, it's so emergent, right?
Yes. So. I think we are actually at the start of the journey because we're starting to use put all this data together, imaging, voice, text, everything together first, so that we can use this as a proof that we can do something about all these AI to produce the documents, to respond to our customers, and starting to use it to try to, for example, marketing, product brochure, underwriting. Can we use it to write underwriting documents to make it easier to understand? Trying to create personalized information for the customers. We started with email, I talk about, and I think in the future it will be customer letters. There will be more we can use to face the customers. Of course, I think it is still a long journey because we are just learning. And as legacy insurers and reinsurers, we have so many legacy systems we have to check. Data quality of the data is very important.
Go ahead, Gil.
If I can chime in on one topic, is that generative AI it's a broad spectrum. We know about chatbots and so on, but if you look at the work that's been done around the world on generating new science, new knowledge, the likes of DeepMind that manage to generate new ways to factorize metrics that speed up the way that calculations are made in computer, or the new code that was generated for assembly in order to speed up. Generative AI can create new things. We've seen it on the image generation space with the likes of DALL-E and so on. But it's also something that companies have not started to explore, but how generative AI can be used to create new ideas, new concepts. Because in the space of the data that's been injected in the training of this large language model, you have probably retail, banking industry, manufacturing. But there are some transposable knowledge. So when you ask, when you prompt it, and you add it with knowledge through techniques, then you can have ideas and suggestions that are suddenly totally out of this world and that you didn't expect. So in terms of brainstorming and creating new ideas and new concepts, this is also a mind-blowing technology that is still to be more explored. Yeah.
Right. I mean, building on that, I mean, you kind of take a look at it, and you're covering inside of financial services, especially inside of AI. What have you seen as some pitfalls that some of the clients would face? Maybe you can share a little bit about that since you've...
True. The first thing that I would say to be avoided is to do generative AI for generative AI.
Like again, for marketing purposes, like for the headline.
At least if it was for marketing, but sometimes we may have a situation where you realize that you're using a bulldozer to solve something that can be resolved with much more nimble ways. So it's important to get back to what is the purpose you want to achieve. And it's not a technology issue only. You need to think about the process, the target operating model, the machine learning ops that will come on the back of it. So basically, you need to have a full 360-degree view of how you are going to inject this technology in your strategy, in your operations, and how you're going to maintain it on the long term, and make sure also that you keep the knowledge, because sometimes you inject knowledge in it, life being what it is, people go, and you're depending on this. Another point is that you need to be cognizant of the dependency you create when you are relying on such a large language model that is not been necessarily designed by your firm. So there's also this aspect there. But it's just, I mean, the best practices are step in step being put forward. So that's in flux, yeah.
Sally, Jennifer, you guys have any specific pitfalls that you've faced or you've seen?
Pitfall, I think it's about security. I think it's about whether we have the right security level for the customers and for ourselves. Cybersecurity is one of the things we talk about regulators. We have to make sure that we really comply with the rules. And most of the time now, regulation is catching up with technology.
Right.
So that's also why we have to be a bit more careful. But I think generative AI, for now, to us, is about efficiency, is about helping the staff. I think it's helping a human being to do more quality jobs than before.
Than it used to be, right?
Yeah.
And can't you just use the AI to do to make sure that you're compliant inside of it?
Maybe.
I think, as a group and also Sally are talking about lots of this risk, how to manage it. One thing I want to emphasize is that for generative AI, if you want it to be, I would say a trust AI or a really useful, meaningful, it's very important that you must have the domain knowledge. Okay, it is not just, I think it's not only talking about how strong, how fast you can do it. The most important is that whether that is a reliable one. So it's very important. Say, for example, even we are engaged in financial services. When we want talking about 知小助 or 知小保, we actually invite a lot of industry experts. Okay, to understand, to gather tons, millions of information to diagnose, do a lot of tests to make sure, as I say, we're talking about 95% accuracy. So it is very important. Otherwise, you're very powerful if as we always say, garbage in, garbage out.
Okay.
If you don't have the quality information, that will be, a nightmare. Yeah.
Absolutely. So maybe a closing question to the panel. What do you see as like top 3, top 5 trends in the next 5 years? I mean, especially inside of the context of the area that you're focusing in. So, when you talk about insurance, let's kick it off with Sally, maybe.
Yeah, I think for insurance, definitely all of our insurers in the industry, I think around the world, is really starting to use generative AIs for different use cases. I think first, as I mentioned, is customer service and customer experience, and to improve the back office efficiency. I think this is a trend. Moving on, it will be more on the product side. It will be more on the customer facing. But I think it is a journey to get there because of the data quality and things like that we talk about.
Right.
Yeah. And I'm already talking about product. We already go to the product side. So I would think that in the coming 2 or 3, 5 years, probably with more information, what we do is to increase the accuracy. That's most important. As I say, now it's 95%. They told me that the 知小保 will be just behave like an average professional, financial professional.
Really?
Yeah, they told me. That's what my angel told me. But 95%, is that enough? Probably in future you want 98% or 99%.
Right. So that's huge. Guillaume?
What's important to have in mind is that ChatGPT is only 1 year old. And this technology is evolving at exponential pace. So I'm excited to see the developments, particularly in multimodal model, where you have, for example, image, but also voice blended with the text. So I'm excited to see some new use case there. And in terms of processing, the breakthrough from IBM recently on the neuromorphic chips that will be making the development of this large language model really easy for everyone at a cheaper cost is exciting. So it's something to follow, but we are again seeing industrialization of this of the usage, the implementation, but also on the development on this topic.
Great, thanks a lot. So obviously inside of the financial services space, Gen AI, you're seeing a lot of institutional adoption inside of that. So you'll be, as a customer, as a consumer, you'll be facing this as well. So I think it's a very, very bright future. And thanks to this fantastic panel for giving these types of insights. So thank you very much.
And of course, thank you, Neil, for being our moderator as well. Thank you so much. Could everyone just stand up and take a step forward? And so that's a photo op for everyone that's off stage who would like to take a photo. Wonderful. And for everyone in the audience, our first half is finished for now. So everyone please take a break as we will come back at 2:10 p.m. So everyone, please do come back here and we will see you then with more exciting discussions and panels for everyone to enjoy at 2:10 p.m. Thank you and see you soon. Woo.
Everyone has their own way to innovate and make breakthroughs. Taking a break doesn't mean slacking off. Work smart, and it's amazing how much you can easily get done. Finding overseas markets difficult to grasp? With the right partner, anything is possible. Technology changes fast. We make sure the latest information is always at your fingertips. At BOCHK, we understand that innovation comes from expanding what's possible. Through agile use of technology, we connect you closer to your ambitions. Understanding brings us closer. Bank of China, Hong Kong.
I can fix this. Let's start with this pencil. I'm gonna get his help with this chocolate.
Little Glenn always saw past problems, uncovering hidden value to see if they'd become better things altogether. At Standard Chartered, we're the same. When it comes to wealth, we see beyond the obvious. Benefit from our global research capability, unparalleled wealth analysis, and expertise by INSEAD-trained relationship managers. Come talk to us today. Standard Chartered Priority Banking.
Connections. For over 200 years, they've been Citi's business. From connecting oceans and continents by helping finance the Panama Canal, to today, where we're still making our most important connections, people. We connect security and innovation, all to help drive growth. Our global scale connects businesses to over 160 markets, and today's ideas with tomorrow's opportunities. For the love of moving businesses forward, for the love of progress. Citi.
Often asked how DBS became the world's best bank. It's simple. We believe banking has a higher purpose, so we set out to innovate and serve you better by being a different kind of bank. Learning to think and act more like a startup, more like a friend, more like a business partner, and less like a bank.
opportunities. Convenience, security, and empowerment, a higher efficiency for business. For Hong Kongers like Ying, this is what the hypothetical digital Hong Kong dollar, or EHKD, may represent. A central bank digital currency, leading to accelerated and simplified traditional financial processes to speed up money flows with less resistance and cost, benefiting buyers, sellers, and the economy at large. Processes that take weeks of paperwork between third parties will be completed almost instantly in a few clicks. As part of the EHKD pilot program, Fubon Bank, Ripple, and partners have spent months developing a faster way to unlock home equity and turn it into credit through a home equity line of credit loan, or HELOC loan, dramatically shortening the application process. It starts in the Fubon Bank online portal. Ying sees his currently mortgaged properties, picks the one he wants additional credit on. Fubon Bank already pre-qualified the amount of equity Ying can realize based off the property value and criteria such as income, credit history, prepayment history, and other information. Ying reviews the offer and terms, then confirms. The bank's interest in the mortgaged property, the lien, is tokenized safely and transparently on the blockchain ledger. This token, once deposited in the lending protocol vault, activates Ying's ability to borrow. He just decides how much credit he wants, and in his vault dashboard, details around asset and liability update in real time. From LTV, interest, repayment terms, asset liability, total loan amount, it's all there. Quick transparency into personal finances, making it easy to budget costs if a bigger loan is needed. The credit instantly appears as hypothetical EHKD minted securely by Fubon Bank using the Ripple CBDC platform, each being worth $1 Hong Kong and can be used immediately. A part of the money is used as a deposit for Ying's son's down payment on a new home. The rest of the loan can be used to finance his daughter's last year of university. Ying turned his home equity into credit to be used however he needs, with a few clicks from the comfort of his own home, without hoops to jump through, without annoying paperwork, without needing to travel, visit, and consult multiple third parties. And as the hypothetical EHKD ecosystem grows, so will benefits from the trend, from increased productivity to time saved and lower cost per transaction, to eventually seamless exchange of hypothetical EHKD as a CBDC all over the world. That's the exciting potential of hypothetical EHKD. Unlocking your home equity is only the beginning. Being able to send and spend money how you want, where you want, without burden. That's the real power. And that's the vision of the future Fubon Bank, Ripple, and partners are exploring under the HKMA's EHKD pilot program.
Everyone has their own way to innovate and make breakthroughs. Taking a break doesn't mean slacking off. Work smart, and it's amazing how much you can easily get done. Finding overseas markets difficult to grasp? With the right partner, anything is possible. Technology changes fast. We make sure the latest information is always at your fingertips. At BOCHK, we understand that innovation comes from expanding what's possible. Through agile use of technology, we connect you closer to your ambitions. Understanding brings us closer. Bank of China, Hong Kong.
I can fix this. Let's start with this pencil. I'm gonna get his help with this chocolate.
Little Glenn always saw past problems, uncovering hidden value to see if they'd become better things altogether. At Standard Chartered, we're the same. When it comes to wealth, we see beyond the obvious. Benefit from our global research capability, unparalleled wealth analysis, and expertise by INSEAD-trained relationship managers. Come talk to us today. Standard Chartered Priority Banking.
We're not writers, but we help you shape your financial story. We're not an airline, but our network connects global businesses across nearly 160 markets. We're not a startup, but our innovation labs use new technologies to help keep your information secure. We're not architects, but we help build stronger communities. We're not just any bank, we are Citi.
Why should we trust these guys? Why do we continue to pay them to use what's ours? Why should we stick to the broken ways when we now control how to buy, sell, and trade what's ours? Even that. Why do we just accept that companies will do whatever they want with our data? Why don't we change everything? The system doesn't need an update. It needs a rewrite.
We're often asked how DBS became the world's best bank. It's simple. We believe banking has a higher purpose, so we set out to innovate and serve you better by being a different kind of bank. Learning to think and act more like a startup, more like a friend, more like a business partner, and less like a bank.
opportunities. Convenience, security, and empowerment, a higher efficiency for business. For Hong Kongers like Ying, this is what the hypothetical digital Hong Kong dollar, or EHKD, may represent. A central bank digital currency, leading to accelerated and simplified traditional financial processes to speed up money flows with less resistance and cost, benefiting buyers, sellers, and the economy at large. Processes that take weeks of paperwork between third parties will be completed almost instantly in a few clicks. As part of the EHKD pilot program, Fubon Bank, Ripple, and partners have spent months developing a faster way to unlock home equity and turn it into credit through a home equity line of credit loan, or HELOC loan, dramatically shortening the application process. It starts in the Fubon Bank online portal. Ying sees his currently mortgaged properties, picks the one he wants additional credit on. Fubon Bank already pre-qualified the amount of equity Ying can realize based off the property value and criteria such as income, credit history, prepayment history, and other information. Ying reviews the offer and terms, then confirms. The bank's interest in the mortgaged property, the lien, is tokenized safely and transparently on the blockchain ledger. This token, once deposited in the lending protocol vault, activates Ying's ability to borrow. He just decides how much credit he wants, and in his vault dashboard, details around asset and liability update in real time. From LTV, interest, repayment terms, asset liability, total loan amount, it's all there. Quick transparency into personal finances, making it easy to budget costs if a bigger loan is needed. The credit instantly appears as hypothetical EHKD minted securely by Fubon Bank using the Ripple CBDC platform, each being worth $1 Hong Kong dollar and can be used immediately. A part of the money is used as a deposit for Ying's son's down payment on a new home. The rest of the loan can be used to finance his daughter's last year of university. Ying turned his home equity into credit to be used however he needs, with a few clicks from the comfort of his own home, without hoops to jump through, without annoying paperwork, without needing to travel, visit, and consult multiple third parties. And as the hypothetical EHKD ecosystem grows, so will benefits from the trend, from increased productivity to time saved and lower cost per transaction, to eventually seamless exchange of hypothetical EHKD as a CBDC all over the world. That's the exciting potential of hypothetical EHKD. Unlocking your home equity is only the beginning. Being able to send and spend money how you want, where you want, without burden. That's the real power. And that's the vision of the future Fubon Bank, Ripple, and partners are exploring under the HKMA's EHKD pilot program.
Everyone has their own way to innovate and make breakthroughs. Taking a break doesn't mean slacking off. Work smart, and it's amazing how much you can easily get done. Finding overseas markets difficult to grasp? With the right partner, anything is possible. Technology changes fast. We make sure the latest information is always at your fingertips. At BOCHK, we understand that innovation comes from expanding what's possible. Through agile use of technology, we connect you closer to your ambitions. Understanding brings us closer. Bank of China, Hong Kong.
I can fix this. Let's start with this pencil. I'm gonna get us help with this chocolate.
Little Glenn always saw past problems, uncovering hidden value to see if they'd become better things altogether. At Standard Chartered, we're the same. When it comes to wealth, we see beyond the obvious. Benefit from our global research capability, unparalleled wealth analysis, and expertise by INSEAD-trained relationship managers. Come talk to us today. Standard Chartered Priority Banking.
Connections. For over 200 years, they've been Citi's business, from connecting oceans and continents by helping finance the Panama Canal, to today, where we're still making our most important connections, people. We connect security and innovation, all to help drive growth. Our global scale connects businesses to over 160 markets, and today's ideas with tomorrow's opportunities. For the love of moving businesses forward, for the love of progress. Citi.
We're often asked how DBS became the world's best bank. It's simple. We believe banking has a higher purpose, so we set out to innovate and serve you better by being a different kind of bank. Learning to think and act more like a startup, more like a friend, more like a business partner, and less like a bank.
Opportunities, convenience, security, and empowerment, a higher efficiency for business. For Hong Kongers like Ying, this is what the hypothetical digital Hong Kong dollar, or EHKD, may represent. A central bank digital currency, leading to accelerated and simplified traditional financial processes to speed up money flows with less resistance and cost, benefiting buyers, sellers, and the economy at large. Processes that take weeks of paperwork between third parties will be completed almost instantly in a few clicks. As part of the EHKD pilot program, Fubon Bank, Ripple, and partners have spent months developing a faster way to unlock home equity and turn it into credit through a home equity line of credit loan, or HELOC loan, dramatically shortening the application process. It starts in the Fubon Bank online portal. Ying sees his currently mortgaged properties, picks the one he wants additional credit on. Fubon Bank already pre-qualified the amount of equity Ying can realize based off the property value and criteria such as income, credit history, prepayment history, and other information. Ying reviews the offer and terms, then confirms. The bank's interest in the mortgaged property, the lien, is tokenized safely and transparently on the blockchain ledger. This token, once deposited in the lending protocol vault, activates Ying's ability to borrow. He just decides how much credit he wants, and in his vault dashboard, details around asset and liability update in real time. From LTV, interest, repayment terms, asset liability, total loan amount, it's all there. Quick transparency into personal finances, making it easy to budget costs if a bigger loan is needed. The credit instantly appears as hypothetical EHKD minted securely by Fubon Bank using the Ripple CBDC platform, each being worth $1 Hong Kong dollar and can be used immediately. A part of the money is used as a deposit for Ying's son's down payment on a new home. The rest of the loan can be used to finance his daughter's last year of university. Ying turned his home equity into credit to be used however he needs, with a few clicks from the comfort of his own home, without hoops to jump through, without annoying paperwork, without needing to travel, visit, and consult multiple third parties. And as the hypothetical EHKD ecosystem grows, so will benefits from the trend, from increased productivity to time saved and lower cost per transaction, to eventually seamless exchange of hypothetical EHKD as a CBDC all over the world. That's the exciting potential of hypothetical EHKD. Unlocking your home equity is only the beginning. Being able to send and spend money how you want, where you want, without burden. That's the real power. And that's the vision of the future Fubon Bank, Ripple, and partners are exploring under the HKMA's EHKD pilot program.
Everyone has their own way to innovate and make breakthroughs. Taking a break doesn't mean slacking off. Work smart, and it's amazing how much you can easily get done. Finding overseas markets difficult to grasp? With the right partner, anything is possible. Technology changes fast. We make sure the latest information is always at your fingertips. At BOCHK, we understand that innovation comes from expanding what's possible. Through agile use of technology, we connect you closer to your ambitions. Understanding brings us closer. Bank of China, Hong Kong.
I can fix this. Let's start with this pencil. I'm gonna get his help with this chocolate.
Little Glenn always saw past problems, uncovering hidden value to see if they'd become better things altogether. At Standard Chartered, we're the same. When it comes to wealth, we see beyond the obvious. Benefit from our global research capability, unparalleled wealth analysis, and expertise by INSEAD-trained relationship managers. Come talk to us today. Standard Chartered Priority Banking.
We're not writers, but we help you shape your financial story. We're not an airline, but our network connects global businesses across nearly 160 markets. We're not a startup, but our innovation labs use new technologies to help keep your information secure. We're not architects, but we help build stronger communities. We're not just any bank, we are Citi.
Why should we trust these guys? Why do we continue to pay them to use what's ours? Why should we stick to the broken ways when we now control how to buy, sell, and trade what's ours? Even that. Why do we just accept that companies will do whatever they want with our data? Why don't we change everything? The system doesn't need an update, it needs a rewrite.
We're often asked how DBS became the world's best bank. It's simple. We believe banking has a higher purpose, so we set out to innovate and serve you better by being a different kind of bank. Learning to think and act more like a startup, more like a friend, more like a business partner, and less like a bank.
opportunities. Convenience, security, and empowerment, a higher efficiency for business. For Hong Kongers like Ying, this is what the hypothetical digital Hong Kong dollar, or EHKD, may represent. A central bank digital currency, leading to accelerated and simplified traditional financial processes to speed up money flows with less resistance and cost, benefiting buyers, sellers, and the economy at large. Processes that take weeks of paperwork between third parties will be completed almost instantly in a few clicks. As part of the EHKD pilot program, Fubon Bank, Ripple, and partners have spent months developing a faster way to unlock home equity and turn it into credit through a home equity line of credit loan, or HELOC loan, dramatically shortening the application process. It starts in the Fubon Bank online portal. Ying sees his currently mortgaged properties, picks the one he wants additional credit on. Fubon Bank already pre-qualified the amount of equity Ying can realize based off the property value and criteria such as income, credit history, prepayment history, and other information. Ying reviews the offer and terms, then confirms. The bank's interest in the mortgaged property, the lien, is tokenized safely and transparently on the blockchain ledger. This token, once deposited in the lending protocol vault, activates Ying's ability to borrow. He just decides how much credit he wants, and in his vault dashboard, details around asset and liability update in real time. From LTV, interest, repayment terms, asset liability, total loan amount, it's all there. Quick transparency into personal finances, making it easy to budget costs if a bigger loan is needed. The credit instantly appears as hypothetical EHKD minted securely by Fubon Bank using the Ripple CBDC platform, each being worth $1 Hong Kong dollar and can be used immediately. A part of the money is used as a deposit for Ying's son's down payment on a new home. The rest of the loan can be used to finance his daughter's last year of university. Ying turned his home equity into credit to be used however he needs, with a few clicks from the comfort of his own home, without hoops to jump through, without annoying paperwork, without needing to travel, visit, and consult multiple third parties. And as the hypothetical EHKD ecosystem grows, so will benefits from the trend, from increased productivity to time saved and lower cost per transaction, to eventually seamless exchange of hypothetical EHKD as a CBDC all over the world. That's the exciting potential of hypothetical EHKD. Unlocking your home equity is only the beginning. Being able to send and spend money how you want, where you want, without burden. That's the real power. And that's the vision of the future Fubon Bank, Ripple, and partners are exploring under the HKMA's EHKD pilot program.
講翻幾句就得㗎啦，係咪？試翻下聲嘅啫。Hello, testing testing， O 唔 OK？ Hi， 㗎，冇扭㗎。 開始講嘢得。Ladies and gentlemen, thank you for coming back to day 2 of the GBA stage at the Hong Kong FinTech Week. We've got a really exciting afternoon for you. My name is Jane Chan. I head up the Startup Hong Kong team for Invest Hong Kong, and I'm going to be your MC for the rest of this afternoon. So Hong Kong is a financial hub, it's a global financial hub, and it's a long-held center of entrepreneurship. And we're taking significant strides to actually cultivate our own homegrown venture capital ecosystem. To open the floor for us this morning, our first panel will discuss the importance of nurturing local innovation and what local VCs are doing to foster an environment conducive to the growth of startups and VC firms. Ladies and gentlemen, put your hands together for your first speaker, moderated by the chairman of VSFG, Lawrence Chu. Let's welcome W Hub's co-founder, Karina, founding partner of Wings Capital, Jonathan Chu, Xiu Xinyan, Managing Director of Titan Fund, and Cindy Chow, Executive Director of Alibaba Entrepreneurs Fund. Take it away.
Cool.
Here we go.
Great. Welcome, everybody. And again, thank you to the organizers for having us. And love to share a little bit about what our panelists do. My name is Lawrence Chu. I'm the chairman of VSFG. We have a digital asset management license in Hong Kong. And we also do a lot of venture investing, including alternative protein, AI, and of course, digital assets. So I'm going to start off quickly. I asked the panelists a few things before they came on stage. And of course, they have some other things to share, personal things to share as well. So Cindy's been running the Alibaba Entrepreneurs Fund since 2015. I asked them about what they miss, what they love about Hong Kong, what's their cool thing about Hong Kong. And Cindy says she misses the fanfare in the 90s of the mega nightclubs, like Manhattan, JJ, DD2, Green Spot. She also enjoys the convenience of Hong Kong, which is always a 15-minute taxi ride from busy Central to the Tranquil Peak. Yen, who runs the CMCC Titan Fund, his favorite thing about Hong Kong is long open water swims during the weekend. Karina from W Hub Angel Hub, she's done the Moon Trekker, which is a 42-kilometer Lantau up and around Lantau Peak run. She also loves the diversity of Hong Kong with its incredible nature, outdoor activities, and also the fact that the city gives you an opportunity to connect with your passion, which is her running, pushing her limits. She never did a marathon before, but now, of course, she's done it. And then you get compensated for it, which is she says the view at the top of the Lantau Island is a magical surprise. And this also reflects her professional career in Hong Kong, going from a corporate career to becoming a tech entrepreneur. And finally, Jonathan from Wing VC, his favorite aspect of Hong Kong is the local to global. Local fish balls versus Michelin French cuisine, vibrant financial sector that's global versus money changers on the streets, and also the talents and entrepreneurs in Hong Kong, which makes the city also very vibrant. So they also hold a little memento from Hong Kong. So I guess I was asked by the organizers for each of them to tell us why they chose what they chose. So maybe with Cindy, you want to go first?
Yeah, I didn't know that you are going to, review whatever I wrote to you because this shows how old I am. But anyway, so I have chosen the pineapple bun without pineapple, which is a local favorite, and usually we have a piece of butter inside. The reason I choose it is because, as I said, it's a pineapple bun without pineapple. It can, somehow reveal the creativity of Hong Kong people in terms of, and also brand building, how we can brand something, which is right now a really common thing for us to eat at breakfast.
Thanks. And Yen, you want to share with us what you chose?
Sure. So this is a symbol for Bitcoin. We are a Web3 fund, VC fund based here in Hong Kong. And we believe in the digital universe, and Bitcoin is a representation for that. and as such, I have chosen Bitcoin.
Thanks. Jonathan?
So this is egg waffle. Resonates what Lawrence talked about, my favorite thing in Hong Kong, local to global. So besides fishball, the egg waffle also goes global. You can find that in Chinatowns of like New York, San Francisco, LA, London.
Finally, Karina?
Yeah, so actually with Yen we were debating, I wanted to have blockchain as well and Bitcoin because I realized we came full circle last year this time. Bitcoin was less than 20K and now we're at the 34 mark, so which is great. But I mean the closest was the blockchain and obviously a symbol here, Hong Kong with Mahjong and the letter 8, which is very lucky, and Hong Kong FinTech Week runs in its 8th edition, so that's why I chose this bag.
So maybe I'll start with you again, and for all the panelists. So what makes Hong Kong such a great VC hub?
Well, I think what actually Hong Kong makes a great VC hub is the fact that there are still a lot of opportunities, particularly for VCs to come in and to really benefit on making a difference in the growth of the capital markets here. But I think what Hong Kong in general makes it a really great springboard for tech companies to grow is actually its diversity. And that's something that is very often underestimated. But we're a FinTech conference here, but as you probably have seen, we talk a lot about use cases of technology in adjacent industries. And the fact that Hong Kong is so well connected and that these different industries and use cases talk to each other. And just in the context of Web3, we can see that probably gaming and entertainment played a significant role on helping Web3 go mainstream. And from there, all the ripple effects it had into the financial services industry and thinking about regulating the space. I think it's just a fantastic example on why Hong Kong is really a great place for scale-ups, and with that, for investors to come and get great returns.
Great. Well, I think why Hong Kong is a great VC hub, first of all, it's in the heart of Asia. Asia is going to be the growth engine for the global economy in the next 10, 20 years, no doubt. The other thing is when I speak to investors in US, I tell them, look, Asia opportunities will be captured by Asia tech. Why? Because I think in the past couple of years, a lot of the US VC and US VC backed ventures, they got burned. They're cutting down their expansion and retreating back to US. So I think in the next few years, there's going to be a window for Asia tech to capture the opportunity. So Hong Kong is the best place to do that.
Yeah, I second actually all of that. Maybe I also add a bit of numbers to that. Hong Kong is a financial hub, as we know. So I want to talk a little bit about the liquidity and the deep capital markets of Hong Kong. Licensed asset managers, including wealth management, run around $4 trillion out of Hong Kong. Excluding wealth management, $3 trillion. The PE piece is, of course, much smaller, but that is still, for Hong Kong itself, is $200 billion. And that's majority private equity and some venture capital. But if you put that into context, actually, I don't think a lot of regions can rival that. And me personally, in Web3, I consider blockchain also as a financial technology. So being in Hong Kong, which is a financial hub, I think we're well actually situated to capture that. And I think one more thing as it relates to Web3 is that Hong Kong has this unique opportunity now to become, and I am positive that Hong Kong will become a Web3 hub, given that actually you have China that is not allowing cryptocurrencies for the moment. So Hong Kong is the beneficiary of that.
Well, I know this is a FinTech week, but I guess FinTech is not the only sector that we see a lot of opportunities here in Hong Kong. The universities here, 5 of the universities here in Hong Kong is top 100, and among them, especially with Hong Kong U and also CUHK, we see a lot of biotech projects coming out from or spinning off from these universities, which I strongly believe will provide a lot of opportunities for VCs in the region. And this is one thing. And then the other thing is we are at the GBA stage. So GBA, I also strongly believe will provide a lot of opportunities for VCs to look for the next gem in the area.
given that there are a lot of good policies in different cities of the GBA to attract talents to stay there. And also the upcoming River Loop, the Shenzhen and Hong Kong and Shenzhen Science Park is also a very good opportunity for startups to work with corporates and be able to really build up an ecosystem there to attract capital to come to Hong Kong.
Thanks. I was going to ask a little bit about that because I think the audience would like to know a little bit more about Hong Kong and the GBA role. So I think Cindy well eloquently put that in place. And I guess, Jonathan, do you have any extended views on that, given your experience in sort of not just in Hong Kong but around the Greater Bay Area?
Well, I think, first of all, Greater Bay Area includes Hong Kong, so we obviously can benefit from the entire GBA growth. The other thing is when I traveled to different parts of mainland China, when I was doing China PE, I think in the past 10, 12 years, I noticed China is a really big country and people do have different culture and dialects and cuisine. So I think GBA itself is very close to the Hong Kong market versus, say, Beijing, Shanghai. I would say it's just maybe 70% similar, but not entirely the same. So I think the opportunity here, it's mainly from GBA, I think in the next couple of years.
Thanks. So I guess there's this GBA extension, which is beneficial to us. And Yen, you mentioned there are things that we can do here that we can't do in China, which is another kind of added benefit. So maybe elaborate on the Web3 side. I'm going to poke you guys a little bit and ask you, if you had a magic wand and ask the government or whatever it was to allow you to change something to make the venture capital community better, what would it be? It could be obviously related to what you guys do specifically, but obviously FinTech, Web3. So I'm interested to find out what would you change or do to make it a better hub in Hong Kong?
Yeah, maybe I can start. So I think the government, as you all know, has been very, very proactive and very supportive of the growth of the Web3 ecosystem. And I think the policies overall align with, I think, the intention, and we are on our way. I think where we'd like to see from a capital provider a little bit more support is that if the government could actually have some dedicated vehicles, maybe it is the new investment fund, but dedicated towards Web3. And I know Hong Kong has a co-investment program. I think it's the Hong Kong VCTF. IVTF. And if they could have a dedicated program for Web3, I would very much appreciate that. And secondly, that's more around culture. We have great real estate and accelerators in Hong Kong Science Park and Cyberport. I think the policies are right. What I would love to see a little bit more is maybe for them to mix and maybe work with some, I would say, market practitioners and get a little bit more an entrepreneurial culture in those facilities. But overall, it's basically the policies are right. Maybe some of the execution can be done a little bit more in an entrepreneurial manner.
Thanks. And I want to double click a little bit onto that and maybe do a bit of a comparison. So maybe Karina, you can share with us. I know a lot of people, aside from just GBA Hong Kong, we always get compared. What about Singapore? What about Singapore and Hong Kong, or Singapore and GBA and plus Hong Kong? So you want to share some thoughts on that?
Of course, and of course, those who know us, we're very, very bullish on Hong Kong. But I think, first of all, it's always important to mention it's not either or, right? It's and. It is Singapore and Hong Kong. I think the sequence is very often important, where companies should think about the advantages. And I think also a little bit building on what you say, maybe teasing what should be next from Hong Kong government or Hong Kong as an infrastructure. I do agree on the funding piece, right? But let's face it, I mean, governments are not the best investors, right? There's a reason why the VC industry exists. But there's one thing with bringing more funding into the scene is it's a sign of trust, right? When governmental money is available, it's a clear sign and signal from the government that this is an industry, this is an area that is growing and that is important for the economy, which it is, because you think about 80% of a P&L of a startup probably are salaries, so you're basically just reinvesting it back. But I think another point, I think, which is even much more important is, because again, if it's constantly government backed, it will not really explode. And I think what governments are really here to play a role is the regulatory and legal framework, and particularly when we're talking Web3, particularly when we're talking FinTech. I think driving this clarity, being able to advance, to have the dialogues, and something we started in 2019, actually here at FinTech Week, with context points being put in place, and now HKMA and SFC, actually, we heard it so many times here at the conference, being on the forefront on the global level of driving regulatory clarity. I think that is something we continuously need to push forward, bring the entire ecosystem in. So certain areas are just for professional investors only to contribute, but if we can help really bring the entire ecosystem on, I think that is where we see the key importance.
Jonathan?
I guess I'm going to double click on the funding part. So if you look at the government funding, a lot of them go to Science Park Cyberport. And then with the HKIC, a lot of them go to later stage VC investments. But the middle part, sort of like A round, pre-A or A+, there's not much government funding, which is where our fund operates, and it's good with this opportunity. But on the flip side, I think there may be a sustainability issue. When you give the big bucks to larger funds who may not be doing VC to start with, and when government funding stops, will they do Hong Kong VC on their own? Is a question mark. We don't know until 5 years later. And if they don't, then the money we're spending now is sort of not sustainable. If we look at Singapore, they do it differently. They don't have something like Science Park or Cyberport. Instead, the government of Singapore is spending on local accelerators and local VC funds. So after 5-7 years, now we're seeing pretty successful and regional scale accelerators and VC funds from Singapore. So I think that's something our government can take a look and think about. Not necessarily better or worse, but I think it's something they can take a look.
I'm going to switch gears a little bit, but along the similar lines, maybe with Cindy, because I wanted to talk a little bit about your model. Because it's not just a straightforward venture fund, but you have kind of different objectives in what you do. Kind of following on what Jonathan said, can you share a little bit more about the fund and kind of the objectives that the fund has?
Yeah. So we are like any VC fund, so our objective is really to have financial returns, but then with the caveat that we will support mainly Hong Kong and also GBA entrepreneurs. So either it is based in the region, or we also invest into companies outside of Hong Kong or GBA, but the majority of the founders should be from Hong Kong. The reason is because the group pledged the money to set up this foundation, mainly to really help to Hong Kong young people and also the economy as a whole. And that's why every year we also on the side, besides the fund, which is financially or just like any financial investors, we also have another pocket to do more community preaching type of events, which is called Jumpstarter. And indeed, we are going to have the Jumpstarter event next week, starting from the 8th. Until the 19th, and the key days will be the 16th to 19th, which this year is going to be held at the Harbourfront in Tsim Sha Tsui. So hopefully you guys can join us. We have lined up a very good lines of speakers. And also the backbone of this event is a global pitch competition. And we every year receive thousands of applications from around the world to pitch for investments or business opportunities. And we also, so this year we will bring in the top 30 startups from around the world to pitch on stage. And we also bring in startups from Africa, Middle East to come to Hong Kong. What my vision is as a financial hub, as the other speakers have mentioned, I hope that Hong Kong can also become a hub for all the startups to come to do fundraising. So previously, if you ask a startup, let's say from Singapore or the Middle East, where will you go for your next bigger check? I am sure 90% of them will talk about Silicon Valley. So I hope that one day, with all the efforts that everyone in the ecosystem is doing, we will be able to really establish Hong Kong as a hub for startups to raise around the world to raise the next check.
Thanks. And Karina, also, you run a slightly different model as well. So I want to listen to your thoughts about Angel Hub and what is kind of the model there, as it's, again, a different approach to venture investing and supporting our startup community?
Yeah, absolutely. I mean, we always come with W Hub already into the ecosystem on trying to really make a dent and making a difference. And so looking just at the fundraising ecosystem, I mean, it used to be a cottage industry, right, and very exclusive. So access definitely is a problem and know-how. And what we said, if we really want to make sure that we bring more capital power to the scene, we need to open it up. So similar what we have done with W Hub for the ecosystem when it comes to recruiting and all of that, was really making that same difference in the funding industry. So instead of saying, okay, we have been in the space for long enough to make money out of it, why don't we share? Why don't we share the fact of being able to support and back entrepreneurs and also get the financial returns out of it? And so with that, Angel Hub is indeed interesting because it still offers traditional investors to come along in our fund that is there to co-invest on the deals on the platform. But at the same time, each and every deal is made available on the platform for you to build your very own portfolio strategy. And we diversify across stages between Series A to a later stage, Series C deals. So also to cater to your risk appetite, but at the same time looking into FinTech, into Web3, and into ESG empowered solution. So you can start really putting also your money where your passion is. I think one of the things also with particularly the younger generation, we feel it's much more about just the pure financial return. You know, people want to put their money where their passion is and really support their passions with hard bucks. So we did not invent the model of equity crowdfunding, but we're really proud that we brought it here to Hong Kong and became the first licensed entity to do that. And we can see more and more people really coming on board, and it becomes, we say, investing now becomes a true passion that should be shared.
And quickly, one more thing to highlight, I guess, the audience itself, whether it's also the government that we're trying to communicate with. Maybe Yen and Jonathan can talk about some of the other challenges you feel that the city or the region has when it comes to, especially from a VC. We all know entrepreneurs have a lot of challenges, but these guys who invest their time and resources also face a lot of challenges. So again, what are some of the challenges you see as a VC?
Yeah, I think for Web3, the situation is a bit different from general VC. Web3 in general, the audience, people, investors are more decentralized. Hong Kong has always been a hub for Web3. A lot of the early big unicorns exchanges started in Hong Kong. So I would say we are a little bit spoiled being an investor here compared to maybe some of the other categories. But what I still personally would love to see more are companies coming here, starting companies, and staying here as well. I understand a lot of the markets for traditional VC are always, of course, outside of Hong Kong. And for Web3, it's more decentralized. But I would love to see more companies coming to Hong Kong to build and believe that Hong Kong is the right place to run their companies. We have invested recently in Animoca in the latest Mochaverse project. So Animoca we have high conviction of. We also recently invested in Gary Liu's Terminal 3 company. So we are very much here to support the Hong Kong ecosystem. We want to meet more companies, and I think the policies are conducive for that to happen. And so in that respect, I think it's more, I would say, actual builders.
I think the government has done some great things in the past, say, few years on a few fronts. Like first of all, the funding to the ecosystem. Secondly, attracting talents and top technology firms from international regions. But I think the other thing is because this is FinTech Week, my fund is also focused in FinTech. What we see is that banks and insurers are much more willing to adopt FinTech. I think the business pain point was obvious. The reason why they did not was very much because of regulations. But what we heard from the market is the regulators are actually pushing the market participants to adopt digital solutions. Now, this is a bold steps. We welcome more and more bold steps in the future. Just now, I bumped into a friend, and she was telling me about the UK crowdfunding ecosystem, and she would love to have this kind of crowdfunding in Hong Kong. I shared with her that it would be great, but I think the SFC might be a little worried about the protection to retail investors, etc. So maybe this is something they can regularly review, not necessarily change it now, but they should keep that in mind.
Got it. So we're wrapping up here, and maybe an opportunity for each of you to shout out and shill latest project or a team that you're proud of. So maybe with Karina.
Well, first of all, I'm really proud on having the world here again back in Hong Kong to Hong Kong FinTech Week. But on the investment side, we're very happy to expand also geographically, because I think one of the powers is really on bridging different ecosystems with each other. So stay tuned for news on Angel Hub, and we will probably have the news about the recent fundraise we did in that context soon in the press.
Jonathan?
We look at about 50 opportunities in Hong Kong every quarter. So at least we will do 1 to 2 investments. So stay in touch with us, and you will learn about what kind of companies we like and we'll invest in.
Yeah. Our fund is very new. We just announced our first close. We raised $100 million in this environment, which we are very proud of. And we just recently invested in 2 Hong Kong companies. One is Animoca's latest project, as well as Terminal 3. We are big believers in Hong Kong. Please come to see us, and we'd love to talk more.
So I think I have stolen already a lot of advertising ad just now in Jumpstarter. So I won't take up any more time, but please do visit the Jumpstarter website and take a look. There are a lot of happenings around next week and the following week, and I hope to see you there.
So I take away that we have a unique position in the GBA because we're next to the GBA. There's certain things that we can do in Hong Kong that perhaps we can't do in China. It's a great place to be, as well as helping the government think through funding and programmatic way of growing the venture ecosystem to then attract more entrepreneurs and more projects to raise capital and thrive here and beyond. So with that, I want to thank my panelists, thank the organizers, and thank you, the audience, for tuning in. Thanks.
Thank you. Thank you so much. Thank you, Cindy, Yen, Jonathan, Karina, Lawrence, for fantastic discussion on building Hong Kong's VC landscape. So from talking about funding, we're going to move into one of the passion projects that Karina mentioned, which is the area of ESG. And today we've got a crucial discussion on the sustainable growth of fintech innovation, and where we want to strike a balance between the emergence of new technologies and also the demands of environmental, social, and governance ESG requirements. In this session, our panel of experts will talk about how fintech is evolving with ESG goals and how that is being used to mitigate risk and also foster a more sustainable financial landscape. Let's welcome to the stage the COO of YetPlay, Herbert Seal, MealTech co-founder and CEO Jason Tu, Matthew Toomey, co-founder of Sustainable Bitcoin Protocol, and conversation with Blake Blakeney from Franklin Templeton. Thank you.
Thank you. Good afternoon, everyone. Hope everyone's doing well. I'm very happy to be on this panel with Herbert, Matt, and Jason. So maybe Herbert, I know we only have about 25 minutes, so we're going to keep it moving quickly. But Herbert, could you take a minute, please, and introduce yourself?
Yeah, sure. Thanks, Britt, and thanks WHub to invite me on the stage. And super excited to share the stage with Britt, Jason, and Matt. A bit of my background: I previously worked in deal development, also JP Morgan, M&A, Microsoft, and FinTech venture capital firms in London. Previously I worked in WGO, World Green Organization, ESG Accelerator. And right now I'm being with YetPlay for the CFO, with the CFO positions. To me, actually, green fintech will be a bright future with the blessing of HKMA, Hong Kong government, and HKSFC. So, super excited. Stay tuned. And I know that actually Invest Hong Kong will actually launch a green fintech roadmap next gen. So, stay tuned about that.
Great. Thanks, Jason.
So my name is Jason Tu. I'm the founder and CEO of MealTech, and we are by far probably the largest sustainability/ESG data and SaaS company. We help financial institutions by supplying them with data for ESG analytics of their portfolios, risks, returns, etc. And we also work with many corporations from large to small to help them manage their internal ESG data collection or supply chain ESG data collection. And we've been around for 7 years, and we're proud to be a homegrown Hong Kong company. Now we have around 400 employees across the globe in Greater China, in Southeast Asia, and also in Korea and Japan.
Great, that's amazing growth. Congratulations. And Matt?
Hi, yeah, my name's Matt Toomey. I'm the co-founder of Sustainable Bitcoin Protocol. We're a climate tech solution for Bitcoin, and we financially incentivize Bitcoin miners to choose renewable energy and then create a solution that a ESG sensitive investor can own Bitcoin for the first time in a sustainable manner. My background came out of TradFi. I was 17 years at Deutsche Bank and Goldman Sachs, and then had a couple of years at OSL as well.
Great, thanks Matt. Herbert, let's start with you. So just to set the stage a little bit, can you provide an overview of green fintech and its core principles and how it differs from traditional fintech solutions?
Yeah, sure. There's a lot of taxonomies in green fintech right now, but then I think the one who get the most market consensus will be the one latest report from the Swiss Green Fintech Network. So they divide green fintech as technology-enabled solutions involved in finance, processing, and end product with the intention to support the sustainable development goals or reduce the sustainability risk. So I think this actually set the stage of what is like green fintech. And there are lots of like different categories in green fintech. So we talk about green bonds, sustainability financing all the time, but actually there's like more categories that could contribute to green fintech. Like for example, green digital payment, accounting solutions, like green assets, like green investment, insurtech, regtech, ESG, data and risk analysis, and also like crowdfunding, syndication platform, and digital lending and deposit as well. So there's different kind of like green fintech that could like happens in the markets, except for just like bonding, like green bonding.
Okay, great, thanks. And Jason, what stage would you say the industry is in terms of ESG and sustainability?
We work with, so MuTech works with a lot of financial institutions and corporations. And guess what? When we asked most of our clients whether you want to adopt some sustainability or ESG solutions, most of the time the first answer is yes, and the second answer is how. We don't even have any data available. So that's where the industry is at this stage. Many of the large corporates, and including financial institutions that we work with, they want to do something in sustainability, but they don't know how. And often I've spoken about this in numerous occasions and events that I think there are only 3 core reasons why a large corporate would adopt sustainability measures. One is because of regulation. If the regulator asks you to do so, you have to do it. Second is because of supply chain. So if your downstream client asks you to do it, then you have to do it. And third one is capital market or the money. So the investors, bankers, or the capital market. So if you get a better valuation, or if investors or bankers ask you to do it, then you have to do it. So I think these are the 3 core reasons that is propelling and pushing the industry forward right now in terms of the adoption of the ESG and sustainability. And in each one of them, I think technology can play a very big role for data analytics and data management.
I agree, and I think many times too it's customer driven as well.
True, yeah.
Because they want a lot more transparency now of what they're investing in, who they're working with, really getting to know the company's principles and where they stand as well. So yes. I think it helps from both sides.
Yep.
Push and pull. Yeah. So Matt, given that, do you think new technologies can really help investors and corporations meet their ESG requirements, and how do you think that can happen?
Yeah, I think in that sense, you're seeing AI as such a key feature of a topic today, and AI is probably going to revolutionize also the sustainability analytics that investors are going to be using when they're making investment decisions. From data analytics and analysis, being able to use those tools is going to accelerate a broader data set for any company that's looking to meet their ESG requirements. You're going to see ESG disclosures, again, corporates have a huge amount of ESG requirements and disclosures that they need to meet. New technologies in AI is going to be able to assist with that. And then ultimately, from an impact and from a risk analysis assessment, you'll be able to see companies like Jason's at Myotech, understanding the data, being able to then make better risk assessments. The blockchain data is fully transparent, immutable. The conflict of interest or the potential headline risk are removed because of this consistency of data and transparency of data. Means that technology is going to be embedded within sustainability and ESG, and it's going to be a key feature going forward.
Yeah, agree. So Herbert, back to you. So specifically to your company, to YedPay, in what ways do you think payment solutions such as yours play a significant role in supporting green fintech initiatives? And how can they contribute to promoting sustainability and driving positive environmental impact for the sector overall?
Yeah, sure. Thanks, Britt. Actually, like payment industries actually got a different kind of like contributions to the green fintech. Like for example, so yesterday, like Eddie from HAMA talked about like eCNY and digital wallets and eXAD. That's definitely one of them. And then central bank digital currency. And in the payment industries, we actually there's a different new technologies popping up. Like for example, there's like in every payment transactions, like some firms is already actually doing some carbon footprint accounting. Like say on the user perspective or in the business perspective, whenever you pay or do some transactions, we have the carbon footprint actually inside printed on the transaction. So on your monthly bill, you can actually see how many total carbon footprint you are actually consuming actually by the end of the month. So this could apply to both the user and the industries like on the business side. So one example is actually Alipay actually, they actually launched a program called End Forest like back in the years, like in 2016. So they actually encourage some kind of like low carbon kind of like lifestyle for the users. So whenever actually they promote actually some kind of using public transportation, you're purchasing some high efficient home appliance, and also like doing electronic bills like rather than actually using checks, something like that. So reduce the use of carbon, and then from that perspective, you can actually earn some green points. And then using that green points, you can actually use for some like tree plantations all over the world. So for now, since the launch of the program, they have already planted 300 million plus like trees all over the world. So YedPay is actually like actively investigating, partnering with other like industry experts and vendors in doing some like carbon accounting and footprint on the transaction for the payment, and also maybe like on the water and plastic footprint as well. So we can give an overview for business and the individual, the whole like carbon consumptions, and hopefully we could contribute something to Hong Kong and China on the carbon neutrality targets.
Excellent, thank you. And Jason, back to you, building on kind of what Matt was saying about AI. So how do you think specifically AI and new technologies can really play a role in the adoption of ESG? And maybe you could give an example or two.
I just want to quickly go back to Herbert's comment about End Forest real quick, because we have an equivalent version in China. And I think we can talk about that later. We have 3 million registered users and a very active group. But I think individuals are a very important group that is really, driving the adoption of sustainability. But going back to AI, to quote one of our customers, it's a top kind of bulge bracket investment bank. One of our customers actually once told me that ESG is anything other than financial statements. So basically, there's a traditional financial statements, and any data that you gather from any angle about a corporate, about a project, about an investment, can be classified in one way or the other, one of the ESG categories. So that tells you the scope of ESG and the scope of the data that a corporate or a financial institution needs to manage when it comes to ESG. So how do you manage that data? There's the data being updated, being collected on a daily basis. And that's where AI can play a very big role in terms of what we call data governance. So to govern, for a corporate to govern their financial data is already a challenge. You need to, for example, you get your daily expenses, reimbursed from the company, as teeny tiny as that. Yeah. But when it comes to ESG, it could be your utility bill, your your HVAC systems. It could be about your labor policy. It could be practically anything. So how do you build a system that can automatically collect, cleanse, manage your data, and report it according to global standards, and then being analyzed according to industry benchmarks? So that looks like a simple task, but it's quite complicated. And we've put a lot of, starting from IoT to, for example, NLP, natural language processing, to all the kind of a cutting edge ChatGPT, OpenAI, and Gen AI. We've applied all these technology to help financial institutions and corporates to automate this data governance process.
Great. Okay. And Matt, back to you. Of course, Bitcoin, everyone knows that it's gotten criticized for high energy consumption. There have been a lot of issues around that. And so how can that be done in a more sustainable way, and how can we focus on that, and how is your company focusing on that to grow Bitcoin in a more, or other cryptocurrencies in a more sustainable fashion?
Yeah, we recognized that was going to be an issue, a couple of years ago when the narrative was very, very negative about Bitcoin. We sit at an interesting apex of Bitcoin, ESG capital, and sustainability. And we recognize that the Bitcoin miners at that time, there's a key energy decision that they need to make, whether they choose for fossil fuel or they choose for renewable energy. And in this world, we all operate on the basis of incentives. So the miners needed to have a form of financial incentive to be choosing renewable energy. Now, kind of fast forward to today, you've seen a number of the mining and large mining players who are NASDAQ listed are now opting to choose renewables. We work with about 15% of global hash rate at the moment. And obviously the pressure in terms of that negative narrative is slowly starting to change with better transparency and better data. And that's probably been the real weak spot in terms of this story. There hasn't been the data to back up the mining behavior. Obviously we're trying to help solve for that. There's other bodies out there that are also assisting, and you're starting to see the story being told in Washington D.C. It's in front of regulators, and it's coming with an additional regulatory framework, which ultimately is going to be helpful for these miners who are choosing renewables and choosing to help that renewable energy development. And that's where Bitcoin can actually be an incredible power for good from a renewable energy standpoint. That if it is a key consumer and a large consumer of energy, if the energy choice is renewables, then suddenly it can be supporting more and more renewable energy development. Crucially, it can help with an energy grid that may have intermittency because of the renewables. We all know that solar and wind are not a 100% renewable source, whereas Bitcoin can consume, or the Bitcoin miners can consume more energy at peak times, can also give back more energy at low times. And they have the ability to stabilize the grid in a unique way that no other industry have, because they have the capacity to turn off the machines in a second, versus other industries which the lag time to that can sometimes be days, weeks, or even months. So Bitcoin sits at a really unique place in that situation, and the narrative has been fairly misunderstood, but you're starting to see the narrative change. Recently you had KPMG coming out with a Bitcoin piece that talked about it as an ESG asset. As I said, the data now is being collected where they believe around about 30% of the Bitcoin network is from renewables. And a key component to that is these Bitcoin miners, who are effectively like data centers, are geographically agnostic. They can go to sources of renewable energy where traditionally they've been stranded, or they've had lost capacity, and they can plug in Bitcoin mining machines, and suddenly that lost energy can now be plugged into something which is going to be producing an asset, and that asset then is going to be produced back into more renewable energy development in that geography. So I think over time, and you're starting to see that narrative change, but we firmly believe that you're going to see large asset managers who are going to be wanting to get exposure to Bitcoin, because not so much just from the upside that Bitcoin can offer, but also that it meets their or exceeds their ESG guidelines, and Bitcoin can sit as an ESG asset in the future.
Interesting. So if I can ask maybe a couple follow-up questions, because I'm not that close to this industry, but I think it's so interesting. So, can you actually track which Bitcoin that's been mined is like from a renewable source and one that's not? Because it's all about transparency, right?
Yeah, look, you can. I think of the initial kind of thoughts of how do you solve for this problem. There was consideration of do you try and tag that it's become a green Bitcoin? Yeah. And we realized that one of the strengths of Bitcoin is it's fully fungible.
Yeah.
It's fully fungible in price, but it's also fully fungible in terms of its climate footprint. So trying to tag something, as soon as it went into the marketplace or onto exchange, that fungibility was lost. So the way to try and solve for that is leaning on some existing already well-established industries like the energy market, where an electron that you consume, you don't actually know if that's come from a sustainable source or a non-sustainable. Yeah. And they have an adoption called a renewable energy certificate, which allows corporates and Fortune 500 to say that we are using 100% renewable. Yep. We've evolved that into Bitcoin and have created what's called a sustainable Bitcoin certificate that effectively plays the same role as a REC, but allows for the fungibility of the Bitcoin to remain, but an investor be able to pair their Bitcoin with a sustainable Bitcoin certificate to make it a legitimately sustainable holding.
Interesting. So then that certificate would stay with the Bitcoin.
Correct, yeah. It can stay with the Bitcoin. In this sense, it can also be decoupled and recoupled, because the certificate that sustainable Bitcoin certificate is also fully fungible as well. Yeah, that makes sense. And that crucially allows an investor to be able to change their investment decision, whether it's to rebalance or divest. Interesting. And as opposed to say, a carbon credit which you purchase, we write down to zero and it's a sunk cost.
Smart, very interesting. Interesting. So this has a real impact for the bottom line on the companies as well.
Yeah, exactly. And you're starting to see the evolution of real-world assets come onto chain, and that's also coming into the crypto space as well. Yeah. And this is an evolution of that into like a sustainable real-world asset.
Yeah. Great, interesting. So a few minutes left, but maybe Herbert, could you tell us a little bit more about sort of the landscape as you see it, and any maybe interesting players even that you've run into here? Like where are you seeing the industry going, and what are some interesting examples that you've seen?
Yeah, sure. So I think like green fintech is, I personally believe there will be a bright future for that, because like Invest Hong Kong, as I mentioned before, they will have the campaign to launch green fintech roadmap next year. And then the Hong Kong MA SFC is actually have different kind of regulations actually on this area, like apart from like just green financing and sustainability, the green bond and green financing. And I think actually right now what the industry needs the most is actually the funding. So funding is always tough for green fintech, because like for industry players or commercial players, it's always actually involved maybe some extra cost for that. So if government could do something more about like maybe funding some startup, or maybe do more like implementations of the technologies, that would actually help the industry a lot. And then I think for the, also actually, I think it has to be like done from the like international or country perspective, set the standard, and the government, they will actually adopt it and then set the framework, and then do more funding support and then implementation support or directions to the startup or green fintech kind of like companies. Then it will be actually much more easier for them actually to follow suit and then like to grow in the next decade or so.
Mm-hmm. Great. Okay, so I think we've just got a few minutes left. So maybe, Jason, could you start?
I was going to counter-argue that the most important thing is actually, the biggest support that we need is actually talent.
Yeah.
I think besides funding, I think especially for MioTech, we operate at an intersection of sustainability, finance and technology, and AI. Mm-hmm. So you put these screeners onto any resume database.
Yeah.
Practically, you don't have anyone left after screening for these three criteria. And especially for Hong Kong, I think it's hard to find talents at the intersection of the three: technologies, finance, and sustainability. So I would hope that,
well, maybe you'll find some talent right here.
Yes, we really think that, I think the finance minister here in Hong Kong also said that Hong Kong needs to be a green finance hub.
Yeah.
I think in order to achieve that, Hong Kong really needs to cultivate a talent base that knows all three that I've mentioned, technology, sustainability, and finance.
Yeah, that's right. You have to have the three together.
And also, just one quick point about what Matt mentioned about carbon credit and RECs, renewable energy certificates. So MioTech is also a carbon credit or carbon asset developer. I think potentially There's a lot that the carbon credits can also be tokenized. At the same time, I think carbon credit can be a very good, promising instrument in the future to help not only offset but also bring more liquidity and more innovative ideas into the industry to decarbonize the entire industry. I think that there's a lot that we can do together.
Absolutely, no, I was thinking that. Yeah, the digitalization of RECs, I think, is an evolution which is essential for that development. We talk with a lot of regulatory bodies in that space, and they're quite antiquated in the way they go at things. So I think the evolution that you're seeing of digitizing RECs is going to be a crucial step forward, and certainly it also helps from the Bitcoin mining space as well, having everything on chain, fully transparent. Back to that argument of like, how do you fight the kind of like, the FUD in Bitcoin regarding its environmental concerns? Well, you do it through digitized RECs and you do it through consistent data.
Sounds like a perfect marriage here. I think you guys have some things you can work on.
I think we spawned a business relationship, right?
Yeah, exactly. Okay, so we're at the end, but maybe just any quick closing thoughts. Herbert, anything you'd like to add?
Still, actually, I think like payment, digital payment would have a big part actually to push and contribute to like carbon neutrality and also green fintech roadmap. So I hope actually I could like further collaborate with like Miltech, Jason, and Matt to actually together to push in this active perspective.
And maybe I'll just stress on the concept of ecosystem. The reason why I'm here today is really, I always say that. Tell my colleagues that we can not only stay in our own silo, especially in sustainability and ESG, everyone, the regulators, the corporates, the financial institutions, that we need to act together. So we need an ecosystem, and I would love to collaborate with anyone who's interested.
Perfect.
Yeah, maybe I'll just add a final part about Bitcoin mining, because we speak to so many miners. Like, obviously they're a large energy consumer, but that energy is clearly going into powering Bitcoin, but we're also now starting to work with a lot of the AI providers. You're going to see in the future, in the next 5 to 10 years, Bitcoin miners being able to produce AI as well as Bitcoin, and that's going to be a key evolution as well, and shows you how much the Bitcoin ecosystem will start to embed itself into also other technologies.
Great. So interesting. So thank you all for this really interesting panel today. Really appreciate your time, and have a great rest of your afternoon. Thank you.
Thanks, Brett. Thank you.
Thank you so much. Fantastic panel. Thank you so much for sharing all your insights about ESG. Thank you. And from ESG discussions, we will be moving on to something that's really crucial in the development and the evolution of startups, which is basically the scaling side of things. So for any founders in the audience, you know that once you get to a certain stage, you do need to start looking at other markets, as a means to expand your offering. It's what the investors are looking for. It's also the opportunity for you to actually maintain growth and grow and capture market share. On today's panel, we've got some people who are really experienced in this and who's going to be telling us more about the opportunities and the pitfalls that potentially you can learn from, so hopefully you don't make the same mistakes. Can I welcome to the stage, moderated by the wonderful Altives Abby, please. We've also got Eric Barbier, CEO of Triple Payments, as well as Arjun Zakaria, founder at XMPE. Thank you.
Hi everyone. I think the mic is working, right? Yeah. Hello. So I'm very happy today. I have Eric here, the CEO of Triple Payments, and Arjun, the co-founders of XMPay, here with us. Today the topic is to talk about how we can capitalize on cross-border trade, what are the challenges and opportunities, and last but not least, of course, where are the new markets that we should pay attention to. So first, I'm going to direct the question to Eric. So you are very experienced in cross-border trade. What are the successful strategies that you have seen in this space, and how does digitalization play the role?
What we've seen in the cross-border payment space is the usage of crypto, and in particular stable coins, to improve the efficiency of cross-border payments. Today, one of the big problems we're seeing in the for cross-border payments is that it takes a long time. So most SWIFT payment takes 2, 3, 5, 4 days, and there's no certainty on the FX which is going to be applied. And so the beauty of stablecoins is that for the first time, they're enabling real-time settlement at a well-known FX rate.
Thank you, Eric. Anything you want to add on, Arjun?
Yeah, sure. I think, as Eric mentioned, there are about 17 of these different markets today which are called emerging markets, starting with like mainland China to like someone in Kenya in Africa, right? These are the countries that are going to drive cross-border trade. There's one thing that's very common with these countries is that it's SME driven, and SMEs are always working with limited resources. They don't have access to digital platforms. A lot of the banks in these geographies have not kept up the pace of digitalization, and hence the opportunity for a fintech company like EximPay, which is still in the Web 2 world, and Eric's company, which is in the crypto world, both to actually serve the SMEs and the mid-large corporates in these emerging markets.
Thank you. I think both you already touched my next question. So you mentioned about, okay, digitalization is definitely helping because with the traditional way of cross-border, there is a time lag, there is also an FX issue, and then we're bringing into new opportunities of digitalize it. But there are more developed market and emerging market, right? You touched a bit about the emerging markets. What do you think would be the opportunities in this space?
On the emerging markets? Yes. Yeah, so the revolution that we're seeing today in emerging markets is that for the first time, you're enabling any company, any business around the world to be able to hold a US dollar account. Today, when somebody is getting paid, say, in South Africa with US dollar, they're going to be force converted into South African rand. And then they will be subject to the currency control. What we're seeing with stablecoins is now the big revolution is that those people will be able to keep their US dollar on their own account. So then they will be able to subsequently use them when they need to make another international payment to their suppliers.
I see. So Arjun, when we talked previously, you also mentioned emerging markets have also other questions that we need to look into. But before talking to the challenges, what other opportunities would you mention about for emerging markets?
Sure. If you look at the data out there, by 2030, more than 80% of the global trade is going to be in Middle East, Africa, and Asia. And these are emerging markets. So you have mainland China, India, Indonesia, Vietnam, Bangladesh, Hong Kong, Singapore, UAE, Saudi Arabia, Kenya, Nigeria, right? Now, these are the markets that are up for grabs. And there is, in my opinion, we can go into details, there is a access, awareness, efficiency problem in all these three markets. Someone might not even be aware that they can have a stable coin-based wallet that they could actually use for trade.
Yes.
Someone might not be aware in India that they could use a trade finance product, which is insurance-backed, to do trade with China or with Indonesia or with Singapore. So I see that all these economies have a lot of potential. They're going to drive the global trade, and hence the opportunity for us to actually contribute in that direction.
I see. So obviously, well, Arjun would have his opinion about like very strong potential in the Indian market. Eric, any particular country or continents that you would pay as would be a great potential for cross-border trade?
All the countries having a lot of issues with their currencies. So I would mention Bangladesh, many countries in Africa having these issues. We're seeing, for instance, even Vietnam having one of the highest penetration rate of cryptocurrencies. So we look at it as a very interesting market as well. And beyond that, if we look into Latin America, if you look at what's happening in Argentina, really crypto is a lifeline for many people there.
Yes. Am I correct to summarize that these are the countries that have historic issue with the banking system. They don't really work well. They don't have a very good penetration rate. That's why with the digitalization comes in, we have very quick penetration. So when we mention about all these countries, does the cultural understanding become an important issue when we want to do cross-border trade? What would be your opinion? Maybe Arjun first this time?
So I think if you look at all these markets, the role of FinTech has to be to reduce the risk. If I'm going to a new market, how do I ensure that my supplier is going to pay me?
Yeah.
Will my supplier pay me? How do I verify my supplier? How do I take payment from a new market?
Yeah.
How do I, if I have a cash flow problem, how do I serve an order which pays me after 180 days? So these are a lot of these challenges that need to be solved. And that's where a FinTech is more nimble and faster than a bank. See, banks are not going anywhere. They're going to be here. But banks themselves are large. They take large amount of time to actually implement things. So I believe FinTechs could actually work with banks, and we could become their distribution or faster way of actually reaching out to these customers.
I think you make a good point. We're not trying to replace banking. We're trying to work together to create an ecosystem for us to do.
Absolutely.
So what about Eric? What about the cultural understanding? Do you think that it would be anything additional points you want to add when we want to implement this digitalization?
Yeah, I think that's something like on the point of banks, on global players. Sometimes not everybody understands the local specificities of the local payment system. In India, there's UPI, which is very successful, but not everybody knows about it. I remember in my old days when I was at Tunes, the key thing was mobile wallets like M-Pesa in Kenya or Orange Money in other parts of the world, Bcash in Bangladesh. And not all the institutions were understanding that if you want to get paid or paid into those markets, you need to use those mobile wallets, for instance.
So how these mega banks be able to understand this digitalization and being able to open mind to it will also be a key issue.
There's a lot of education, and I think it's going into the right direction. If I continue on my example on mobile wallets, I think I tried to pitch Visa 15 years ago that it would be making sense for Visa to be able to send money to an M-Pesa wallet, and they just launched it last year, or this year, sorry.
Yeah,
so,
15 years we make some progress.
Exactly.
Yeah. So we talked about from the perspective of what the current major bank players are. Let's take a step back and look about what the other challenges would face from the local governments or regulatory. Eric, from your perspective, do you think that would be a great challenge when you do cross-border digitalization?
So yeah, you're absolutely right. So regulators, especially when it comes to cross-border regulation, it's usually one of the last things they understand because they usually understand very well the domestic market, but cross-border is usually the last thing they understand. I'm based in Singapore. We've been lucky to have Singapore creating some of the first regulation for cryptocurrencies, digital payment token as it's called there, and most of the forward-looking regulation, like here in Hong Kong, and we have similar in Europe. So it's mostly coming from developed market. So there's still a lot of things to be worked at for emerging market central banks to understand. So I'm sure you can talk about India even way better than I do.
Just to double click on what Eric is saying, I think India will go in the direction of a CBDC.
Yes.
Because the central bank would like to have a certain control on the digital currency.
Yes.
But that said, if you look at traditional banks, and I wouldn't like to call them traditional banks, but banks like JP Morgan and DBS, they've already launched their blockchain platforms. So there is Onyx Coin by JPM, which is every dollar is pegged to a coin. And you have Partier, which is a tie-up between JP and DBS, which is again a blockchain platform. And I was just talking to those guys yesterday. So your DBS account remains the same. But the money that is transferred behind could either be through SWIFT or it could be a blockchain platform. So the customer will never get to know that. And hence the ability to bring in, I would say, conveniences of payments received over weekends. The biggest challenge for today for payments through banks is you can't get the money on a Saturday, Sunday.
Yes.
But in crypto you can.
Yeah.
right? Because the bank is on a holiday, there's an FX holiday, there's no officials in the bank. So I feel that even the banks would also take a path of blockchain, maybe backed by CBDC or their own coin, which would then actually seamlessly integrate into the existing banking infrastructure.
Yes, I'm hearing there are two big players in moving this forward, right? Obviously, the government needs to be more open to cryptocurrency. At the same time, the government needs to be convinced by who? By the banks, who would be a very huge influencers in whether they're being open to cryptocurrency. And next but not least, like, before we wrap up the discussion, because we talk about cross-border trade, it's not about sending monies. We talk about it's also having access to finance. How does that make another level of difficult or challenges when we want to make this cross-border trade more accessible?
What's important is whenever you want to do global financing for cross-border trade is that you need to have the right infrastructure. And I think beyond payment, one of the application which can really be successful is really around being able to trace all the steps of where the product is and so on. So to digitalize the whole letter of credit infrastructure. I think we're quite far away from that because we're still lacking international standards. And obviously because it's international by definition, you can't have different domestic implementation.
Understood.
Yeah, just to add to what Eric is saying, if I would define global trade, like global trade is nothing but the flow of data, goods and money. So if you're able to bring all of that on a platform and digitalize it, there are benefits of actually having to see where the real-time flow of goods and data is. But that said, I mean, one way of actually helping businesses go and tap new markets is to reduce the risk of market access, right? One good example that I always actually I quote today, which I got to know like a year ago, is that generally people ascribe the rise of Chinese export to the manufacturing and the people's appetite of risk. But there is a certain organization which is called Sinosure in China. In the early 90s, the Chinese government empowered Sinosure to ensure every exporter in China, they could go and sell to Kenya, they could go and sell to Algeria, US, to India, all the 180 countries in the world. The Chinese government will insure at least 90% of the value of the product. So that gave comfort to an exporter to go and tap into new markets. Now, if that kind of a policy could be replicated with the help of China or by the respective countries' central banks, then a lot of these emerging countries could actually go and export and try out, because that's the biggest risk. What if I lose my money, right? And even one single loss of one order can wipe out your entire profit in a year. That's how these guys work at. They all work at 10, 12% margin. So if you lose 1 out of 10 orders, you're done, right? So that's, I think, one of the ways that we need to ensure that risk is removed. But as Eric mentioned, that requires a lot more data to be brought in on a platform and digitalized.
Am I correct to summarize that I'm hearing that we are seeing more and more cross-border payments players in the market? That is a great thing to see that the market is blossoming. But it seems to be we still need a lot of help from each country's government and also with the banks to support to build the whole ecosystem. Just having more players would not work. What is your view on this?
No, I think having more competition definitely helps reducing the cost or increasing the speed.
Education is what
Education is absolutely key. I think there's one aspect we didn't discuss so much is the actual cost of the transfer, especially for SMEs. So when you're an SME in an emerging market, getting paid is going to cost you. If you're getting paid through Visa, for instance, the end-to-end cost is not going to be far from like about 10%. And once this SME wants to purchase from an international supplier, that's going to be also a lot of additional cost. And that's a drag to the economy in those places.
Happy to see more players in the space actually helping everyone save costs.
Yeah, I think there's one saying in FinTech, there's no winner take all. In e-commerce, there is Amazon. There can be a duopoly.
Right.
But in FinTech, we see it in the outside world. India has 134 banks to serve 1.4 billion people. China might have much more, 500 banks, right? Even Singapore might have 20 banks. So FinTechs, there has to be more for the simple factor that the market is so huge that one single company cannot serve the market, one single company cannot serve the product, right? So I believe there'll be FinTechs corridor-based,
Right.
geography-based, commodity-based, a lot of different factors. I think we need 100 startups to, more than that, to serve the market.
Yeah, if I just look at payment alone, I think there's more than 100 payment company startups, a fairly early stage company, which are worth more than $1 billion. So, and they're all focusing on different niche and so on. So,
I see. So I think I hooked it on one good point, that it's good to have more players coming up. And just wrapping up all of our discussion today, because our topic is about new market for cross-border trade and what are the opportunities and challenges. If I ask each of you to pick one market and what is the next milestones you would see for that market, where would you pick and what would be that milestones? I think Arjun needs some time to think, or?
I think Asia.
Okay.
Asia.
What are the next milestones that you would see?
I think Asia is in the intra-Asian market. It's going to be actually bigger than the rest of the world.
Okay.
With China, with mainland China, Hong Kong, Singapore. Does that mean? ASEAN, India, and Middle East. I think this itself is going to be a very sustainable ecosystem. I think by 2030 that's going to be happening, and I think that's going to be a very landmark shift in the global order of trade.
Yeah.
I think that's a big milestone for the world.
Asia is going to be the biggest market. Eric, anything to add?
yeah, I think Asia is going to be big. I think the one which is going to change the most, in my opinion, is going to be the Middle East, where we're seeing the rise of Saudi Arabia, UAE, and with a lot of cross-border trading, and this market was kind of a bit of isolated from the rest. So that's probably where we're going to see the biggest change.
I see. Thank you so much, gentlemen, for your sharing today. And thank you for listening. And I hope there are very more insights for us to how the cross-border trade is going to evolve and what are the new markets that we need to pay attention to. Thank you so much. Thank you.
Thank you very much.
Thank you, Arjun, Eric, Abby. Thank you so much for your time. So now we're moving on to a discussion about fintech innovations. And we've got HashKey Group. We've got representatives from HashKey Group who's going to be telling us a little bit more about general fintech innovation, and they're really well placed to actually talk about this because they are an end-to-end digital asset financial services group in Asia, and they've actually rolled out a lot of innovations within the fintech field. Can I welcome to the stage, please, moderated by Robin Zhu, the Deputy Chief Editor at Foresight News. Also like to welcome Leo Lee, who is the CEO at HashQuark, as well as Olivia Wang, Group COO at HashKey. Thank you.
Hello everyone，欢迎大家来到 FinTech Week Innovation。我是这场主持人 Foresight News 副主编周周。那大家也知道，这次我们的圆桌主题是加密货币与 Web3。大家也知道，自香港拥抱 Web3 1年以来，涌现了一批领先的 Web3 公司。2家领先的 Web3 公司中有一家名叫 HashKey。那这次我们邀请到了 HashKey 的2位高管 ，HashKey CEO 6以及 HashKey Livio。然后请2位先自我介绍一下吧。
OK， 大家好，我是 HashKey 集团的 COO Livio 啊，谢谢。
大家好，我是 HashQuark 的 CEO Leo， 谢谢。
好，感谢2位。然后我们也知道，我刚刚也认识到，从昨天开始啊 ，HashKey 的在 App 上的下载量达到了香港的第3名。然后我也想问 Livio， 关于我在官网上也看到你们的一个标语叫 Trading Made Safe and Simple。那我想从 Safe 和 Simple 这2个角度来想问一下你关于这 您觉得 HashKey 在 App 上 Safe 和 Simple 做的怎么样？以及我们从 Safe 和 Simple 上，我们知道现在在加密的一些产品里边，有的产品做的 Safe， 但是并不简单；有的产品做的简单，但并不安全。
对。
所以我想问一问你对这样的一个问题的一个看法。
对，我觉得主持人提出了一个非常好的一个命题，就是一个交易所如何把 Safe and Simple 这2个非常关键的要素集合在一块儿。那么这也是我们过去一直在思考的问题。大家知道 HashKey 呢，拿牌的时间其实并不是很长，从去年那个年底的时候开始。那么中间呢还经历了很多前置的工作。那么实际上留给我们去 build 我们的产品的时间并不长。那么我们可以看到市场上已经有很多成熟的交易所那么而且很多发展了很多年了从我们熟知的这个3大所可能都分别有10年以上的这个发展的经历。那么作为一个新的一个业态我们要在一个合规赛道里面做出一个有特色的交易所这个其实是留给我们，而且我们要追赶人家已经发展10年的一个巨大的一个差距。那么如何能够在这样的一个市场环境中呢，找到我们的差异化的亮点这个是我们过去一直在思考的问题。那么所以我们后来提出我们能不能把安全跟简单都兼具，然后放在一个这个交易平台里面去完成这是过去这个我们花了半年多的时间在努力去做到的。那么现在可以给大家汇报一下，就是我们首先是安全合规在这个点上我们做了大量的努力大家知道这个过去很多个交易所在这个从去年开始大量的暴雷的这个情况包括 F 开头的最近法院开始有这个审判了。那么香港当地的有个 J 开头的是今年以来香港最大的一个这个金融案件了那么从这些案件里面我们可以看出来合规交易所成为了一个刚需，就是要让用户的资产充分的安全我们提出了一整套的规范，就是要有独立的 custody， 同时呢要做资产的冷热分离我们严格的把用户的98%的资产放在了冷钱包，只有2%放在热钱包。那么同时呢我们还打破了行业的过去的一个没有过的一个空白就是引入了传统的保险公司，如果用户的资产在 HashKey 被盗了，保险公司会领先来赔所以这是在安全合规可靠上面我们做出的差异化于行业的，我相信没有人目前做到过，这是第一个。那么以及简单我们知道这个持牌的交易所往往是很难用的大家可以去注册全世界，包括日本的，包括美国的基本上呢你要注册它的用户，基本上就像填一个高考问卷一样大几十项，非常复杂。那么我们做到什么呢？我们把用户最早的时候，在最早的那个版本里面要填56个信息，简化到了现在这个版本只要12个信息就能完成 KYC 那么我们在这个11月1号上午11点11分发布了香港第一个持牌的虚拟货币交易所的 APP 之后那么大量的这个媒体朋友包括行业的 KOL 进行了测试，那么普遍反馈在8分钟到10分钟之内完成所有的这个注册的过程，这是领先于全球所有的合规交易所的所以我们真正是用匠心在让我们的 App 变得非常的简单所以既兼顾了现在是破解了行业一个大的难题，就是合规的这个交易所呢这个难用，但不合规交易所你又不敢用所以我们完美的把既合规又极简高效把这2个特性放到了一个 App 里面，对，所以这是很难的。那么行业也给出了我们一个很好的一个结果，所以我们从App 发布第一天到这个第一天我们已经在 iOS 的那个香港的理财榜上排到了前3名，对。那么也有很多朋友给了我们，当然有很多意见跟建议但是整体上呢非常认可我们现在极简的一个状态，对，所以我们还会继续努力。对，
好的，感谢 Livio。其实我们也看到，这次我们来了 HashKey Group 来了2位高管，还有一位是 HashCock 的 CEO Leo。那我们知道Livio 主要做 Exchange 这一块，您主要做 Web3 基础设施这一块。HashCock 定义为 Web3 基础设施，您是怎样对待这样的一个定义的？
其实呢，我们可能第一个，我们这个集团有各个不同的业务线，对吧？像 Livio 他们是 Exchange 的业务线，那我们 HashCock 呢，其实负责 Web3 的 Infrastructure 业务线。所以呢，我们可能就是对外， 讲的不是那么多啊。从我们的角度来说呢，我们这个业务比较偏技术一点，啊，比较偏技术一点。那怎么样来定义这个 Web3 的 infrastructure？ 因为我觉得从Web3 的这个我们叫它原教旨主义或者叫 Crypto Native 的角度来看呢，其实它有2个特性。第一个特性叫去中心化，这个是大家都在讨论的事情。第二个特性呢，就是不断的要有各种激励。所以正是在这种情况下呢，你会看到这个比特币网络或者以太坊网络，它其实是全球最安全的基础设施，对吧？从来没有一个 Bitcoin 或者一个 Ethereum 因为这个网络出问题而被丢啊。你可能这个资产出现的一些问题，都是因为你的助记词等等忘记，但你不是说啊这个网络出现了 bug 我被丢掉了，这是第一个问题。第二个呢，也没有任何人在维护这个网络啊，所有的人都是分散在全球的，也没有一个公司在做这个事情。那么我觉得这是一个事情的，这是这个 Web3 基础设施的本质。但是它跟商业这个模式来比，其实它当中还需要一个渠道，那么这个渠道呢，能够做到2点。第一个，能够让人更方便地参与到基础设施的建设，所以这个就是我们 staking 的业务啊。我们现在 staking 业务可能规模应该是世界上全球第6，亚洲最大啊。那我们提供了这次 HashQuack 提供了这样一套软件，让只要比方我举个例子，你持有以太坊的人，你可以很快地参与到以太坊这个基础设施当中，并且能够获得这个基础设施给你的回报。我觉得这是我们要做的第一个事情。通过我们的软件，让这个基础设施更加去中心化，那么同样而言，它也更加安全。第二个呢，我们也观察到，就是其实是有很多的这个客户他的刚需，尤其是这个 crypto 资产的安全的一些跟踪。所以我们这样的一套服务呢，其实是我们本质上不持有用户的任何资产啊，我们只持有它 token 带来的这个投票权啊，它不需要给我们任何资产，它也能够获得收益。所以我觉得，其实从这种角度来说，是一个非常创新的这个 Web3 的基础设施啊。所以从这个产品的模式上来看呢，它非常像 Web2 的基础设施，它非常像这个原来的 Cloud Computing， 像云计算等等。但是从用户的这种使用的角度，或者他获得这个产品服务的角度呢，它又去中心化，又非常 Web3。所以这个就是我们定义的这个基础设施。这是现在我们已经做的比较成熟的这一块。那其实我们也不断的在往上做，就是从非常偏向底层的这种技术往上走。所以我们也在看这个比特币的闪电网络，以及我们在做这个 Web3 的基础设施 HashKey 的 DID， 这是更偏应用的。所以这个是我们未来可能也拓展的一个方向吧。对，谢谢。
好，感谢 Leo。那今年香港拥抱 Web3，从去年以来到现在都1年以上了，然后也出台了一系列的 Web3 的政策和法律法规。那 Leo 总也是这一块的专家，那对于这块法规有非常多的了解。这些法规有关于对加密交易所的，有对券商的。那有哪些您觉得值得关注的一些点，可以给我们分享一下
？OK， 不敢说是专家啊，因为这个我们在 Web3 这个行业可能时间很长啊，但是香港的这个金融行业，坦率讲呢，我们还是后来者啊。但是呢，我觉得从所有的法规里面，我们目前来看，整个目前整个行业的一个相对稀缺的资源呢，还是在人才啊。这里面呢，我们知道经营一个交易所，它没有那么简单啊。现在很多包括已经拿牌的，包括在升牌的，其实都面临很大的一个资金压力啊。它的本质还是说，团队能不能有效地做出领先于行业的产品跟服务啊。那么一个持牌的交易所在香港啊，它面临的这个人才的缺口还是非常大的啊。它通常来讲，它要把香港的这个金融人才，包括合规的人才、法律的人才啊，以及这个全球领先的这个 Web3 的人才啊，其实这2块都是很稀缺的啊。还有就是来自于 Crypto 的科技人才啊，其实像 Leo 他是很长时间在行业里面做科技做技术这块啊。那么但很多公司可能没有这样的一个储备，特别是香港当地的这个就是金融业的原来很多公司可能没有 Web3 的专业型的人才，所以要把这3类人才作为一个大的拼图拼在一块，这是不容易的啊。那我们当然很荣幸，就是因为我们升牌时间很早，而且在人才储备上面呢，可能走在了前面，所以现在整个行业都在往我们这边来挖人啊，就我们的 RO， 我们的这个合规官啊，被行业挖了一遍又一遍。所以这是第一个，就关于 要在香港创建一个领先的 Web3 的公司，那么在人才上面啊，特别是要符合相应的这个监管法律的相应的这个条例的人才，这是非常少的。那么第二个呢是说，如何有效的去保护用户，这是合规里面最 care 的所以我们其实花了很多的精力，在让我们的用户资产的安全上面有很大的保障性。刚才我们提到了人乐分离包括我们的银行级的这个硬件安全体系包括传统金融的承保这都是行业过去很少采用的造价很高，但是我们觉得对于保护用户来说是非常非常需要的我觉得这个人才跟对用户的保护，这个是最重要的，关于所有法规里面的。
好的。那其实我们行业里有个戏言就是说读懂 HashKey 就能读懂目前香港的 Web3的一些政策。HashKey 里边有很多的一些业务，包括 HashKey Exchange， 也包括 Capital。那其实我们也很好奇，就是这里边大家的业务是怎样去分配，怎样去相互合作的，以及对于 HashKey 和 HashExchange 而言，这两者是相互怎样去赋能的
？OK， 那我先谈一谈嘛。对
，OK 好。
其实大家对 HashKey 确实这个了解也比较多我们的生态比较大，对吧？那现在有很多业务线，主要的你看那个 Livio 这边那个 Exchange， 然后还有 HashKey Capital 负责投资的，然后这个其实我们还有 Tokenization 的这个业务线。对，那我觉得呢，从这个整个行业来看就目前我没有看到有哪家合规的这个 Web3 的机构，它是以这种像 HashKey 这样生态的打法来做。所以这个但是从市场的需求，从客户的需求来说，其实它是有复杂的需求那么我觉得我们各个生态在一起，其实能够非常好的去满足客户的诉求。我举一个例子，比方说我们有很多这种机构的客户他需要用 staking 来做一些这个获得一些 staking 的收益但是因为你知道机构用户他其实最在乎的就是合规所以我们很高兴我们后面有个大的生态在支持，我们的很多竞品它就没有办法去服务机构用户，因为它不合规那么我们有个生态的用户，比方说我机构用户完全我们已经有很多这样现实的例子我就不提具体的名字，对吧？他在这个 Exchange 上开户，然后呢我们天然可以集成到这个 Exchange， 他不但可以在 Exchange 享受到这种交易的服务，那么同时它可以享受到这个 staking 的收入那第二个，这些就像前面 Livio 介绍的，我们的托管也是买了保险的，所以他不担心任何资金的这个安全同时我们还有合规的 OTC， 对吧？他拿到的这个收益，它可以很合理合法的变成这个法币的这个形式，所以这是从用户的角度来说。那从项目的角度来说呢，早期的项目一开始它就可能能够获得 HashKey 的投资的这方面的这个研究等等这些，对吧？然后它未来我们从节点的角度来说，我们也做了差不多80多个不同的节点的项目，我们可以帮助它完善它、打牢它基础设施的角度从交易所角度来说，完全可以给它的 token 赋予更多的这个流动性等等这些。所以我觉得，就像我们这个集团 CEO 肖总说的一样，我们这个生态的打法其实是非常独特的，在目前的角度来看也很有吸引力。
好，李总。
对，刚才 Leo 也提到了，就我们集团其实包含了一个矩阵的业务它不是一个单一业务。那么其实比较早这个发展起来的，像HashKey Capital Capital 已经有这个超过1个 billion 的一个管理规模，那么投出了500多个项目其中有至少是17个独角兽级别的这个项目那么覆盖了很多个国家那么Quark 呢也是，就是这个刚才说了这个亚洲第1，全球第6那么我们还有更多的业务那个这么多业务形成了一个巨大的一个矩阵。那么它的核心是什么呢？是因为整个 HashKey Group 它的立命的一个基准是合规所以我们面向了大量的这个持牌的这个公司。那么他们在面对市场上这么多的公司的时候，他往往很难去跟多家进行尝试合作所以我们在我们这个体系里面可以一站式的把所有的这个机构通过我们的全家桶业务整个合作下来那么这个对于这个我们的所有合作伙伴来讲，都会是一种 更高效的一种商业合作的模式，这是一个。那么第二个呢是说，我们各个业务之间呢会形成有效的这个有机联动啊。其实我是在Group 任 CEO， 但为什么把主要的精力放在 Exchange 呢？是因为 Exchange 暂时来讲，它会是航空母舰的非常重要的内核的部分所以要先把它做好那么之后呢，我们还会有一些整个集团的这个infra 级别的这个构建比如说我们的这个生态币HSK 它会是所有的业务赋能相互赋能的一个组合拳那么通过它有效的把所有的业务都串联在一块所以我觉得这1年2年还是 HKE 刚刚起步的一个状态，它是一个非常早期的一个雏形但在未来的2年3年，我觉得大家可能会逐步看到一个更强大的、更全面的、更立体的覆盖多业务线的，并且始终以这个合规为它的特点的这么一个这个综合的这个虚拟货币以及综合配套资产这个服务的一个航空母舰，希望我们能够尽早的让这一天到来。
好，谢谢李副总。一个政策可能会改变很多企业，也可能让很多企业消失。那我们知道，整个香港拥抱 Web3 政策1年以来，改变了很多企业的生存状况，包括 HashiKey。我们也相信，这次政策的变化改变了 HashiCorp， 也改变了 HashiKey Exchange。那我其实想问一问2位，就是在这样的一个变化过程中，你们觉得哪些变化，就是本公司的变化，是让你们记忆深刻的？
对，我觉得是这样，就是我们看到第一个，看到今天也来了很多的人这个活动，我觉得最显著的一个变化呢，在这个4月份的时候，港府宣布了这个政策，对吧 ？HashK 就主办了这个 Web3 的 Summit， 你看那次这个活动是人山人海，对，在这个整个加密货币这个我认为在还是比较寒冷的情况下我觉得香港能够有这样的这种人流的参与量，就本身说明这个政策它是非常具有这个生命力的。第二个呢，我觉得在这种政策发布了以后呢，我觉得还是从合规的角度来说，越来越多的这个机构客户开始关注到这个加密资产或者叫这个虚拟资产也好所以我们的坦率的来说，我们有很多的原来我们的很多的客户，可能他更加 crypto native 一点但是我们现在可能更多的客户是传统的机构family office这种因为这个政策，首先它有合规的诉求，它能够在这个地方来做这个，能够享受到 HashK 的这样的服务。如果没有这个政策，它也就没有这个可能性。第二个呢，因为有了这样的一个政策，所以呢，我觉得促使更多人去研究这个，他可能别人不太关注这些东西，那很多的这些机构去关注到它。第三个呢，因为我们本身就像前面 Livio 介绍，我们不管是安全也好，产品的应用性好，以及我们整个生态的一站式也好，就是我们提供了这样一套环境，能够接得住它这样的诉求，所以这个我觉得是对我们影响很大的。
OK， 我觉得如果用一个词来总结这个政策落地的第1年的话，我觉得会是探索就监管跟我们持牌的机构都在不停的探索什么是对的，什么是错的，什么是安全的，什么是有风险的那么在这个探索过程中呢，其实我们看到全球的一个合规的一个趋势里面，很多地方在这个探索过程中是失败的比如说举个例子，就日本它在这个改造这个整个这个虚拟货币这个整个市场过程中，它其实是把整个市场的这个从业的这些企业交易所这些都管死了那么同时呢，我们还看到像美国包括新加坡它在政策上都有反复就是一开始可能是宽松的但到一定程度之后呢，他觉得开始有风险了，他开始往回缩，开始形成泡沫，形成风险，那么最后还要去管制，要去做很多这个剥离泡沫的这样的一个行为那我觉得很庆幸的是，过去香港无论是以什么形式在探索，最终呢还是有2家这个交易所持牌，并且推出了自己的产品那么同时呢，我们 HashKey 也很荣幸成为第一批获得这个1号牌、7号牌 uplifting 可以面向散户涨业的交易所。那么呢，我们也很荣幸推出香港第一个持牌的数字货币交易 APP那么这些成功的案例呢，我觉得会给第1年画上一个相对相对理想的一个逗号。 但是呢，会给未来2年到3年政策的进一步的迭代跟发展，会带来一个巨大的一个空间，因为大家有信心可以继续往前去探索。所以我们看到这一次这个在 FinTech Week 上面，我们看到很多官员他对于 Crypto 他持以更这个 embracing 的这样的一个态度那么我相信有很多的，包括 RWA 的包括 STO 的，也包括这个 Stablecoin 的监管条例会进一步加速的面向这个市场。那么会有越来越多的从业者会从全球各地来到香港，一起来分享这样一个这个监管的变化、监管的这个进步带来的行业红利我觉得我们所有人都可以期待，然后也欢迎所有人加入来一起分享这个蛋糕。
感谢 Livio。其实刚刚 Livio 也提到，有的国家和地区它一监管就会死，但是有的国家地区它一监管，然后形成泡沫就很放松，但是会形成泡沫。那香港也会给我们带来一个不一样的案例，给全球带来一个不一样的案例。我们也希望香港能给加密世界、给全球带来一种不一样的一个案例和一个研究。那感谢各位大家参加我们的圆桌，这次圆桌就结束了，谢谢大家。
谢
谢。
Thank you so much, Livio. Thank you, Leo, and thank you. So now we're going to talk a little bit about blockchain and how blockchain is being adopted in the financial markets and what are the opportunities and challenges there. Our panel today will talk about how blockchain is revolutionizing finance, addressing regulatory concerns and reshaping industries while navigating the hurdles on the road to widespread adoption. Let's welcome on the stage in conversation with Accenture's Britt Horning. Can we also have REAP's co-founder Darren Gu and head of crypto and Web3 at WorldPay, Nabil Manaj.
Thanks. Okay, awesome. Thank you everyone for coming out. Today we're going to be talking about how you can drive blockchain adoption in the current market. So joined with me, I have Nabil and Darren, and I'll let you guys please to briefly introduce yourselves and kind of what your company is working on.
Sure. Want to go first? Am I on? Yeah. Hi everyone, I'm Darren. I'm one of the co-founders of REAP, mostly focused on the product engineering side. REAP, for those who don't know, is a financial services platform that focuses on building an interoperability platform between Web 2 and Web 3. And we've spent a lot of time adding a lot of digital asset capabilities to some of our core primitives around our corporate credit card, our mass payout products, our white labeled card issuance platform, so that we can really act as the bridge between Web 2 and Web 3. And on a personal note, I come from 12 years of payments experience. So before I started REAP in 2018, I led growth for Stripe. So have some familiarity with challenges both in the Web 2 and Web 3 space. Good to be here.
Cool. Yeah, thanks for having me, Brett. For those of you that don't know WorldPay, I like to say it's one of the biggest companies you've probably never heard of but use every day. We're the world's largest payment processor, and essentially what we do is we allow merchants, large and small, in 55 plus countries to accept consumer payments like debit cards, credit cards, Apple Pay, Google Pay, etc. So if any of you have like a Netflix subscription or download and pay for an app on the Apple App Store, we process most of those payments globally.
Awesome. So let's start with the business pain points. Today, in terms of the pain points or the issues, like what have you guys seen in the industry and how are you leveraging blockchain to solve those pain points or issues?
Sure. I can start off. So I think if you think about the payment space, pain points is maybe a strong word, but there's a lot of areas for improvement. I think everybody would say that today's payment systems leave a lot to be desired. And I think if you think about payments, generally people are focused on one of a handful of things. So cost of acceptance, so how much is it going to cost me to accept a payment or send a payment? Speed, how quickly can I receive the funds from those payments or the recipient of the funds that I'm sending to get those? The availability, so a lot of systems today are only available, business days, excluding public holidays, no weekends. They might have time limit cutoffs, etc. So as we think about what can we do to improve today's payments, it's typically along one of those three things. And where blockchain gets really interesting is, as many of you may know, from an availability perspective, it's 24/7, 365. So you don't have this, business day and public holiday limitation. It's generally pretty quick, especially compared to some countries that haven't implemented real-time gross payment systems that clear quickly. And generally speaking, but not always true, it can be cheaper to send a payment using something like a stable coin versus sending something like a wire, again, depending on where it's going to and from and what currencies you're going between.
Yeah, so I think for us, we see a lot of similar dynamics, is what Nabil mentioned, around speed. But I think the one thing I will add is really around the idea of access, right? I think obviously as a developed market and as privileged individuals, we can go to a DBS or an HSBC and get access to a Visa credit card. But if you look at emerging markets and some of the capabilities there in terms of the maturity of the financial infrastructure and things that we really take for granted today, that's where I think the lack of access is something blockchain technology and crypto can really fill a gap in, right? So for us, when we think about really empowering Hong Kong to become more of an international hub, I think we really need to think about access, not just for domestic folks and businesses, but the mom and pop shops in more emerging markets like Latin America or the Middle East or Africa, where clearly a lot of Asian companies are starting to do more and more business in. So those are the type of access that I think blockchain technology can really help facilitate. And in order to create more of these trades between Asia and some of these emerging markets, we need to adopt more of the technologies that they are more relevant to them, right? So that's why I think access is a really important part as well.
Awesome. And we're talking about adoption today, and things have been said about the current market. There's different words to describe what the current market is. I won't use those today, but what are your thoughts on the state of the industry with the current market conditions that we have today?
Yeah, I guess I think this is less about the industry specifically, but I guess more about how I feel about the industry, which is optimistic, right? I think in the last few years, there's been a lot of events, both domestically and globally, that could have really, done a lot more sort of material impact on crypto as an industry. But I think the fact that we're here today at this great event is a sort of a function of the fact that there's still a lot of optimism in the air. And I think the way that we're approaching some of the problem spaces now is a lot more concrete, tangible. It's a lot more focused on risk management, compliance, and these are things that I think Reap, as a Web 2 financial services platform to begin with, have really thought very, very deeply about from day one, right? So hopefully, as we be able to sort of bridge and educate some of the Web3 folks on the importance of some of these aspects, we can create a lot more legitimate value for blockchain and crypto as we think about bringing it to the next to the masses and the mainstream even more broadly than we do today.
Yeah, I'll echo everything Darren says, and I think if I relay that over to payments, I agree with the optimism, but I'd also throw a little bit of a tumultuousness in there in the fintech and payment space, which is in crypto as well. I think with the current interest rate environment, we've obviously seen companies in the fintech and payment space struggle potentially with their business models depending on what particular vertical they're in or what products they're offering in. But I think with the current rate environment and with some of the increasing regulatory scrutiny, not only in crypto, but in payments and fintech in markets like the US, I think it's actually been kind of healthy for the industry because we're seeing which business models and which companies are actually building things that are sustainable. Yeah. And so I think those that are kind of sticking it through and fighting it out, both in crypto and payments and fintech more broadly, there is this overarching sense of optimism. And I think, at least as it relates to rates and some of the regulatory stuff, I think there's a lot of clarity and stability today, even compared to maybe 6-9 months ago, which is really helpful.
I think the fact that there is discourse and there's communication that's happening at all levels, regulatory, consumers, businesses, folks that are in Web 2 and in Web 3, institutions and mom and pop shops, I think those are all great things to be able to bring more legitimacy and awareness to the industry in general.
I actually think in a good way, the high interest rate environment has actually drawn a lot of attention to the ability of crypto to improve payments, in particular, the industry that we're in, because when rates were close to zero in the payment space, people didn't care as much about how quickly they got their money. Right. But now when base rates are like 4 to 6% around the world, everybody wants their money like immediately. And so it kind of shines a light on the fact that actually a lot of today's payment systems aren't that quick. And things like stable coins and blockchain-based solutions could help deliver that money at that quicker time frame.
And the fact that I think like now that interest rates are higher, blockchain and Web3 native folks are looking at treasury yields as an alternative as well, right? So they're really seeing more of a bridging between the two worlds, which I think is a healthy way to be able to collaborate and build something even greater than.
Yeah, I think we're definitely seeing a lot more of attention on building products and services that actually have value, right? Like really narrowing down to say, why are we building this? Why are we doing this? What is the end value versus, hey, we're just doing it because it's the technology or because it's blockchain, right? So I think with that, I'll pivot and, oftentimes in this space, people often lead with the technology, with blockchain, with the infrastructure and why it's so game changing. But for the unacquainted person, that can be very confusing, right? It can be, okay, blockchain this, blockchain that, but why, right? And so if we take that up a level, I'd love for you guys to share, what are the use cases or what are the experiences that you're building that people can resonate with to understand, what is the value of this? And then ultimately, how is that leading to adoption of the underlying technology?
I can start. I think one thing we're investing in pretty heavily at WorldPay is stablecoins, and it's for all the reasons that I mentioned around speed and efficiency. So today I took a Uber here, and is there anybody in the audience that could tell me, like raise your hand maybe, how exactly the money got from my debit or credit card to the Uber driver? One person, maybe two, yeah? People that work in payments. So for those that aren't familiar, payments for the last 50 or so years has operated with this thing called the four-party or the four-corner model. And basically what that means, using the Uber as an example, is I used my Chase Visa card this morning to pay Uber, and so the way that my money is actually going to get to the Uber driver is at some point tomorrow, Chase is going to send some money from their account to Visa, and then Visa is going to send it to whoever Uber's payment processor is here in Hong Kong. Let's just say it's WorldPay for fun. And then WorldPay will send it to Uber the next day, and then Uber will send it to the driver whenever they pay their drivers, maybe on a weekly basis or whatever it is. So that model's been around, again, for 50 years. And that's not perfect, right? Money's moving between 4 or 5 different parties for me to just pay a driver to get somewhere. But it has worked really well. It moves trillions of dollars a year without too much failure. But what we decided to do is, as WorldPay on that final leg, when we settle the driver, settle Uber, excuse me, how could we make it quicker, cheaper, available more than 5 days a week? And stablecoins is what we look towards. So we've now started offering our clients, whether they're crypto natives or not, the ability to receive that final leg of settlement from us in USDC to start. And it allows them to get their settlement, again, more quickly, more cheaply, and on days where you wouldn't be able to receive fiat.
Yeah, and I guess to tack on this very example, obviously as a corporate credit card issuer, you need to use a Visa card to pay that Uber. So the way we think about adding innovation is it's incremental based on aspects and concepts that businesses understand, right? So credit cards is obviously fairly ubiquitous across the world. Most companies will use it in one form or another. And for businesses that are issued a REAP card, you have the ability to use crypto to settle the credit card balance at the end of the month, right? So taking that same example, you accumulate a few different Uber rides. At the end of the month, you're charged with, let's say, 50,000 Hong Kong dollars in payments. Instead of forcing you to use Hong Kong dollars to pay it off, we allow you to use stable coins to pay it off, really allowing digital Web3 businesses to use their digital assets to manage a lot of their treasury, right? And the way we think about why it's important to marry Web 2 concepts with Web 3 is so that people can have a little bit of that ChatGPT moment for blockchain and for Web 3. Web credit cards are concepts that people understand, and digital assets are also sort of a more of an enigma to a lot of different folks. So if you're able to connect the two, I think there's a lot more education that can be done and a lot more willingness to accept that education when it comes to actually seeing some of the more unique aspects of blockchain and crypto technology that people may not be sort of willing to listen to if they don't understand that.
Yeah, no, that's great. I mean, you guys touched on a few things here, and we are talking about payments, so I want to throw one question back at you. Can you guys touch on maybe cross-border payments and some of the benefits that brings using this technology?
Yeah, so I think obviously based in Hong Kong, one of the sort of, I would say, industries that's very popularized is trade, right? Trade, not just within Hong Kong, but trade across the world. As I mentioned, Latin America, Middle East, Africa, these are all emerging trading hubs, especially given some of the trade wars that are happening. There needs to still be facilitation of globalization across the world. So I think blockchain and crypto especially has a pretty important role to play in that, not just at the payments level, but also at things like the escrow level, to be able to keep things in a trusted manner within sort of on-chain escrow and things of this nature. So these are all concepts that we've thought about fundamentally to be able to add blockchain technology and payments to facilitate more of these type of trade. So that's something that I think is going to be very, very important. And especially if you marry some of the concepts that Nabil mentioned around speed, around availability on a 24/7, 365 cycle, I think that creates a lot more efficiencies and hopefully increases the throughput of a lot of the trades that are happening today.
Yeah, I think cross-border payments is like one of the holy grail use cases for stablecoins and blockchain, but it's so difficult. Not just from a technology standpoint. The technology is there. Like if we wanted to make ubiquitous, quick, free cross-border payments today, the technology exists. But there's a lot of considerations. A lot of countries have currency controls. They have different standards that they require for things like reconciliation and reporting. There's tax considerations that don't match up. And so I think part of the reason it's been so challenging is because if you think about cross-border payments, you need a lot of different parties, whether they're banks or governments, to agree with each other on how the next generation of that technology is going to work. And that's a lot of like massive stakeholder coordination, which just hasn't happened yet. But one thing that's really interesting is, for those of you that follow the UK financial services market, the deputy governor of the Bank of England is a gentleman named John Cunliffe. He just stepped down or finished his term, and he wrote this, let's call it a exit essay or goodbye note last week, at the end of his term. And he specifically says, there's been a lot of progress, especially in the developed world, developing real-time payment systems in their own countries. So for example, we have real-time payments, for transactions under £1 million in the UK, Singapore, et cetera, has a similar concept. The UAE is rolling out their real-time payments network. So there's been a lot of progress actually domestically, but that progress hasn't translated to making cross-border payments any easier over the last few years. And so he specifically calls out stablecoins as something that could help bridge that gap in the future, which is a pretty big statement coming from someone as senior as him.
Definitely. Awesome. Thank you for that. So early on, we talked about some of the challenges or maybe room for improvement that exists in the space. But as you're building these solutions in the blockchain space, can you guys touch on some of the challenges that you face in terms of the development of the solutions or the rollout of those solutions?
Lots of challenges. I think if you take like a big, highly regulated company like WorldPay, right? We've got stakeholders internally in functions like legal and compliance, treasury, accounting, tax, et cetera. So whenever you start to roll out a new technology, or in this case, a new technology and a new form of currency and money, there's a lot of questions, right? There's a lot of stones you need to turn over. So I think part of the challenge is just getting, at least for a big company, those different functions and those different stakeholders comfortable with what you're proposing, and taking them along on the journey. And I think, at least for us, one way we've been able to do that and be successful is finding people in those functions that are just passionate about technology and about blockchain. Having a champion, so to speak, in each of them has been really helpful. So I think like just internal alignment for big companies on this topic has been super challenging, especially in regulated industries. And then on that regulation note, I think at least in some places, the ambiguity and uncertainty around the regulatory environment has given pause, especially over the events over the past 18 months, to a lot of companies that maybe would have wanted to invest or deploy a potential use case. I think there's a lot of folks that are still just sitting on the sideline waiting for some of that ambiguity to clear up.
Yeah, I think on our side is really getting folks, stakeholders, both internally and externally, comfortable with the fact that in order to innovate, there needs to be an appetite for risk, right? So I think a lot of the times you see some of these events that happen, and anytime there's something that bad happens, there's sort of a hindrance of technological advancement, right? But if you look at everything from biotech to obviously FinTech, to energy, all of them things have cost to progress, right? So I think for us, we have to get into the mindset that in order to push progress forward, and in order to have sort of emerging markets experience the same global trade and financial inclusion and access that we do, there needs to be some sort of cost associated with that. So the focus should be more on how do we mitigate those costs and mitigate those risks instead of hindering progress in general on a broad basis. So I think getting people, and especially folks like the regulators and stakeholders like banks and things of that nature, along the same page and mindset of being able to take on calculated risk in order to move things forward, I think is very, very important to do. And I think that's something that we have to continuously do as a startup, as an innovator of sort of this global economy.
I'll just add on to that. I think that's a really important mindset. I think in the fintech space and in the crypto space, as it relates to large enterprises and again, regulated large enterprises, I think there's been this shift over the past 18 to 24 months more to a risk avoidance mindset.
Totally.
Which doesn't really make sense to me because as a payments company, at least, we're in the business of taking risk. That's what we do. So I think reorienting your organizations and those internal stakeholders around, hey, we're actually in the business of taking risk. This is just another form of risk. Let's understand it and put in place the technology or the controls we need to mitigate it. Is really important. Otherwise, you just get this kind of stone wall from someone that say, no, thank you.
Yeah, and I think it's important to note because these technology advancements, usually the benefit typically accrues to the poorest of the people, right? And as a wealthier, sort of more privileged nation, I think it's our duty to be able to provide that because we can afford to innovate in that way. So that's why taking some of these calculated risks is very, very important in order to drive that innovation forward.
Awesome, thank you for sharing that. So we only have a few minutes left here, so I want to come to our final question in terms of, there might be people out here that are building in this space, or might be people that are interested in what's happening in this space. So with the last few minutes that we do have, what are some of the key messages or key takeaways that you would want to lead the audience with? If you guys could share, kind of anything you might want to add on that we haven't covered today just yet.
I would say a couple things. So one is, at least when it comes to financial services at scale, I think a lot of the change is incremental. So I think if you're building a product or service and you want to work with a large financial services institution, I think if you walk into the room or start building something with the idea of completely rewiring or disrupting, that's great and that's ambitious and I love that. But it's going to be really challenging to get those organizations that you'd want to be your customers to move with you. So I think actually focusing on what's the incremental benefit that I can deliver is actually a better way into some of those organizations and actually something where you'll find them more willing to partner with you. And then second is if you're building for financial services and again at a large scale, starting with these core principles of security, resiliency, et cetera, are really important. Don't build the product and then think about those things as an afterthought because, again, you won't be at the right kind of stage of maturity to work with those companies.
Yeah, and I would say as a startup that started very much in the not Web3 space and sort of have continued to iterate and find opportunities that have been very opportunistic in nature, I think it's very important to keep a mindset of experimentation, right? I think we started off in 2018 as one of the few payments companies in Hong Kong that were not doing crypto at the time. And then throughout our journey, obviously we did payments and then cards and then eventually really focused on sort of Web3 as a potentially core segment. I think this is very much done not through sort of a crystal ball where we had this North Star where we wanted to get there, but it's very much incremental, as Nabil mentioned, where we talked to customers and very much iterated based on the messages that they gave us, and then found the right design partners to really get to where we are today. So experimentation is something that needs to be embedded into the core philosophies of a lot of the ways that these companies are building. And this is relevant for both Web 2 and Web 3. So hopefully through that, you can create more use cases that are solving problems as opposed to just sort of highlighting the technology aspect of whatever solution that you're building.
Awesome. So I think today we covered kind of the gambit of adoption. We talked about the pain points in the market. We talked about what potential opportunities there are leveraging this technology. We talked about some of the use cases or experiences where real value is being driven to contribute to adoption, no matter the market condition, I believe. So I want to thank my panelists for being here today, and I want to thank you all for coming out, and thank you very much.
Happy Friday.
Thanks, Brett.
Thank you so much. So we're talking evolution, not revolution, in blockchain adoption. Thank you to the fantastic panelists. What a great set of learnings. So Hong Kong has established itself as a prominent green finance hub, leveraging a strategic location and a strong financial infrastructure. We've got robust regulatory frameworks, initiatives like the Stage platform, and also active engagement with international organizations. So Hong Kong does attract investors and institutions interested in sustainable finance. Telling us more about this, let's welcome to the stage our moderator, Julie Ju, from the Hong Kong Bureau Chief, Senior Correspondent for 21st Century Business Herald. We would also like to welcome to the stage Standard Chartered Bank's Head of Sustainable Finance for Asia, Tracy Wong Harris. Sally Wong, CEO at Hong Kong Investment Funds Association. And last but not least, Arnold Choi, Deputy GM, Personal Digital Banking at Bank of China. Thank you.
大家好，我哋今日好開心係邀請到 Tracy、Sally 同埋 Anna 呢3位係香港金融界非常之資深嘅嘉賓嚟參與呢一場圓桌嗰個討論啦。咁我首先想問下 Tracy，sorry， 咁作為香港綠色金融協會嘅副會長，你點樣去睇我哋香港係發展好持續金融中心，而家有啲咩機遇同埋挑戰？咁我哋知道咧，渣打係2018年嗰陣時就係集團嗰個層面就設立咗可持續金融嘅部門。咁你哋自己嘅經驗嚟講，咁你覺得銀行喺呢方面嘅發展當中，可持續嗰個轉型當中，我哋可以發揮到咩作用啊？有啲咩角色可以扮演到
？Thank you, Julie。聽唔聽到啊？大家好，哇，好開心見到今年 FinTech Week 人山人海啊！多謝南方經濟集團21世紀經濟報導邀請嚟今日講香港嘅綠色金融嘅論壇嚇 ，thank you。So 我想問下大家知唔知道其實香港已經係全亞洲第一政府綠債發行人之一咧？有冇人知道呢個？冇
知道舉手啊！
我舉手。
第二咧就係、我想話，舊年咧喺2022年咧喺香港可持續金融已經超過800億美金㗎啦。咁其實咧我就係想講，香港咧已經作為一個可持續金融嘅中心咧，已經有唔錯嘅成績下。咁睇翻起機遇同埋嘅挑戰啦。咁喺機遇方面咧，我覺得第一就係、好似 Julie 咁講，轉型金融 （transition finance） 係將會扮演一個好重要嘅角色。第二啦，正我哋今日喺 FinTech Week 點樣係利用科技去擴大可持續金融發展，令到我哋可以更加加快咁達到碳中和啦。咁第三就係碳市場嗱，又係問題問你嘅時候啦，有冇人聽過 Core Climate？好，非常好。呢個係香港 Stock Exchange 咧，舊年已經出咗呢個自願性嘅碳市場。And 我覺得喺 Core Climate 呢個 Carbon Market 方面，香港用 Core Climate 一個 platform 咧，係連接內地嘅碳市場啦，呢個係機遇咧係會好大嘅。咁另外喺 challenge 方面啦，係要做到國際性嘅可持續金融中心，我覺得最大嘅挑戰咧就係點樣去達到跨區互通性呢個 jurisdictional interoperability， 即係點樣去達到國際性嘅標準，而可以靈活咁樣容納喺唔同嘅司法區，呢一個我覺得係 core challenge。咁講翻喺銀行方面，其實全世界要達到碳中和咧，我哋係需要150萬億美金。 所以銀行咧係扮演一個好重要嘅融資角色，將資金咧去轉喺可轉移transition finance 方面啦。咁going back to Julia 話渣打用渣打嚟作個例子啦。咁我哋已經承諾咗喺2025年前咧達到operational 要達到淨零排放，即係我哋嘅 Scope 1、2。而喺2050年前咧，我哋要達到融資活動嘅淨零排放。換句話講咧，即係所有銀行嘅客戶要達到淨零，我哋銀行先可以達到淨零。所以呢一個係一個好大嘅挑戰嚟嘅對銀行。咁喺呢一度要達到呢個目標，咁我哋推行第一就喺2030前咧，我哋係會發出3000億美金去喺綠色同轉型融資方面。第二，我哋建立咗轉型金融嘅框架，去令我哋嘅交易更加快、更加 transparent。咁第三咧就係去成立我哋內部成立轉型同埋 ESG 顧問嘅團隊，去幫助我哋嘅客戶咧提供技術嘅支援啊，去點樣可以更快達到net zero 嘅。好，講到呢度咁多，俾翻佢你。
唔該晒。Tracy 同我哋講咗啲數字，起碼個 set the big picture。咁我下一條問題就想問 Sally 啊，我哋就知道呢幾年其實關於 ESG 投資啊，或者好持續投資，其實呢方面嗰個 topic 都好 hit。咁我想問，即係其實對於好多投資人嚟講咧，即係 why 已經唔係一個問題，而係 how， 即係我哋點樣可以用一個最好嘅方式，將呢啲 ESG 嘅因子係融入到我哋日常嗰個投資嘅 decision making 嗰個 process 裏邊。咁喺呢一方面，你嘅觀察係，譬如香港投資基金公會嗰個角色，你覺得係香港啲機構投資者喺呢一方面佢哋嘅關注嘅 focus 喺邊度？
好多謝今日有咁嘅機會同大家分享啦。咁香港投資基金公會咧，其實就係一個會員嘅機構啦。我哋嘅會員公司咧，都係主要一啲跨國嘅基金公司嘅。咁亦都一啲地區性啊或者內地嘅基金公司咧，都係我哋嘅會員嘅。咁 ESG 咧，其實而家咧已經係差唔多基金公司裏邊嘅 DNA， 即係你同任何一間基金公司講咧，已經係將 ESG 咧包含喺個投資管理同埋風險管理嗰邊嘅。咁如果有人冇將呢一個咧涵蓋喺嗰個管理嘅過程咧，基本上咧都冇乜人去理佢啦，已經係唔入流噶啦。咁而喺基金公司咧喺即係涵蓋呢一個 ESG 最大嘅挑戰係咩咧？大家估下最大嘅挑戰係乜嘢？有冇咩 idea 或者一啲意見可以講？其實咧就係個數據 data 嗰度啦。咁而呢一個咧，亦都係咧，正話 Tracy 提到嗰樣嘢啦，就話你啲 data 不但止要有，同埋咧就要 interoperable， 即係要共通。如果唔係咧，大家咧就雞同鴨講。咁而一樣個發展好重要嘅，大家需要注意翻咧，就交易所咧喺6月嗰陣時出咗一個諮詢文件。就係話將國際個 IASB 嘅標準 standard 咧，就係融落去香港上市規則嗰個 appendix 裏邊嘅。咁呢個咧係一個好重要嘅發展，就因為咧佢可以將國際有一套標準納入香港嘅上市規則，等到上市公司咧一定係要符合到一啲披露，就係話佢嗰個語言係要同國際咧係接軌嘅。咁而呢一個咧，對於未來香港個 ESG 嗰個發展咧，係一個好重要嘅一個部分。同埋咧，亦都即係交易所啦，係比其他好多地方咧開始行先。係我哋明年啦，其實咧會陸續咧就開始落實呢一個嘅。咁係 data 呢一個啦，就對無論係大中小嘅上市公司咧，都係要落實。雖然呢個時間啊，可能咧就係亦都有一啲 proportionality。同埋咧，即係落實嗰度咧，會因應翻佢哋個資源啊、個能力啊，可能咧就會分階段去行。但係咧，呢一個一定係大勢所趨。同埋仲有一樣嘢咧，就係過往我哋好多時咧就係講 淨係 disclose scope 1同埋 scope 2。咁但係咧 ISB 嗰個國際標準咧就話 scope 3，即係話咧你嗰個成個價值鏈上下游嗰啲資料咧，你都需要，即係個 carbon emission 嗰啲資料都需要 disclose 嘅。咁呢一樣嘢咧，對於即係投資者嚟講係非常之重要嘅。因為咧，如果你見好多公司咧 ，scope 1、2嗰啲數據咧，個 carbon emission 嘅數據咧，可能佔呢個比重咧係10%或者甚至以下嘅。咁如果 scope 3而能夠咧係有真係即係符合質素嘅 scope 3咧，對於係理解公司個 ESG 嘅情況咧係非常之重要。
好多謝 Sally 同我哋分享你投資者嗰個 perspective。咁我想問下 Arna， 咁我哋知道上個月即係香港特區政府都發行咗綠色嗰個零售債券啦，個反響都非常之熱烈。咁我唔知台下有冇觀眾都有申購嗰個債券啦。咁我哋中環香港作為即係本地主要嗰個 retail banking 之一，咁你點樣係睇嗰個呢幾年啲 retail investor 個人零售嘅客戶對於呢一類產品佢哋嘅投資嘅興趣啊，或者係有啲咩新嘅趨勢？
首先好榮幸代表中銀香港咧喺一個咁重要 ESG 嘅議題咧去到個分享。嗱，今日咧首先上台之前咧，其實有少少尷尬，因為咧我係唯一一個比較 outlier， 就係唔係因為我係唯一一個男士，而係我冇着綠色嘅嚇。但係我可以話俾大家聽，我係流住綠色嘅血嘅 ，I bleed green 嚇。點解咁講咧？其實係我哋嘅銀行都係一個對 ESG 入邊係一個最 top 嘅 priority。喺中國嘅 level， 政府香港其實甚至中銀香港咧喺 ESG 入邊咧係一個最 top 最重要嘅 anchor 去 drive 我哋任何一件做嘅事。咁我都分享一個比較好嘅消息啦。其實中銀香港咧係連續2年喺 MSCI ESG 嘅 rating 咧攞到 Triple A 嘅 rating， 呢個係十分之難得嘅一個 rating， 而亦都 demonstrate 到我哋喺 E 啦、S 啦、G 啦都有一個全面嘅發展。咁頭先兩位嘉賓咧都有提及過關於喺基金界啊或者喺呢個企業界咧有啲分享，咁我都分享少少 personal banking 嘅一個發展嘅 ESG 嘅一啲做法。其實中銀香港咧喺2年前咧第一次幫香港政府作為安排行即係個 arranger， 係喺全世界第一隻綠色嘅零售債券喺香港嘅發行，其實個反應都十分之好。連續2年咧，我哋都係幫佢哋做 arrange 咧，同埋喺成個嘅 subscription 嘅人數入邊咧，我哋中銀香港係連續2年都係攞第一嘅，即係證明其實喺銀行嘅角度啦、客戶啦對 ESG 嘅理念嘅興趣啦，或者同 ESG 有關對中銀香港嘅品牌啊或者線上嘅服務咧，都係十分之吸引。呢個係第一個見到嘅事。第二件事啦，就同頭先阿 Sally 都有提及嘅，都好類似嘅，就係咧，我哋發覺我哋客戶咧，唔係淨係睇對呢個綠色債券有關係，我哋發覺咧，佢對唔同嘅產品入邊咧越嚟越多興趣，包括綠色嘅債券啦，我哋新係喺香港第一間推出嘅綠色保險啦，綠色按揭啦，林林總總。其實我都分享個數字俾大家聽，即係今年年初至今啦，我哋嘅綠色按揭同埋綠色基金比上年咧係高咗2倍。咁而喺綠色嘅呢個貸款啦，同埋綠色嘅存款咧，都比喺上年咧上升4成。其實呢啲數字話俾大家聽，嗰個升幅係十分之凌厲，選擇係將會越嚟越多，亦都唔單止係頭先講嘅投資啦，同埋產品嘅選擇，而有一個都一定要大家去留意嘅就係越嚟越多嘅 scenario 同埋 ecosystem 去 govern 呢件事。咁我用少少嘅一個比較容易理解嘅分享啦嚇，我諗喺香港Top 10嘅一個vehicle selling 喺其實政府數字都有睇嘅。而家好多電動車係咪越嚟越都出咗？我哋唔單止係可以幫客戶買電動車嘅時候有 green loans 去 offer， 令到佢 promote 多啲嘅一個綠色轉型之外咧，佢可能佢譬如話佢喺屋企又想裝個叉電，或者佢係住喺村屋嘅，又想做啲 solar panel， 令到成個嘅綠色轉型，我哋其實都有一啲嘅綠色貸款嘅方案咧，係俾到佢哋，令到係除咗喺零售嘅投資者啦，包括喺機構咧，都一齊去推進呢個綠化。咁更加容易去理解嘅就係綠色按揭。咁頭先都提及啦，中銀香港都喺呢方面係第一間銀行推出呢個服務嘅，令到好多嘅發展商啊都注重點樣攞到個綠色評級去做到真係個 building 啊 platinum building 啊或者 building 其實好多。你留意下唔同嘅 building 都會睇到，其實呢一個係咪符合綠色嘅建設？咁其實而家香港啦，新樓嚟計啦，我哋都做過分析，其實6-7成嘅新樓咧已經符合㗎啦，好多居屋都亦都有呢個評級。咁所以令到成個香港唔單止係個城市 level 啦，喺個數碼嘅城市嘅建設啦，喺零售嘅客戶方面咧會更加多嘅推進。
好啊，多謝 Anna 嘅分享係非常之詳細。咁我哋下一條咧就想即係3位嘉賓即係一齊分享一下，譬如係而家係即係綠色金融或者係更加廣義上嘅轉型金融，係國際國內都係一個快速嘅發展嘅階段。咁啊，我哋係而家係今日我哋係 GBA stage，咁我哋就想聽下各位即係你哋點睇 GBA 係呢個話，即係呢個 topic 呢個 sector，咁我哋應該即係 focus 喺邊啲 area？ 邊個可以先分享一下 ？Sally。
我講先好，咁我繼續好。咁喺綠色嘅呢個範疇入邊咧，其實大灣區好多互聯互通嘅計劃入邊咧，都俾到好多嘅空間。舉個例，跨境理財通啦。喺呢個港股通、債券通或者將來更加多嘅通咧，其實已經入邊有好多唔同綠色嘅元素喺入邊。我就用呢個跨境理財通作為一個例子。其實我哋中國香港推出嘅時候，我諗大家都有留意啦。大灣區嘅跨境理財通咧，我哋由2年前第一日開始去到而家咧，我都係喺領先嘅位置。其實我喺產品配套方面咧，係有 ESG 嘅基金入邊俾客戶嘅選擇。其實我哋之前都亦做個 survey， 都同香港 IFA 一齊做嘅。佢哋咧，我哋大灣區嘅客戶咧，對 ESG 嘅一個興趣嘅投資咧，其實係超過85%嘅，即係好多客戶都特別對呢件事有興趣。其實唔難理解，因為如果你見喺深圳啊，或者喺東莞咧，其實不嬲都好多唔同嘅基建工廠或者嘅公司咧，都已經係行緊，譬如話電動車啊，係一啲嘅綠色嘅能源啊，咁所以喺呢方面相對上咧係比較容易去接納。咁但係最重要嘅一件事啦，就係點解喺個跨境理財通對嚟講咁吸引呢？因為如果你倒翻20-30年前咧，其實喺綠色嘅一個金融咧，係歐洲、瑞士、法國嗰邊開始，過往嗰10年開始去到美國，去到最近呢5年咧，去到亞洲、香港。咁其實調翻轉去睇，其實已經累積咗好多嘅經驗咧。其實喺歐洲咧，我相信喺客戶揾呢個基金投資或者係唔同嘅債券嘅投資嘅時候咧，一定會望翻喺其他嘅行業入邊點樣做到一個完整嘅配置之餘咧，有一個 ESG 嘅 element。我呢度都補充一句啦 ，data 十分之重要，因為好多嘅新聞都見到，ESG 嘅一個基金或者佢有冇漂綠嘅風險，或者佢喺唔同嘅行業或者喺國家上面對 ESG 嘅評價或者做得好唔好咧嚇？咁我就用最後一個嘅例子去分享咧，就係我哋都好多人都揸車啦，而家好多揸車去大灣區嚇，或者係去日本去旅行，你都會攞個國際車牌去揸。其實發覺咧，唔同嘅道路咧都係唔一樣嘅，有啲行左軚右軚，雙白雙黃完全唔一樣。其實你套用翻 ESG 嘅 element 係一模一樣。每個國家每個城市都係想道路安全，但係咧因為歷史唔一樣，亦都有文化嘅差異，所以我相信咧 at the end 呢個 standard 會唔會係全部統一咧？呢個唔最重要，最緊要係大家一開始嘅時候去互相去了解，睇下人哋嘅 data 係做啲乜，亦都可以用 data 之外有好多 blockchain 嘅技術啦，或者去Web3 smart contract 嘅技術，令到佢喺嗰個綠色嗰個 impact 啦，個公司嘅營運啦，甚至頭先阿 Sally 都好 emphasize 一個同事都有講過 Sally 講個 data 嗰個 standardization 咧，會令到成個行業唔同嘅地區咧都會蓬勃起上嚟咯。
Tracy 咧，我知你哋都有做一啲嗰個研究嗰個報告，可以分享。
可以。咁我哋喺今年年中咧，渣打同世界資源研究所 WRI 咧就合作，咁喺大灣區綠色金融聯盟嘅平台上面咧就發咗一個報告。嗰個報告叫做個名好長啊，粵港澳大灣區深度減排路線同金融支持低碳經濟轉型機遇。其實呢個 report 講啲咩嘅咧？就真係去睇喺 GBA 要去 decarbonize， 要點樣可以做到個 pathway 係啲乜嘢，同埋點樣去融資，去更加加快去達到碳中和。即係個 report 就係咁。喺個 report 度咧就指出喺製造業啦、道路交通運輸啦，同埋喺建築業嗰度三大行業咧，會提供最大嘅減排嘅潛力。咁亦都係話轉型嘅融資嘅重點嘅領域之一。咁喺個報告度，我哋提出咗6大嘅大灣區轉型投資嘅建議。咁包括促進區域嘅碳市場發展，好似我頭先講嗰個 carbon market 啦。跟住第二咧就係去開發特定行業 specific 金融嘅方案啊，譬如好似我哋聽到 EV 喺路嘅 transportation 方面，除咗 EV 大家都知啊，呢個唔使講都知啦。咁仲有咩嘅機遇咧？嗰個 report 咧就 就指出，其實我哋要喺個路度減少嘅 private 嘅車輛，然之後其實船咧係一個都係可以幫到去更快可以令到呢個 transportation 去達到碳中和嘅。咁好似喺建築業方面咧，我哋要睇下點樣要去 existing 嘅 building 要去改造 green retrofit 呢啲咁嘅機會。咁第三咧就係轉型金融相關嘅金融工具點樣去擴大嗰個範圍啦。咁其實有一個recommendation，我希望大家都聽過香港Monetary Authority， 我哋香港政府咧係有一個 grant scheme 咧，係當我哋去做融資可持續融資交易嘅時候咧，有個 subsidy 嘅。咁喺香港真係做得好好呢一個。咁我哋希望喺內地GBA 係可以都有一個咁嘅 grant scheme， 所以我喺內地嘅企業當佢去融資嘅時候，喺境內同境外都可以 enjoy 到呢個咁嘅 benefit。咁今日時間關係咧，我就唔可以講好詳細咁講晒個 recommendation， 但係你可以去渣打個 website 嗰度 download 個詳細。
Sally 可以補充少少
10秒。好啦，咁咧就係承接翻 Anna 淨係講啦，我諗有幾樣嘢去睇翻。第一就係話啲產品嗰個互認，尤其譬如果係符合 ESG 嘅一啲標準啦，我哋而家講緊有啲 common ground taxonomy， 有冇啲產品係大灣區可以發展呢？第二數據有冇啲嘢係可以打通呢？因為呢，我諗好一個大嘅痛點呢，就係跨境傳輸數據。咁呢一個呢，我諗係另一個 topic 㗎啦，時間夠。
OK， 大家可以留住台下再交流。好，非常之多謝今日3位嘉賓嘅精彩分享，多謝佢哋。
唔該晒。
Group photo。
Actually, can I get all the panelists just to stay on stage just for some photo opportunities, please? Thank you so much. Thank you so much. Thank you. Thanks very much. And we're moving on to discussing tokenization. There's been a lot of interest in the potential of asset tokenization. For example, earlier this year, you probably heard that the Hong Kong government issued the first tokenized green bond, the first time this has ever been done by a government globally. What's spurring this interest and how has this been applied? Now, to answer some of the questions, we have an expert panel guided by Zach Yang, co-founder of FOMOPay, with Department of XYZ Matthew Homer, Jupiter Zheng, partner at Hashkey Capital, and Scott Teal, MD at Toko. Please welcome them on stage.
Yeah, please. That's it. Hi, everyone. Very good afternoon. Hope everyone can really hear me clearly. Because just now, actually, behind the stage, we are really trying to make sure that actually our voice is really loud enough. Because the topic we are talking today is really a big topic. It's about the real world asset, RWA. So before we actually really start the panel, so actually just want to give everyone a very brief background about the panelists here. So today actually we have an ex-regulator, we have an ex-lawyer, and we also have a researcher from the bank side. Actually, it's a very diverse panel, and we have 2 investors and 2 founders right now actually on this stage. So maybe actually we will also do one quick round of an introduction for everyone. So maybe Matt, do you want to?
Yeah, hi everyone, I'm Matt. I'm the former regulator and now a venture capital fund manager. Have a fund called the Department of XYZ, investing in early stage companies. Tokenization of real world assets is a major theme of ours. We've invested in a couple of companies, including a data provider in the space called RWA.XYZ, and also a company that's tokenizing government debt called Superstate. And excited to be here.
Hello everyone, I'm Jupiter from Hashkey Capital. I used to be a researcher for the equity market and joined Hashkey and crypto spaces 5 years ago. So I'm leading the research team in Hashkey. So and also we invest more than 300 crypto projects globally, definitely including some RWA asset projects. So it's happy to be here talking about RWA futures and opportunities. Thank you.
Scott? Hi, good afternoon. My name's Scott Teal. I was formerly a partner at global law firm DLA Piper across various parts of the world, including here in Hong Kong. And then I became the founder of Toko, which is the world's most sophisticated tokenization platform focused on real-world assets tokenization. The business started here in Hong Kong, and we've subsequently expanded it into the Middle East, where it's now a regulated entity in Dubai under the new virtual assets regulatory framework in that market. I spent 11 years here in Hong Kong. I'm very pleased to be back here today at FinTech Week. Thanks.
Yeah. Sorry, I think I forgot to introduce myself as well. Actually, yeah, this is Zach from FormalPay. Actually, we are a Web 2.5 company, actually really bridging the Web 2 and the Web 3. That's where actually I'm really trying to bridge those like gentlemen, really try to actually do it in a regulated and licensed way as well. Actually, here we are talking about the RWA. So the first actually question actually we want to actually discuss today is really, wow, I'm really like impressed that actually as one of the final panel here, the crowd is really getting actually, full now. Yeah, I think everyone is here actually want to really see what's really the future, what's really the opportunity for the RWA. So maybe I think, we can really hear actually a lot of actually insight actually from this panel. So actually, Scott, you launched actually the first actually like a tokenized actually debt in Asia. So maybe you want to share with us what's really the opportunity in the RWA.
Yeah, so the passion that I've had in this area is really around the democratization of finance, participation in investable assets for more people and for asset owners and people who are looking to fundraise against those assets to leverage this technology in a way that allows them to create new products that we perhaps don't see today and to access capital. It's often, I think, misunderstood that a lot of attention is on public markets. People understand public markets, they see public markets. In fact, private markets already are 6-7 times larger. And so a lot of the investment activity that occurs in the world is already happening outside of the traditional transparent public markets. Tokenization is going to allow for greater transparency, greater accessibility, greater visibility of those assets, as well as allowing what we believe to be somewhere in the region of $600 trillion worth of assets that are currently illiquid to become part of a more liquid economy. And so that was really I guess the driving force behind creating a complex tokenization product to provide that transparency and liquidity. And I think what we've seen with cryptos, what we've seen with NFTs is that there is a real desire to participate in virtual assets. Imagine a world where the regulatory frameworks evolve and trust evolves to a point where all people are going to be able to participate in real-world asset-backed fractional things. I've had many conversations with regulators around the world, including here where I was based in Hong Kong, around the need for that regulatory support to actually democratize that so that people can actually participate, including at the retail level. So that I think is the opportunity.
Yeah, thanks, actually, Scott. Yeah, so I think maybe I will just jump a little bit because actually just now you mentioned really about the global regulators, and Matt actually happened to be really the ex-regulator. So maybe I think you want to actually share what really attracts you to jump from the regulator side to really like an investor right now. Yeah, what do you think is the opportunity here?
Yeah, I mean, I think that our thesis on the space is that everything that can be financialized will be financialized. And we're definitely we're seeing that happen, and the tokenization will be a critical element of that. If you take a step way back and think about the history of money over the 5,000 years that money's been around, it's trended in a pretty consistent direction over its history, right? It's trended in the direction of greater speed, greater efficiency, greater portability, and tokenization is really, I think, kind of the next critical unlock in kind of the evolution of money and financial services generally. I mean, it's interesting that tokenization is like a big trend of 2023 because people have been talking about this for a long time in the blockchain space. And so you might be wondering, like, well, what's different now, right? And like, why is now a different moment or not? I think it is for a few different reasons. One being that we've now had a massive demonstration effect in the form of stablecoins, right? So you can think of stablecoins as really being the first major RWA to be tokenized and at massive scale, and showing that there is product market fit for tokenization of RWA. And of course now we're seeing a lot of tokenization around treasuries, and all sorts of other, other areas as well. In terms of like quantifying the opportunity, the projections are really mind-boggling and frankly a little hard to believe, although I'd love for them to be true. But like I think if you look at institutions like BCG, HSBC, Citibank, the projections are that about between $5 trillion and $15 trillion of assets will be tokenized by 2030, which is significant. I agree with Scott. Like I think the big unlock, the thing that's most exciting about tokenization of RWA to me is globalizing financial services. And creating access in new markets. I mean, there are very practical benefits to tokenization, efficiency, speed, all those sort of things. To me, that's not what is like so exciting. I mean, those iterative improvements are useful. What's exciting is enabling people to have access to assets that they've never had before.
Yeah. Thanks, Matt. Then actually over to you, Jupiter, because you are our investor as well, and you are one of the largest players here in Hong Kong. So what's your view?
So my personal take regarding RWA is that I think maybe we look at the history in 5 years ago. We already
Jupiter, maybe you want to put your mic a little bit.
Yeah, better.
Yeah,
better.
that's better.
Okay. So I think 5 years ago we have a lot of people talking about STO, security token offering. So, but at that time we don't have a mature regulatory regime and the laws to make that happen much easier. But nowadays, I've seen more and more things to be happen, and we see the real world asset. And so now we're talking about RWA, especially given in the last year when the whole crypto market has been embarrassing some troubles, we see the new opportunities to be happens combined with the tokenization and the real world asset. So I think in the future we can see RWA as a more mature tunnels for the tokenized world and the real world, because in the future we'll see a lot of assets in world are not quite liquid, right? So we see some properties, some hotels, or some real estate that we have the cash flows, but they cannot be traded as a very liquid asset. So I think blockchain technology providing such a tool set for real asset to be become a tokens, to become a high liquid asset on some trading places or trading venues for the people to invest. So that's why I think the combination between two is also very exciting. And also, during the past few years, we see that in the crypto world, not so much real GDP or real yield happen in the crypto, but in real world, we have a lot of things. They have cash flow, they have real world, but they don't have the liquidity. So we combine with the liquidity from the blockchain world with the real yield from the real world. So that's a perfect combination in the future. But we need to tackle with regulatory structures, everything else. But in the future, we can project we have a very big $1 trillion market in the future. Thank you.
Yeah, thanks, Jupiter. So just now actually all the panelists actually mentioned that right now I think RWA is really a huge opportunity. There is a lot of problem also at the same time for the regulation, for the liquidity, all those ones. So the next question actually we want to also discuss a little bit. What do you think is really the bottleneck? What do you think actually is really like stopping us actually moving actually the RWA actually to the mass adoption? So anyone want to start first?
Yeah, I'll start.
Sure,
and I'll throw it to my colleague Christy Schwartz up the back here for the work she's been doing in the Middle East as well. I mean, the blocker, to be honest, through my journey in this space, hasn't been a desire to do it. We've had asset owners, high-quality asset owners and issuers wanting to do this for many years. It's been the clarity around the regulatory route to market. how can I do this? How can I do this in a way that's compliant? How do I do this in a way that the regulators understand and are happy with? And that to me is the point at which we are now, where we're starting to see regulators around the world, perhaps with VARA in Dubai being a real leading case here, bringing out purpose-built frameworks. We see lots of frustrations where people are wanting to do this in different markets, and they're trying to put this digitized asset into a TradFi regulatory structure. And either those regulatory structures are, because the technology allows new deal shapes, maybe smaller deal shapes, smaller bite sizes, greater participation, actually they become ill-suited to very heavy-handed traditional capital markets regimes such as the US, for example, where you can do this, but it's just such a heavy lift that it kind of stops all but the biggest projects. In other markets, there are requirements to have independent third parties, and there are good reasons why you need transfer agents or other independent third parties to bring trust into the ecosystem in traditional paper-based securities, for example. However, when you have an immutable blockchain that provides a permanent record of everything that ever happened and who owns all the assets right back to its inception, you suddenly don't need things like transfer agents, because we have this wonderful piece of technology that is incidentally doing a real-time, immutable job that doesn't have human error, delay, and cost built into it. And so really, to me, the barrier has been the lack of purpose-built regulatory frameworks. And as that's changed, and we're beginning to see that change happening now, that's what's going to unlock this market.
Thanks, Scott. Matt or Jupiter?
Yeah, no, I'm happy to jump in. I mean, I agree. I think that Scott that raised a good point on the regulatory side. I'll talk about something a little bit different since he covered that area. I think that demand and distribution is still something that has to be really solved, as well as like the user experience. It sort of depends on who you're focused on. But you can. I think we've seen so far with some prior attempts in tokenization of RWA, a mismatch between the issuers or the supply and the demand side, right? I mean, it makes sense. I mean, people would want to tokenize something that's illiquid to make it more liquid, but you need to have people that actually want to buy those assets, right? And so I think following demand is really important. I mean, in finding areas where there's latent demand that you may not have thought initially. So for example, I mean, going back to the stablecoin example, I mean, it turns out that there are people all over the world that want access to US dollars, and like stablecoins were a way of facilitating that, similar with treasury bills. So I think that solving distribution and finding areas where there's actually real demand is going to be really important to scaling the space.
I just want to jump in on that demand, if I may. I mean, there's a chicken and egg problem here.
Yeah.
I've been saying this for 5 years. I'm going to say it again. Hands up if you would like to buy an IFC coin so that you had a fractional interest in the IFC building and that you got a monthly return based on its operating profits and exposure to the capital appreciation of that asset. Hands up who'd like one of those coins. There's your demand. Wow. And yet the SFC won't let most of you buy it unless you're rich enough.
Yeah, thanks, Scott, Jupiter, and view you?
Yeah, maybe I can talk about supply side. So, yeah, I think two speakers are talking about the demand side. For supply side, I see some projects, either from crypto world or from TradFi world, there are some pilot scheme on the RWA. For example, makers buying T-bills, or some in Hong Kong HMA have been issued on-chain green bond. Also, some institutions in Singapore also issued, the fund on some chains. So I want to say that when people want to issue a RWA, there's no standard, right? For example, if you can choose the permission chain, or you can choose permissionless chain. So I think if we don't talk about the regulation side, which chain is most maybe more beneficial for the RWA asset? For example, if you use the permission chain, you may be facing the liquidity problem. There will be less people joining. But if you go to the public chain or permissionless chain, there will be a lot of liquidity, a lot of people trading. but you need to face some people in some place cannot trade such asset due to local regulations. So there are some consideration between different, I won't say, vendors or the infrastructure for the RWA. I think that's still not ready yet. So I think maybe the traditional finance and the crypto world people can join together to find a way to make the RWA issuance is more convenient. For example, if we issue RWA asset in different chains, the liquidity has been scattered into different chains. So that won't be utilizing the liquidity advantage of crypto or blockchain technologies. So it's a problem need to tackle in the future.
Yeah. Yeah, thanks. Just now, actually, we discussed really about the supply and the demand, actually, about the RWA. And also, actually, if you look at actually the history of the Web3, actually, it started actually from the Bitcoin, then move on to ETH. Then we have actually the DeFi somewhere, we have NFT, we have GameFi. So right now, actually, RWA, actually, they are seeing like maybe this one is going to be really the future of really the combination actually between the Web 2 and the Web 3. So that's really how actually we really connect the supply and demand here. So the last question we want to discuss here. Oh, sure.
Well, I was just going to mention one thing. I think that one area. I mean, when we think about real assets, we think about assets that we know already, right? But I think one of the things that's exciting is creating new types of assets that didn't exist already. Yeah. So, for example, a company I invested in previously, I was just reading this morning that they're tokenizing pieces of like a football field. And if like something happens, so you can kind of like virtually, they can own like a piece of the field, and then if something happens on that piece of the field, right, like a foul or whatever, like you get something, right? And so I think there's just a lot that we don't know yet, and a lot of markets that don't exist at all today that will be enabled by this, and that's probably what excites me the most versus just tokenizing things that we're already familiar with.
Yeah, that really actually leads me actually to the final question actually we want to actually discuss here is what do you think is really the future of RWA? Yeah, so Matt, do you want to actually continue your answer?
Yeah, no, I mean, look, I think it is. I think that we're at an interesting point in the evolution of the industry where I think there are a lot of debates around foundational issues, permissioned versus permissionless. Do we tokenize liquid assets first versus illiquid assets? And I mean, I really believe that the future is permissionless, but that it will be, we'll see, but permissionless systems that exist within a regulatory context. I think it's going to take a little bit longer to get there than maybe some of the projections would suggest, but I don't think we yet know what the next big frontier is after stablecoins and after treasury bills. But again, like I was saying earlier, I think what will be exciting to watch is new markets unlocked. I mean, another one would be creator content, which I think is very interesting, and that's where there definitely are regulatory issues and security issues. But imagine if you're a content creator, a YouTube creator or whatever, being able to tokenize your content. That is significant for a large portion of the population, especially as sort of new generations, content creation becomes like a real livelihood.
Cool. Jupiter, what do you think actually is really the future of RWA for HashKey?
I think every crypto company will have the opportunity or the vision for the RWA because it's a big market. As we know, the crypto asset market cap is still small, so we can introduce more RWA into the crypto, and also it can bring more, the business. This business used to belong to the TradFi institutions. Now it can, as a crypto native companies, we also have some. We can also eat some cake on this. So in the future, I think we can try more on the RWA introduction from the TradFi world to the crypto world, and also we need to maintain a dialogue between the regulators, the vendors, and the players, buyer, traders on this. We have it's maybe a different community as compared to the traditional crypto community as a whole. So we need to. We also have some investor education part. A lot of things to be. Need us a lot of work to do. So I think it's a long journey. Yeah.
Yeah. Scott?
I'm going to go back to the Web 1, 2, 3 and really what we've seen. Web 1, the information internet, it turned us all from having to go to the library to find a book to having a large part of human knowledge accessible at our fingertips as readers. Web 2 enabled us all to become broadcasters, content creators, journalists. Web 3 and the promise of real-world asset tokenization is going to allow us all to become part of the value. Now, Web 3 is the internet of value, and it's going to allow us to participate as, on one side of the deal, as investors, as participators, as those who have a chance to buy that IFC token, which I'm still going to do one day, I'm determined. But on the other side, it's going to allow people to become bankers. So you can actually start doing things like microfinancing and participation. So it's actually going to truly democratize finance and allow people to both invest on one side, but also to raise funds from their assets on the other. And that to me is the promise and the future.
Okay. Well, thanks. Yeah, really, thanks for the amazing edge panelists here. Unfortunately, we only have like 1 minute left. But I really see a lot of audience today. We are almost a full house, and unfortunately, we cannot really take the question Q&A actually on the stage here. But actually, if you have any question, feel free to really approach the panelists. Then we can have definitely a deeper conversation offline. And a round of applause to the panelists. Thanks, everyone.
Thank you.
Thank you. Thank you so much, Scott, Jupiter, Matthew, and Zach. Thank you, guys. Hey, how are you?
How are you? Good to see you.
Good to see you. Good to see you. Yeah. And so we've listened to tokenization and the massive potential within tokenization. And as a lot of you know, the tokenization is one part of blockchain. So carrying on in this blockchain discussion, we want to talk a little bit about what the future of the blockchain technology looks like. And we've already heard from the previous panelists where it's been deployed in microfinancing, other kind of real world, and also potentially intangible kind of assets as well. But and aside from advancements in decentralized finance and non-fungible tokens, blockchain is being used in supply chains, healthcare, trade financing, and beyond. So now we have a fireside chat, and I'd like to welcome on stage Dr. Paulo Tasco, the founder and director of UCL Center for Blockchain Technologies and the DLT Science Foundation, as well as Michael Gu, the co-founder of Azuro. Thank you. Please. Thank you.
All right, I'll do a mic check. Mic check.
Yep. Yeah. Sure.
All right. So, the mic's working. So, hi guys, welcome to our session today about the future of blockchain technologies. I am Michael, and I'm the co-founder of Azuro, which is a capital firm investing in Web3 and, well, of course, the future of blockchain. Now, there's no better person to discuss this topic about the future of blockchain than Dr. Tasca. Dr. Tasca is a professor at University College London. He is the founder of the DLT Science Foundation, and he's co-authored multiple books on blockchain. So the list was really, really long, so I really have the honor of introducing Dr. Tasca.
Thank you very much for having me here. It's a pleasure and an honor. I'm really glad to be in Hong Kong. It's the first time for me to be in Hong Kong, so I'm twice delighted. Look forward to our fireside chat.
Yeah. So first and foremost, we just want to talk a little bit about what are the current challenges in blockchain first. Because obviously,
Well, I did some research in 2016, 2017 around this topic. We did survey 3,000 people from our mailing list from University College London, people from the industry, advisors, professors, and we were asking the same this question. is a study that I'm going to repeat soon to understand what happened after 6 years. But the results we got, back in time, I think are still, some of the challenges are still there. I'm talking about, the challenges, you can group them in three. So you have technical challenges, you have legal challenges, and you have business challenges. Plus, you have the overlap between the three of them, which is the multidisciplinary challenges. I think that with respect to the multidisciplinary challenges, one problem that I discovered back in time. Thank you. Okay, fine. Thank you. I discovered back in time, and I think it's still there, is a lack of interoperability.
That's right.
So we have seen a growing, explosion of different type of consensus mechanisms, protocols, and we are still now at the very beginning of what means for these many different blockchains after this Cambrian explosion to talk to each other. How we can enable them to talk to each other. This is the one challenge.
Do you see a multi-blockchain future? Is that the future that you envision?
Yeah, absolutely, yes. I was never, in favor of one blockchain, one solution. When in 2015 Ethereum came to market in July 2018, there were people say, "Oh, Ethereum will be the platform for everything." Yes, it did solve a lot of problems, kind of creating sort of application toolkit for building up the apps on the top of blockchain, and many others came after Ethereum. Was kind of an innovator in that space. But if you look at other blockchains, they serve different purpose and different needs, and they serve different angles. And so there is space for different type of blockchains because they have a different type of purpose and different type of goals in terms of business applications or even societal applications. So I don't think there will be one blockchain running them over.
I think so, absolutely. Because you started in 2016. Probably Bitcoin was just like one block every 10 minutes, so it was very slow. Yeah. And now there's different purposes that cropped up. Do you see? I see there's a very big push in recent years for high performance blockchains.
Yeah.
Do you think like a super high performance blockchain will solve all our needs, or do you think you still need to have the interoperability between everything?
Yeah, I think. The interoperability is a problem of indirectly related to standardization. So interoperability means how you enable different data transitional data to be exchanged between different environments, and this is something that doesn't have much to do with speed. And speed also comes adopts with scalability, comes adopt with security, if you want, on one side, and decentralization. We know that it's very difficult to achieve all the three components and principles at the same time within the same architecture. So you need to find a kind of a compromise.
Right. And just talking about blockchains as well, there's always the public blockchain like Bitcoin and Ethereum, and of course private blockchains that are more like centralized. So now there comes a problem where what should people use, right? I actually see in the Hong Kong Monetary Authority, they were using a public blockchain, a Polygon, for their NFTs. Do you think that, how do you think these public and private blockchains will operate in the future?
Well, this somehow led to a concept that I'm developing recently, which is about the hidden or unearned competition, currency competition, multi-currency competition between private and public, and between governments and big, corporations. Because if you look at some of cryptocurrencies like Bitcoin, they adopt the concept of freedom, transparency, permissionless ledger, and they borrow the concept of blockchain as a public good, public memory, and crypto becomes a kind of a byproduct of this public memory. This is the concept of money at the fingerprints of everybody, where everybody can have control of. If you remember, if some of you remember in the white paper of Satoshi Nakamoto, is one CPU, one vote for this democratization of money. When you instead go into permission private ledgers, then you have a different type of concept about money, which is a money as a convention. And history of economic history teaches us that if you want to go into that path of money as a convention, you need to establish the trust providers. You need to establish in the economy, to determine in the economy who are the trust providers. And so far, the trust providers in the payment system have been the central banks over the last 3 centuries. More about. So I see a competition also in that space. In that space, we can label the money as a convention. Also in that space, there is a competition between states that are developing, competing between each other on developing the central bank digital money, digital currency. There are around 130 different countries in the world at the moment at the pilot level or at the end of the pilot level. Not just small countries, Sweden. I mean, this morning also we hear about the Hong Kong, tests, etc. So a lot of countries, and on the other side, that you have big corporations that are also, using this concept of money as a convention by, enabling, this money as a stable coin for settlements or other operations. So this concept of money as a convention, rather, very likely going to use a private ledger, and this comes at odds with those that are, the initial promoters of this cryptocurrency revolution back basically 12, 13 years ago, that were, promoting the Bitcoin adoption as an alternative solutions to the centralized payment monetary systems.
Right, that's actually very interesting because we cover a very broad base of topics here, private blockchains and different organizations, government, companies, and of course the general public.
Yep.
Now what's actually quite interesting is that we see a convergence almost recently of companies trying to interact with the public blockchains, and of course government trying to enforce regulation in these few recent years. So do you think it's actually much easier to regulate, say, a private blockchain, or would it be something like this whole ecosystem? How would that work?
Yeah, absolutely. So it's much easier to regulate a private permission blockchain because the borders of the networks, the numbers of the nodes, the players of the network are well identified and very much well accountable if there is a kind of a regulation on chain. Instead, if you look at the DeFi, decentralized finance, which are protocols governed by decentralized autonomous organizations, there is no kind of accountability. It is difficult to identify the responsible players and actors that control and govern the protocol. That's why you see in the public debates very often the big corporations coming from the banking sector primarily attacking quite a lot the DeFi because it's basically a new concept, if you want, that adopt the concept, a new ways money of decentralized finance that adopt the concept of a ledger as a public memory, because everybody can substantially take part to the governance of DeFi protocols. So this comes at odds, and therefore in that type of domain, even the central banks or the financial market authorities that have kind of problems or difficulties to intervene or regulate because there is no counterpart identified.
So it's actually just really difficult to regulate something that's in DeFi. Yeah. We see billions of, actually not billions, but millions of dollars move into particular protocols at a snap of a finger,
absolutely.
But we don't know where it's coming from.
No.
Right?
Yeah.
But do you see that being a power? Do you see that being a threat? Because for me, I actually experienced that firsthand when I saw the rise of DeFi, where just money flowed into protocols that were launched, a day before. Do you see that being a threat to how money operates and how finance operates, the traditional finance operates?
Well, I think there is a journey that we are taking with the tokenization. And the tokenization is something that both the innovators, the disruptors are embracing. and also the big corporations. We are talking about $15 trillion of assets to be tokenized in the next few years. The tokenization, though, is a sort of process that enable to increase the moneyness of an asset. What I mean by moneyness is the proximity of this illiquid asset to cash. So what is going to happen in the years to come probably is very likely that a large portion of illiquid assets that at the moment sit off the electronic books, like real estate primarily, will be tokenized at a massive scale. And if everything that is tokenized resembles cash, as I said, because of the concept of moneyness, then we are going to ask in a few years from now, what is money? What is the role of money if everything can be money? And if we start challenging what is the role of money, what is the concept of money, if everything will be tokenized, and everything will be tokenized eventually, what is the role of the trust providers in a decentralized economy like that, where basically we don't really actually need anymore a trust provider? So these are basically this is basically the trend I think we are going to see in the future. A huge liquidity transformation of illiquid assets that are basically boosted by the technology, the blockchain distributed ledger technology, and at the same time a redefinition of the concept of money, also at the end user level, where if you have everything at your in your asset portfolio resemble cash, because it is basically transferable, in real time, costless, borderless, 24/7, then you really don't know anymore what is cash. And in that scenario, then I think we need to really redesign the so-called trust providers that were the trust provider of the payment system that we set up 200-300 years ago in the nowadays old legacy payment system that we have at the moment.
So, I mean, you're talking about this grand future with mass tokenization, real-world assets. So now we'll delve back to this concept of the future of blockchain technology. So to provide this foundation, to facilitate this massive future, what do you think are the most critical aspects? What do you think people should be really putting their time, money, and effort into right now?
Well, this is a very nice, interesting question. So I think we have seen, I'm not the first one to say this, probably you heard also this morning, we have seen a kind of a technology convergence of AI and blockchain, which is happening at high speed. So I think I would like maybe people to think about how to bring together AI and blockchain. For example, AI is good and is also bad. There is always the duality of the technology. So all this misinformation, deep fake, fake news, etc., driven by AI, can somehow be, is a problem that can somehow be tackled by blockchain.
So we're using the truth aspect of blockchain.
Exactly, with the provenance aspects, the trustability of the data, and there are companies that are already practically doing this in other domain. But using blockchain to solve some of the buy-side problem of the AI, and at the same time using combining together, designing, reconceiving new system of decentralized AI model, where basically you have a kind of a distributed, independent source of data, verifiable, that every AI model can borrow from without moving from the current centralized data centers where the AI take the data from, to a distributed data center where everybody can have access to, and the data and for training the models and the AI will be basically.
So you see that future where, right now we have very centralized AI systems like Microsoft and OpenAI. They have a centralized system there. So what you envision is a future where the data is on chain, or is it? Do you think every sort of data should be on chain, or do you think like just some particular models or linked to models?
We can talk about data quite a lot because there is also the emerging field of synthetic data, and the AI very often they don't need the real data to train their models. This can anyhow lead to bias in the decision-making process of the algorithm. So the problem of heavy distributed data center is regard about the authenticity, the accuracy, regard the aspects related to the controllability of the models, especially in the training sessions, because at the moment the AI tools that we are using every day basically we don't know on which data set have been trained. We don't know how they are learning. Even though we know probably the algorithms, we can learn the algorithm, it's not enough. You need to learn which data set they have been trained from in order to understand which prediction maybe they can bring to us. Because if the data set is wrong or there are some bias, then the AI will amplify this bias in the output. So having a distributed data center that can be used by everybody and can be checked by everybody, where data is traced and tracked, then I think it could potentially be a plus in that direction.
Awesome. So that's a very exciting future. So we talked a little bit about, actually covered quite a lot. So from technology to regulation to private and public blockchains, and of course, what you like which is AI and blockchain. Finally, I want to end up a note that we kind of were talking about when we were entering the stage. You commented on there was a speaker lounge sign that crossed out, it's not crypto, but blockchain. What was your thoughts on that?
Yeah, I've seen in the I'm in this sector for the last 12 years, so I'm one of the early adopters in this space. So I've seen a kind of in the last years a tendency, especially from a tendency of the crypto space to become more institutionalized. So we are far from the early type of conferences I was used to go, where we had a lot of people in their hoodies or masking their voices, and they were basically most of them anarcho, anti-capitalist that were trying to renovate the economic models. What some industry leaders could call a bunch of kids. Now in the crypto conferences I go, I see most of the people in their suits and their ties and very institutionalized. And also the concept of what crypto is has been institutionalized, because many institutions, they try to use the blockchain and they try to negate the value of the cryptocurrency. They say crypto is bad, blockchain is good. And I've seen here even in this conference. So me with my foundations, the LT Science Foundation, we want to establish the trust in crypto. We want to rebuild this value of crypto, because crypto is good, blockchain is also good. Both of them are good. We cannot have blockchain without crypto. And I think this is something that we need as professors, educators, we need to educate and fill this knowledge gap even between industry leaders and the developers and the policymakers.
Awesome. So I would like to thank Dr. Tasca for giving us a lot of insight today. I hope you guys had a good session, and if you want to find him, he's obviously a professor at UCL. So yeah, just check it out, and we'll see each other soon. Thank you.
Thank you. Thank you so much, Paolo, Michael. Thank you. Thank you so much, guys. Thank you. And how the day has gone. We are now down to the last panel of the day. It's actually gone by so quickly, and this is the last day of Hong Kong FinTech Week as well. So let's end on a really high note. Our last panel of the day is going to be focused on the tokenization of the wealth market. So the global wealth market is being revolutionized by the digital-first investment experience for both the public and the private markets. Our speakers will discuss how tokenization of the private markets is democratizing access to these asset classes and what regulatory challenges and changes are driving the adoption of digital securities. Can I welcome to the stage, please, Pat Hourigan, CEO and co-founder of Frictionless Markets, and Sylvan Andermatt, Director of Silver Management SA. We also have Julian Kwan, co-founder and CEO of Investec.
So, global wealth management is being revolutionized by the digital-first experience. And one of the main things that we are looking at here is tokenization of assets. So just over to you, Pat. May you introduce yourself briefly to the audience and then speak about how this has an impact on the
Yeah. Well, first of all, it's great to be here. Thank you for inviting me. My name is Pat Hourigan. I'm the founder and CEO of Frictionless Markets. We're a Luxembourg-based issuer of digital securities. We operate a fund and the technology infrastructure to allow funds to tokenize and to distribute into the global wealth market.
Thanks, Sylvian, and great to be here. My name is Julian. I'm the co-founder of two platforms. InvestorX is a Singapore licensed tokenization platform. It has a broker-dealer and exchange license, but it runs a service as a software model. So investment firms can co-brand a section of the platform and tokenize whichever real-world assets they'd like in a SaaS type model, just a monthly subscription. We also built and run IXSwap, which is the first automated market maker for real-world assets. So it allows anyone who owns or issues or owns a real-world asset to start their first liquidity pools. So we call it the Uniswap for real-world assets or security tokens for anyone that knows what Uniswap is.
Thank you so much. So yeah, about myself, I'm part of Silver Management. We do help blockchain corporates in Switzerland with the incorporation and then running the business from keeping them operational from corporate business, corporate perspective. And let's start into the topics. So let's kick off. So how does tokenization is revolutionizing the digital wealth business? Maybe with you, Pat.
Well, I think if you got to look at the market, right? So both Julian and I, we operate in what's essentially alternative asset classes. And we are trying to distribute these asset classes to the global wealth market. That's the intention, right? Thankfully, this market has been thriving for the best part of 20 years, and it's growing, right? So you look at a particular asset class like private credit, it's now a 1.5 trillion market. It's going to add another $1 trillion worth of transaction in the next couple of years. It's passed out the public high yield bond market and the broadly syndicated market. So there is already a highly functioning demand for these asset classes. What we're missing, especially in the private markets, are really two things. One, efficiency that allows investors to access these difficult to reach asset classes in a way that provides market depth, which is sort of what you guys do at IXSwap. Provide market depth and also provide the financial product innovation so that customers, investors can reach these products with a degree of confidence and be able to trade them between themselves so that there is a functioning market, right? So when you look at what is tokenization, it's just simply a delivery mechanism for financial products that already exist that are not efficient enough to be broadly accessible. That's my basic definition of why you need it.
So we need some confidence in the products and in the structuring. And coming to that, I mean, if we want to have tokenization, which is basically a digital representation of what are already assets that are underlying, so we would probably natively do that more on a private blockchain, so because we then have more control over it, so kind of who is actually writing on it or kind of who is contributing to it. But maybe we can also do that on a public blockchain. How is your take on that, Julian?
We're very pro public blockchains. We have been since we started focusing on the space. I think that all the innovation, most of the assets from the digital asset space, everything from Bitcoin, Ethereum, NFTs, DAOs, stablecoins, everything's been issued on public chains that matter. So we've been strategically focused on the public chains because I think that's how you connect to the power of blockchain, decentralized finance, automated market makers, and all the new products and services that don't exist today that are being built and conceptualized out there. That's how we think about it. I think there's a world for both. A lot of the banks used to just be private chain. Jenny Johnson, CEO of Franklin Templeton, said 2 weeks ago that public chains will win. Public chains will win over private chains for all the reasons that I mentioned. At the end of the day, we're agnostic to blockchain because it's just a technology stack. On the wealth front, I think what's really interesting now is that we also focus on private markets, so everything is not publicly listed. Private market assets have been notoriously difficult to get distributed into captive pools of investors. Wealth managers, private banks, historically have only been selling predominantly publicly traded assets. They're tradable, they're digital, they can see what fees they get, they can charge their investors fees. And what's interesting in the last couple of years is there's a race to zero on those fee structures because it's digital, there's digital FinTech platforms attacking the space. And just as an example, if you want to sell a public stock for a client in a private bank, you probably have to do it for free, or maybe it's 1 or 2 or 5 basis points. So the reason I give that example is because a lot of these groups want to invest in the private market assets, but due to all the complexities around that, it hasn't happened. We start to see tokenization of private real estate funds, startups, all these exciting alternative assets coming in the format that these guys are used to, digital tradable platforms. Now they're going to start to get a lot more bullish to buy these assets. They've already started selling Bitcoins, Ethereums. The next natural evolution is real-world asset security tokens. So I think the channels for distribution are going to dramatically change, and they can make a lot more money. If you sell a private market, so if you compare the trading of the public stock at 0 or very, very few basis points as a fee structure, and a private company is willing to pay 300, 400, 500 basis points to a capital raiser. So economic incentives are strong enough, but I think that's the direction we're going.
If everything is moving so far towards so cost-efficient structuring, would you say that this is also driving like democratization of this access?
Well, it's a really important part, right? Because if you look at the great innovations in the financial markets, we talked about this before we came on. ETFs are 30 years old today, right? ETFs are probably one of the greatest financial innovations that have existed because they provided an access mechanism to hard-to-reach asset classes, right? That's what they've done. About 40% of the NYSE stock exchange trades on a daily basis now are ETFs, right? So there is a strong indication that if you provide the structuring to get access to hard-to-reach asset classes, there is the demand out there from investors to invest in them because, as Julian says, you have this stronger upside. When you ask the question about efficiency always ties in with operating expenses, right? If you look at money market funds, there is an accepted fee basis point structure for money market funds, right? If you go beyond that, you're not going to sell the fund, right? So when you start looking at the private markets, efficiency is really important, right? Because now you're going to have to try and syndicate across different esoteric asset classes, and you got to try and put them into a format that has a low operating expense so you can actually get out there, distribute them, and sell them, right? So it's very important to have an efficient mechanism of providing access to the asset classes. And that means, I agree with Julian's point about public blockchains. The great technology innovation is in public blockchains, not in private ones. When you're now seeing regulators recognizing that public blockchains probably are the delivery mechanism that's going to win out, right? So you see different flavors, public permission blockchains, right? This stuff is important because if you manage to deliver your product in a cost-efficient manner, you have the ability to be able to broaden access to the market. So efficiency is as important as access.
And if we have now a very efficient structure which also should give access broadly, I mean, would you say that this is also giving access to like a global customer base so that it is basically increases the reach of your product? I mean, maybe Julian?
Yes, for sure. we started our platform originally in the first generation of P2P equity crowdfunding businesses in 2014, 2015. The first generation of those platforms are predominantly marketing websites, because behind the website, when you want to invest, you invest on a piece of paper. And you go back into the whole administrative costs around having many shareholders, if you're the one issuing the asset. So the first thing that we saw when the ICO boom happened in 2017 was this was like the next generation of crowdfunding or online investments. You can set up even in an ICO, cryptocurrency, you can issue 180 million tokens, 1 billion tokens, 2 billion tokens, all around the same price as issuing 2 tokens once you set up. So one of the reasons why a lot of investment structures are not structured historically for retail investors is because of the cost of the paperwork. They don't want to take a $100 investor because it's going to cost them how many hundreds of thousands of dollars to process this. So 100%, I think, using tokenization, and it's being rapidly evolving all around the world, and there's a million different structures. But using tokenization structures, like we can do one example in Singapore, we can set up a Singapore company, we can issue an economic interest token that is not exactly the same as an equity token, so the Singapore company can have one shareholder, the original shareholder. We could issue 10 billion economic interest real world asset security tokens attached to that share. And every year for the recording, you'd have one recording. But the point is, you could have 10 million shareholders, investors into the project, and whether it was 10 million or 2, setting up the smart contracts. What I'm discounting, which is true, is also like KYC functions. Maybe you have to pay $10, $20 per person. But if you take away normal, sort of these low-cost elements, you can now start to see that the reasons why people wouldn't want so many investors have been solved. And so I 100% think that it is democratizing across that.
Thank you. And if we now take up that we have such a huge number of investors, and some of them may want to invest more in a traditional way, so let's say off-chain, and others want to invest in a digital way, like on-chain, we would have a split of liquidity between an on and off-chain channel. So would you say that this is more a challenge or more an opportunity?
I think it's a lot more nuanced than that, right? It depends on the financial product, right? So you're speaking about the investment experience. Is it atomic settlement? Is it USDC, USDT, or is it fiat? For me, that's not really the important aspect of how you reach investors. What's important is that the investor understands the product that is being sold, right? If you're trying to sell a complex financial product to retail investors, you are really going to struggle to scale that market, because historically it's been difficult to scale those types of markets, right? However, if your financial product fit is you're taking products that professional investors can't access efficiently today, that's a different fit, right? So it doesn't matter whether it's fiat being deployed in or if it's a stable coin, because they're really just considerations for how you set up your structure and your technology. The important point is, what product are you selling and who is that intended audience? And there are big categorical differences between selling products to retail investors and selling to professional qualified purchasers, right? And all the different layers in between. If you look at the qualification criteria here in Hong Kong, you have multiple layers of PIs. There's a reason for that, right? Because the level of sophistication in the market must match the complexity of the product, right? If you look at complex products like private credit, private infrastructure, PE funds, REITs, those structures are complicated, and it is generally beyond the comprehension of average retail investors to understand the risks in those products. So you must be very cautious about what product you're selling and to whom you're selling it to. I think that's, for me, that's the cautionary point. And if you figure that out, you're on a winner. If you try to sell complicated products to investors who don't understand them, you're going to struggle.
Speaking of caution, so we want to be cautious, and that's also one of the biggest aim usually of regulators. So how is the sentiment in regard of STOs, so security token offerings and such things in Asia, Julian?
So Singapore is extremely bullish on everything except retail investor trading of cryptocurrency. So they've been trialing projects in Singapore, real and proof of concepts, for probably 10 years. We are licensed in Singapore. When I wanted to first start working on STOs, security token offerings, we now call them real world assets, RWA. I called the regulator and said, what do we need for this? I want to do these STOs. They said, is it a security? Yes, and said, follow your license, and hung up the phone. So the smart regulations around the world acknowledge that securities laws are not written in reference to paper. It doesn't say how you invest, advertise, or trade a security that's written on paper, these are the rules. It just says a security. So a token format is just a digital share. So how you're operating in these issuing and trading, there's already a framework for it. There has been some mad confusion around the world related to what I just said. So a lot of the markets around the world are very, regulators I thought from day one would always be very bullish security tokens because it brings more transparency. So they would want that, right? If you currently think about a regulator or a country, a jurisdiction that has, I don't know, 10,000 funds, if they're all issued on paper, they don't actually know at any particular second the exact makeup of all the shareholders and the directors, and there's things being sold and there's ESOPs being given, and it's all fluid. But in a tokenized world, whatever you saw that second would be instantaneous of the real representation of all the players in that ecosystem. So I think that's really happening now in Singapore, in Hong Kong. Last night, there was some new regulations, announcements. I haven't studied it yet because we've been nonstop, but that's all very pro. They've basically said we're positive, tokenized securities, and here's our thoughts on this. We're heading to Korea next week. Korea has finally become very bullish on this. We've had 25 people from the Korean securities regulators in our office in Singapore last month trying to work it out. Japan has solidified their rules between cryptocurrency and security tokens over the last period of time, which wasn't the case a couple of years ago. So all in all, Asia, I think, is super bullish. Thailand's trying to work it out. They've got some confusion between crypto and security tokens. But Asia, I think, is going to be one of the, larger dominating forces of the real-world asset space, because I think Asians in general are much more practical about making money and just getting things done. And we don't have a lot of the drama that you have in America and Europe politically and US dollar-wise. So Asia, yeah, super bullish. Now Hong Kong is fantastic.
Yeah.
All right, and then kind of taking into account that certain aspects that you mentioned are also valid for Europe. So like Switzerland has a technology neutral approach and it's also looking into security tokens already kind of back in time since 2019, 2018. So what's your take, Pat, kind of more from a Luxembourg Euro perspective and also considering the latest guidance?
Well, look, without sort of boring everybody on a Friday evening about regulation, what tends to happen is that one regulator moves and then another one moves. And then suddenly you arrive with a coalescing of regulatory patterns across the financial fabric. So if you look at the major financial centers across the globe, Hong Kong, Singapore, New York, London, the European hubs, now you're starting to see same in the Middle East. The outlier is the United States, right? It is the outlier because they have a negative view on anything that is crypto, right? You're seeing that, okay? In other jurisdictions, yesterday I read those circulars that came out. They are very clear about the pathway to deliver tokenized securities, right? And treating them as investment products. Okay, those two circulars came out yesterday. Luxembourg has been at the forefront of the European legislation. Luxembourg is one of the major centers for securitization in the world next to the Cayman Islands. You have, tens of thousands of funds there. You have a broad, flourishing ecosystem. What they did back in 2017 and 18 is took the securitization laws and built down extra laws that enshrined economic and legal rights for token holders, the same as a traditional investor in an SPV or fund. It might sound like a small law, but it has profound consequences. It means that you can actually issue in this jurisdiction, and you're doing it under MiFID II. already you have the fabric between regulatory jurisdictions where you can passport different financial products. So you can passport a financial product out of Europe, if it's MiFID II, into UAE. You can do that today. You can do the same thing here, right? But it comes back to that question, what risks does a regulator look at when you are providing a tokenized representation of that asset class? And it generally comes down to two things in my view. One, what is the operational and technology risk? Because that's the thing that's new, right? And thankfully that's, I think in the last few years, you're seeing a lot of great technology-led innovation there. And the other thing is investor protections, right? Because probably the fastest way to get a regulator in your business is to break AML laws. The second fastest way is to have liquidity mismatching going on. So the short answer to the regulatory position is it's happening. It happens slower than the technology adoption, but it is happening, and you will see this connective fabric between the major financial centers globally, Singapore, Hong Kong, Korea, London, the European cities, Middle East, and you're going to see a coalescing of this regulation so that you can passport these products in and out. I think that's going to happen, and you're going to see it really coalesce in the next 12 to 18 months.
If you are looking forward to this level playing field from a regulatory perspective, how would that play out kind of from a market perspective? So like just business opportunity wise, how big would you see like the business opportunity here, Julian?
Well, I think the first thing that happens when you have regulatory certainty, you have bigger players coming in, right? All the big banks, private banks, wealth managers, etc. It's sort of incumbent on the early adopters, the pioneers like our company and Julian's, to provide a really robust markets infrastructure that everybody can participate in. That's the critical bit. I think if you're going to set up sort of an island where your tokens can only be, your security tokens or your fund tokens can only exist in your little island, that's not going to scale. So you've got to somehow figure out how you got to make choices. You got to bet on, I think personally, you got to bet on public permission blockchains. Then what you've got to do is you got to bet on which financial products will be receptive in the market. And then the next thing you got to bet on is a jurisdiction where the regulatory guardrails are there so that you can safely conduct business.
And how do you see that, Julian?
I think regulatory competition is great. As soon as Hong Kong opened up last year, Singapore's at least crypto licenses started flowing after a very slow start. With the digital asset space, whichever type of asset is, it's now digital, it's online. So I think jurisdictions are going to be forced to compete like never before. On a product side, I think what's really exciting and the real goal of this whole tokenizing real world assets is, you want to see, for argument's sake, I don't know, I'm Australian real estate token. There's a bunch being launched in Hong Kong. There's a bunch being launched in Singapore, Europe. You now start to see the first time these kind of publicly launched assets, which has never been really possible before, because if you usually issue in America, you're an American company, you go on NASDAQ, and that's about the size of it. So I think the technology's already there. This becomes actually a business decision between the asset owners and the platforms, but it's totally possible. So this is exciting. I think this is where we start to see this global connectivity of assets and different jurisdictions, different rules. But then I think the solution to that is simply saying, if Hong Kong had XYZ rules, there's Class A tokens for Hong Kong investors. There's Class B tokens for Singapore, Class C for Europe. So this is all the stuff you can do with tokenization, which is amazing. So yeah, lots of exciting stuff. Good to see regulators jumping up and down when the guy next door does something interesting.
All right, so we span through a lot of topics in this panel. So we started with global wealth management, with digitization and the experience of tokenization and how this may democratize access to these potential new asset classes, and also how we have a fragmented regulatory reality at the moment. So with across countries and globally, we have a little bit different, sometimes some bit regulatory arbitrage which is possible. So may I just ask if you have like 20 seconds or so each. So what is kind of the main take-home message you would like to give to your audience for today? Something that they need to grab on and hold on strong.
Well, I think the realization is it's happening. It's happened so slowly that probably you don't realize it, right? And the driver is regulation. It is a driver that will change the adoption of these platforms and provide access to these hard-to-reach asset classes. I think that is the key message, just regulation. It's now starting to support it, and Julian's point is spot on. You now have a little bit of regulatory FOMO, and that's a good thing.
Yeah, I think everyone wanted to own Bitcoin when it was 8 cents, right? And those that went in early benefited dramatically. I think now we have this, the biggest opportunity in finance in a very long time. But the only way to really learn is to put some money, is to buy something. So you should go to platforms. Ideally, there's 2 or 3 here. Register, set up a wallet, buy something. If they charge in USDC or USDT, if you don't even know what that is, great reason to try. So you need to get your hands dirty, and you don't have to put a lot of money to work to make this happen. We've launched $1 security tokens on IXSwap, right? Everyone can buy, except Americans. So I think that one of our partners is American. So yeah, this is new technology marrying an existing marketplace. The opportunities are just immense. There's platforms to do it legally and compliantly. You can do it with very little money, and the only way to work out all this blockchain stuff is to get your hands dirty. So go and buy something.
So you got it. The things are happening right now, and try it out. And thank you so much, Pat and Julian, for your time and for nice discussion.
Thank you.
Thank you to the audience for being here. Thank you so much.
Thank you so much, Julian, Pat, Sylvan, for this ended the day on a really high note. We just need to get ourselves these wallets. Thank you. Thank you. Thanks. And thank you so much for all of you who stayed to listen to these speakers. It's been a real pleasure being your MC this afternoon, actually. I hope you've enjoyed some of the insights that was shared on this stage. And, there's still things going on. If you want to find out, get involved in some of the events in the evening times, check out the Hong Kong FinTech Week website. Under the Viva section, there's still all these night events happening. So, carry on with the party. Thank you so much.